All right. Good morning. Let me get a couple of things going here. All right. Got to get some audio. Let's see. Hi, Bruce. Good morning. Morning, Bruce. Morning. There you go. All right. So you can see the NQ, the NASDAQ futures are lower. Testing the early morning lows around 2. Okay. I'll be talking about remediating or taking a more defensive posture. Also, talking about some of the opportunities that are going to come up because we are down this morning. Okay, let me get, let's see. All right, let's see what these guys are talking about. 51.47 on the futures. Okay. Mic check, mic check. Mic check, mic check. All right, let's see.
Really, it's a very light a week for data as well, too. So I think the focus will be really what's going on in the equity markets and the other financial markets as well, too. But you're right here. One of the key numbers out this week is the ISM Services PMI that comes out later this morning as well, too. 51 expected there. That's up from 48.8. But as we saw from the ISM manufacturing there, which fell sharply as well, too, if this goes into contraction below 50 there, that just kind of feeds the market narrative here that the U.S. economy is definitely slowing and the Fed is really behind the curve here for cutting interest rates. Other than that, we got a U.S. trade balance on Tuesday there, and of course, jobless claims. We saw that also being effective here in this recent market sell-off here with the jobless claims running to near one-year highs as well. So keep an eye on that figure. Do we go above that 250 level there? Other than that, we have a couple Fed speakers here. We got San Francisco Fed Merrill Daly is speaking today. We got Richmond Fed Tom Barkin on Thursday as well too. So we want to hear what the Fed speakers are saying about this market reaction, just the overall appearance here that we're seeing slower growth as well too. And is there any kind of clues here that the Fed will be maybe a little more aggressive with their cuts there in September, or maybe even like some people are starting to talk about maybe a pre-meeting emergency cut as well too, though I think that may spark maybe a little bit more panic in the market there than actually doing anything really good.
Yep, Goolsby's out there talking right now. He's basically saying one number can't really move the needle for him, and he's typically relatively dovish also. All right, great stuff. Thanks to Mike Zaremski, Director of Futures at Charles Schwab. But now let's bring in the chart master, and that's going to be Ben Watson joining us live from Utah. Benny, we're taking a look at the NASDAQ 100, which is breaking through some key levels. We're in correction territory now, down about 10% from those all-time highs that we saw just a short time ago. Benny, what do you got for us?
Yeah, I'll tell you what, Tom. I mean, this has been a long-term uptrend, but this intermediate term, but swift downtrend is taking it to a new low. That low, however, if you look back, we look back to January 1st, April 15th, and now this low today, all three of those lows still making slightly higher lows. So you could make the argument that kind of that longer secular trend still intact, but boy, is it being threatened. And this head and shoulders reversal off that 7-11 high, that July 11th high, and it is just swooped to the downside. We even had that little kind of classic rally, retest, and fall over the last three sessions, really taking this down. Almost double what that head and shoulders pattern projected in terms of a measurement target. Now, that being said, a little bit of a longer tail on today's candle, so some buyers stepping in at this point. But MACD, RSI not yet reflecting that buying pressure. And I'll tell you what, if you take a look at that second chart that I've got, Tom, there is a lot of correlation here. I mean, better than 80% correlation to NVIDIA, but the NASDAQ pushing as a whole further and deeper to the downside than perhaps its biggest component, Tom.
Yeah, and I like that correlation, Ben, because we did a lot of that on the upside. The fact that these big components that are within the NASDAQ 100 are kind of reflective that, hey, you better watch those individual names because they matter to the NASDAQ, right?
Yeah, absolutely. And NVIDIA kind of led the dance a little bit here going into the reversal, but maybe leading the dance coming back out as it seems that it is stopping perhaps a bit short of the push to the downside that the overall NASDAQ 100 is seeing. So maybe a little bit of carryover, kind of that little bit of push further while the individual components maybe start to see some buyers stepping in here at this point, Tom.
Yeah, when you look at the RSI on that NASDAQ 100, Ben, getting under 28 level, anything under 30 on that relative strength index is considered oversold. But is there something in the markets that maybe we should wait a little bit just because of the fact that maybe margin calls and deleveraging might be taking place here that, hey, it could stay oversold for longer than you might think?
For sure. Just like it can stay overbought for a lot longer when there's a solid uptrend, if this downtrend continues to push to the downside, just because it's pushed down and ticked that lower reversal zone, if you will, that does not mean...
Just getting my chart set up. I'll be with you shortly.
Reverse off of that mark, and you could still see it keep pushing down to that, and we could see perhaps maybe a little bit of a bullish divergence if that RSI starts to lead to the upside.
I will be looking to buy some McDonald's on this dip.
That could also be an indication that maybe there's some buyers stepping in, like Scott was talking about earlier today, this morning, talking maybe a little bit about some of those buyers coming in at the cash market open here.
Yeah, and we got the on the Nasdaq futures that we've got here, 17,787 200-day moving average, Ben. But that's got to hold for a session or two, right? For that to confirm maybe if it breaks through, right?
Yeah, for sure. I mean, you know, the just the speed of these moves, Tom, would suggest perhaps a little bit of wait and see. Give it some time to settle out, and you know, I mean, there have been good points made. You know, Mike just suggested, hey, we're in a low volume environment. It's summertime. It's the middle of the August doldrums, and traders go on vacation too. And so low volume, low volatility can expand into high volatility really, really quickly.
All right, great breakdown of it on NASDAQ 100, which, as we mentioned, in correction territory at this point, thanks to Ben Watson. He's a chart master here on the network. That's our show for today, but stick around right here on the Schwab Network. Morning Trade Live is up next with Oliver Reddick. I'm sure he'll have some things to say about the sell-off here. Stick around.
All right, let's go take a look at the Nikkei. Wow. Nikkei's off quite a bit this morning. Again. All right. What I won't be doing is any new buying or selling at the open. I'm going to give it a few minutes as usual to, especially today, to assess the markets. What's the best line of action usually after something like this over multiple days is to just try to calm your emotions, rationalize your decisions, assess your decisions, plus or minus, and give it a little bit of time. Give it a little bit of time. Let's see. S&P. All right, keep in mind over here this red vertical line, that was 1987. What does that have to do with anything, Benny? The point is 1987, the markets will still rise. Okay, it took a couple of months after the October crash for the markets to settle down. About a year later, it was above those highs. Not saying it's going to take a year this time, but just keep it in reference. Keep a reference that the markets most likely will be higher in the intermediate to long term. Right now, we're having to deal with the Japan interest rate decision and how the markets are reacting. Okay. All right, so it looks like the SPY wants to hold this level. Okay, this is Nikkei. Okay, this is a Nikkei. Pretty big drop on the Nikkei. Well, CNBC is going to be very active, scaring people, because the only time they really tune into CNBC is when they're worried, for the most part. one of the ways to insulate your portfolios with bonds. Let's take a look at TLT. I wouldn't be buying at the open. All right, so here's TLT. You can see on the move. Let's look at the weekly time frame. All right, so you got an inverted head and shoulders on TLT. I wouldn't buy at the open because it's probably going to be much higher. Let me see what TLT is trading at right now. TLT. Yeah, TLT is up at 1.25%. I would wait for a dip, just like I would wait for the S&P. If you're going to trade the S&P at the open or near the open or pre-market, I'm looking for a bounce. What happens after the bounce will make a decision for us. If we bounce and fail early, might be an opportunity to take some puts. I got a feeling volatility is going to be very high, higher than it was on Friday. Let's look at the VIX. Okay. VIX hit 2980, I believe, something like that on Friday. Yeah, so TLT would be one thing I'd be watching. What's going on here? Stock charts. Okay, something's going on with stock charts. Okay, Bitcoin is off. My biggest concern was getting back on time and get ahead of the storm that's coming up the coast, that will come up the coast. We did take profits off over the last few weeks, reduced our risk. I do have a couple of in the money puts, credit spreads on IWM. Those are in January, so I'm not really worried about those. Tesla, I have August 16th puts that are in the money. So I'll close those for a loss, most likely. I think max loss was like $150 per contract. Okay, looks like SPY is going to start moving here. SPY. Let's see what we got going here. Okay, let me just do a calculation here. 783,000. 71. 71. 151. Okay, so I'm 90% cash. I just did a little calculation. 90% cash, technically 10.65% in the markets at the moment. Some of them are credit spreads, which I'll have to deal with. Tesla, I have a put credit spread, 195-200. That's in the money. So I'll have to close that for a loss at the open. Not the end of the world. It's not a big position. I have IWM 205-200, but that's January, so I'm sure there's going to be something of a bounce today. Let's take a look at IWM. Before I do that, let me just go here. I was going to look at a couple of things. All right, so if you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday the 5th. A lot of people are running around with their hair on fire. There's no need for that. You need to be calm in situations like this. You need to be calm. You need to assess your decisions. You don't want to put good money after bad. If you didn't take the hint over the last few weeks that we kept saying, reduce your risk, reduce your risk, reduce your risk, reduce the number of your open positions. And as some luck, I guess I could say, taking some things off before I was off on half day Thursday, Friday. Took a few more things off. TLT is one of the things I will be looking at as a possible place to put some cash. I'm 90% cash. I don't want to leave that all 90%. It's actually 89.4% cash. And that's across multiple accounts. That's the other thing. I have 6 accounts. So, the kids, myself, the wife, the trading account, the business account. So I don't need to be managing those, especially if Schwab throws up a curveball. I see that not Friday is the last day for Street Smart, so I'll be out. I'll be doing some things with positions this week, Wednesday, Thursday, closing short-term positions that might expire. I don't think I have anything that expires this week. No, I don't. Okay. I'll be looking for some opportunities. That is for sure. For certain, I will be looking for some possible trades to take. Okay. Let's see. Okay, SPXL is one. What is going on with stock charts today? Something happened? Let me see. Let me go here for now. Go back to the Nikkei. Okay, probably my count needs to be card updated or something. Okay, so that's probably what it is. I need to update my credit card stuff. All right, let me do that real quick. Check out TLT, AGG, Alpha Golf, AGG, the Barclays Aggregate Bond Fund. Check those out. Expiration. Yeah, that's what it was. Okay, so I needed to update my credit card details. Good. All right, so Nikkei looking for a bounce. Okay, let's look at the Japanese yen to Australian dollar. That's where the carry trade was really evident. Australian dollar. Okay, the Japanese yen to AUD, Australian dollar carry trade hit a high. Looking for this to retract a little bit. That would be an indication that we could see a bounce in the S&P and US indices, calm some nerves. So reacting at the open, if you didn't do anything, reacting at the open is not the wisest thing to do right now because we're probably going to get an opportunity. We'll probably have an opportunity once we open and we get the indices and all the data to fill in. We'll have a better view of what we're looking at. Here's the number of stocks above the 20-day. That's probably going to be much lower this morning, breaking this uptrend. Number of stocks above the 50-day also. I don't know that we're going to get down to 20%, but who the hell knows? So let's use a hypothetical. Let's go to the S&P. Let's say we are where are we? We're at 513, so we're down here. We're down in this zone, 513, 513, 513. All right, so we're right in this area at the moment. And we'll probably maybe put in a hammer. We'll be oversold on the S&P, RSI. Stochastics will likely turn back down or at least move sideways. MACD will still be heading lower. So we're at least a day or two away from a turn if we're looking for a turn. Watch the volume. So you can see that if you react too quickly, you're just guessing. All right, we need to see the data. We need to see what institutions are going to do. All right. So the only way that's going to happen is we give it a little bit of time. Okay, it's going to be painful maybe for some of you first off. It's going to be a little painful. But if the dust clears in a day or two or today, we'll be looking for opportunities to the long side. If we get a bounce and a quick failure, that'll be an area where we could look at maybe some TLT or bonds or maybe some puts. VIX is, where is VIX right now? VIX, let's take a look at VIX. VIX is currently trading up 135%. It's at 5507. Wow. Wow, that's I haven't seen that in a long time. Okay. My laughter is not anything other than nervous laughter. Nervous laughter. Because what I'd be looking to do is to short volatility. Okay, wow. Wow, 55. 55. We got to go out a ways for that. 55. Let's go. That was before COVID, right? Okay. Okay, so we hit 85 during COVID. And you can see that shorting that, giving yourself some time, a couple of months out, taking some shorts, a couple of months out, 3 or 4 months out, 6 months out, will more than likely be a good decision. VIX, looking to short volatility, short the VIX, not right this minute. Okay, so we got VXX. Okay, that's going to be higher. We also have, we'll also have the ratio between the front month and the 3-month futures. That ratio is going to be, I don't know, it's got to be like 1.5, something like that, sometime today. Let's go out a little ways. Do I have a longer term? I thought I did. All right, so let me just go out. Let me go VIX, VXV. Let me go monthly. Go out 10 years. Okay, so you can see that above 105 all the way up to 135. We were like 140, I believe, 140, 145 intraday in 2020, intraday. Let's say we hit somewhere around 150. So, a month later, 2 months later, we're off quite a bit. So I would say this is going to be a good indication of the level of fear, depending on how we open on the VIX. So I'd be looking perhaps to short some VIX. Okay. Or UVXY. Let's take a look at UVXY. UVXY. That's going to be up there. Okay, UVXY. Okay, so the last time we moved higher, we talked about UVXY when Russell was buying UVXY a few weeks ago, that we generally see about 2 to 3 weeks during the current uptrend, 2 or 3 weeks of pullback like we saw in April. So this spike is a little bit longer, and I would say shorting this is going to be a good thing. Shorting the volatility, not necessarily with UVXY, but okay, let me see what we got here. UVXY. UVXY. Let's see what the puts look like. Puts look like on UVXY. All right, they're pretty expensive for this Friday. So let's go give ourselves some time, like we just talked about. Let's say December. Okay. And a December, let's say a December 25 put. Those are 5, 6. Well, there's a dollar spread in those. So those will probably be wider. In the 20s, we've got about 40 cents spread. Actually, no, there's more than that. It's about 80 cents spread on the 20s. So maybe 25s. December. I'm looking at UVXY puts at some point. UVXY December puts. TLT. Okay, so if the bounce fails, I'll be looking at some puts. Okay. Okay, so 25 there. Okay, so okay, S&P 500 spider. All right, so we're already starting to get a little bit of bounce in the Nikkei. Okay. NQ futures. Okay, so we're double bottom for now. Pretty big candle so far. Best case scenario, don't do anything. All right. Yeah, that's a good idea. Bitcoin should work too. Okay, so that's a good point. Some of the Bitcoin, um, Bitcoin will show up. The fear will show up in some Bitcoin too. That should be higher 6 months from now. Okay, your window. If you're day trading, it's one thing, but if you're looking for longer term, I'd be waiting. Good morning. Good morning. Okay, pre-market we're right around 513, 513. Yeah, my biggest concern last night was just getting home getting home in one piece. You know, my family relies on me too much for anything to happen to me. I'm sure you can relate. Let's see. Okay, weekly 10 EMA. Okay, let's look at the S&P spiders. Spiders. Let's look at the weekly 10. I'm going to add the 20 on here too. Exponential moving average 20. Okay, we're at the 20. Oh, wow, we're about to open. Shoot. Sorry about that. We are open. Okay, my bad. Okay, Tesla. All right, let me get rid of Tesla. See if we can get some kind of bounce on Tesla. Okay, I got to take the put side off. Put side. Okay, Tesla. I'm trying to take Tesla off right here. Looking for a bounce. Okay, Tesla. I'm out. Tesla. Put spread for a loss. Okay, so I don't have anything else to worry about now. All right, so okay, let's see what we got bouncing here. Tesla, the call side is up good. So if you took you got a few minutes, you don't have to worry about anything for the first 30, 45 minutes, I'd say. Okay, let me get I didn't realize how quickly the market snuck up on me there. Wow, that's something. Okay, so opportunity. I would not be doing anything the first few minutes. It's very tempting to try to jump in and say, "Oh, the markets are down big, 200 points, whatever." But and buying the dip, you could give yourself some time. Let's take a look. This is a SPY weekly at the 20 EMA. Last thing you need to do is hold on to hope if you're down big. Hopefully, we get a nice little bounce to sell into strength. But you don't need to jump in anything just yet. Okay, Apple, big bounce on Apple. Apple, big bounce. Shorts covering. Okay, Apple with a bounce so far. Bitcoin has been off. It's at some support levels. Bitcoin. Okay, close. That's close. All right, Tesla, I'm out the call side. That was a gain. Tesla. Okay, what else? Let's see. Meta. Okay. Okay, Meta. Let's see if I can close that. Let's see. I'm up 60% on that. Okay. Meta. Yeah, I don't see that bouncing just yet. Okay, so NQ, just watching the NQ. NASDAQ. Not doing anything at the moment. Let's look at TLT. TLT, watch for a fade first. You don't want to buy it up here, gapped up. TLT is probably going to come back to earth. VIX. VIX futures. Okay, what about UVXY? I was thinking about that. UVXY. UVXY. So, okay, I'm going to take some puts on UVXY out in December probably. UVXY. All right, let me see what that looks like. Puts out in. All right, so December. UVXY. Yeah, they're pretty widespread. Wow, that's a big spread. Wow, that's $1.80 spread. Can't do anything up there. You could put in a limit order at the low and see what that does. UVXY. All right, let's look at VIX futures to see if they're as silly priced. Okay, that's got a pretty big spread too. All right, VIX is down quite a bit. VIX is down. Okay, NVIDIA, let's see what NVIDIA is doing. All right, NVIDIA is starting to bounce. Remember, the 115s were pretty active. See if those follow through. Okay. All right, so we got a lot of volume on NVIDIA. Yeah. Now, don't forget, there's lots of. No, there was no turbulence on the plane. I was expecting really bad turbulence, but the storm was well south of the flight path. We flew up to Georgia. We stopped in Atlanta. Man, I tell you what, I don't ever want to fly Delta again. That airport in Atlanta, who was the genius that put me arriving at gates, I think it was like C-135 or some ridiculous number. It was like literally a mile just to get to the tram to go to the B terminal. So my trip from Atlanta to Myrtle Beach was in B, and it took me, I would say, half an hour to get to from and the connecting flights were really very close together. Thankfully they delayed the flight to Myrtle Beach a half an hour, so that helped out a lot. But I still hustled, and I had like a 35-pound backpack on me. It all worked out, though. It all worked out. Yeah, Russell.
bad market when they're quiet and they can't defend themselves when they're a pitiful, helpless giant. So I sit here and I say, you know what? If I want to react to the story in the information, I should just do another job. I should just become a full-time watcher of Peacock. I don't know. You want to have some. You want to have some prudence out there. Some thought. There should be more thought involved. If you just want to join the rest.
Yeah, Russell, I was thinking about you yesterday. Focused on the positive. I always like to focus on the positive. Although the markets were lower, Russell was shorting the crap out of the markets with puts. So congrats to Russell. I believe you didn't hold anything. Okay, looking for Bitcoin to bounce. Meta looks good. IWM. Yeah, IWM. Mhm. Okay.
I said Kellanova shouldn't be up today. And, you know, we kind of talked about it. Yeah. That Kellanova was up incorrectly. That often means that some people may even have known about the deal. I don't know. First of all, the deal is not yet in any way completed, but there were reports over the weekend that I can confirm as well that Mars is certainly.
All right. So UVXY, watching VIX, NQ, watching the futures. Nothing there yet. Okay. So, okay, let me go look at the number of stocks above the 20-day and see what that's. I'm looking for opportunities on the long side. Okay, so we got a little drop there. All right. So number of stocks above the 20-day are reaching 30%, close to 30%. So we're getting to an area where you know what the strategy is. The strategy is I'm looking to take XPXL or some leveraged ETF. SPXL is down here to 115. Last time the number of stocks above the 50-day got to a decent low was down here in October, November. Okay, October, November, we had that reversal. So we're about 236 off that level. Let me just throw a Fibonacci on here real quick. There's no hurry. If you're anxious to do something, I would suggest slowing down because there's no need to hurry at this point. There's no need to hurry. What we want to do is rationalize any new positions. All right, so 382 would be right there at the 200-day. So that's an ideal place. That's an ideal place for this to take a break from this downtrend. So 382 would be a 200-day, the 200-day. Okay. We also, that previous dip right there in April, that's where we would be. Okay, I just look at that as a double top now. Look at that as a double top. Okay. 200-day. Okay, that's broken that uptrend. It's important to rationalize and to not trade out of fear. I know that might be difficult if you didn't take any risk off the table. I was 91% in cash. Excuse me, 89.8% in cash. I can't seem to log into TOS here. That's weird. Okay, looks like we're starting to move. Okay, so CONL. I'm going to buy some shares here. 26. Looks like we're starting to move here. 27, 27, 25. Okay. CONL. Okay, I'm going to limit any new trades. I just bought some CONL. Okay, I added to a position, which was the original idea too. I didn't want to do anything until we saw how far this was going to go. Right now, it looks like we could bounce. Okay, CONL, Coinbase. Looks like these could bounce. Also, Bitcoin, ETS, BITX. You know the institutionals will buy dips here. All right, that's a pretty decent dip there. Let's see, BITO, BITO. I don't have. Okay. I already sold my BITO. Okay, so BITO. Okay, yes, the spiders look like they're going to go here. Okay, so I don't know when I did this, but I bought August the 7th, 550 calls. We're not going to get anywhere near that, but I just happened to notice that out of the corner of my eye. Do we get a violent bounce? Do we get a violent bounce in the S&P? You could try it. Anybody having problems logging into Thinkorswim? I'm having difficulties. Okay, what's going on here? Okay, it's not letting me log in. Well, that's a hoot. That's a hoot. All right, so it's like 1987 all over again. You couldn't get a hold of your broker to close anything? That's why you always take profits off into strength. That's one of the reasons right there. So when you're in a panic situation, you're not dealing with panic. Okay, let's see what kind of calls we could get going here. All right, so I have to do a pseudo setup. Let's go to SPY. Let me do a pseudo setup. SPY, and let's go to the 2-minute. Okay, got squeezed there. No, we don't have a squeeze. Let's go to the 60. We got a very wide Bollinger Band. Okay, outside the lower band. So it looks like we're going to get going. SPY calls. Let's see, calls for this 0-day. Let's see how far we bounce. Let's see how far we bounce. Okay, the NQ is starting to bounce. Or are we getting some buyers? Getting some buyers to come in. Okay, if you bought Apple last week, supposedly Warren, I can't confirm it, but Warren sold half his position. That was his largest position. So selling half. Okay, we get a nice, decent bounce so far. A decent bounce so far. Unable to log in.
They're not bozos. They just make little money. And then you come in at between 10:45 and 11 when the European market's closed, and you get a good, maybe get a little schnitzel.
Cut its losses to below 3%. Nasdaq also now below 4% loss.
Well, this is cool.
Again, at the very open, we were down much more sharply.
Doesn't that
Not
tell
to
you
say that
that
those aren't significant
but
losses,
that's the
particularly given the performance last week. I mean,
right, that's the future. Now, let's take your Kellanova story, which was a paper book that I interrupted. What that says is maybe we have to rethink the negativity. You know, like Mondelez had a good quarter.
Okay, let's see.
It doesn't float like a butterfly. It does not sting like a bee.
it's a phantom boxer.
In a boxer.
Yeah, then you have
Here's my Class A speaker.
By the way, Jim, the one name I have up on my screen is J&J.
Well, that's
It's
again
not up much.
That is that's safety. The Brothers Johnson has always been a safe place to go.
Yes.
Even during the period of talent.
Yes. Brothers Johnson.
Well, it's
That makes me think of Woody.
no,
And that makes me think of the New York Jets.
Strawberry on. Okay.
And,
Hey,
and then
is
just
Riddick
get very
sitting up?
depressed. Say again?
I mean, did they check with Hassan Riddick before they got him?
I don't know.
Hey, Hassan, do you like us? No.
Yeah, we
I mean,
actually.
sometimes you want to ask.
I haven't mentioned Elon Musk at all, other than
Yeah, his
here's
stock is the only one in the Mag 7 that's down.
that stock is down another 5%. But again, well off the lows of the morning. He's suing OpenAI again. He was, and he wasn't. Now he is. Musk and the nonprofit's namesake Objective were betrayed by Sam Altman, he says, or I should say his lawyer's right, and his accomplices. The perfidy and deceit are of Shakespearean proportions. Yeah, listen.
Which one?
This is
Richard
when
III,
you're
right?
a lawyer,
Which is
you
he
get to write these things. Some of them,
Which of them are ready to say Shakespeare?
Musk and the
Is it the
nonprofit
tragedy? Is it the betrayal?
Mhm.
The people use Shakespeare and they have no idea who he is. They should brush up.
I always say brush up on your Shakespeare first and now. And the women, you will wow. He's suing him again. He's also, of course, because he's Musk, he's got to talk about the Fed needs to drop rates.
You know, you can buy.
He's talking about
Have you checked
he's liking posts about Buffett and how much cash Buffett has, and then he says Buffett's clearly expecting a correction, or otherwise simply cannot see better investments in Treasury. The Fed needs to drop rates. They have been foolish not to have done so already.
We have a wide-ranging view. Is the Olympics
There
covering?
is
Is he
rarely
covering
an issue that
the
Elon Musk would not feel free to weigh in on.
All right. NQ with the bounce. Okay, let's keep an eye on it. If it fails, remember looking at TLT, AGG, Barclays Aggregate Bond Fund. Let's take a look at those. AGG, Barclays Aggregate Bond Fund. Looking to short volatility. Short the UVXY or short the VIX, VXX. Okay, AGG. All right, I wouldn't buy up here, obviously. If we get some sort of failure and, the Nikkei can't manage a bounce, then maybe we'll buy some bonds, park some cash. But Nikkei, biggest drop in its history underway. Okay, that's just recently made new highs. What did it take? 35 years or whatever it was. So let me go out. Let's go out 30. I think it was 35 years, right? 35 years. Nikkei came all the way back, made a new high. 38.9 was the previous, back in the late 1989, 1990, early 1990. And we made it all the way back to that level 35 years later. Now we're pulling back. Big drop in the Nikkei. Okay. So let's go to 2 years. All right, that's a big drop. That's a big 3-day drop. That's like that's more than the 1987 crash. 1987, October 1987. I started trading in December 1987. The takeaway is that in 1987, you couldn't get through it to your broker. Right now, I can't seem to trade on Thinkorswim. Could get into Schwab. Could get into Schwab Street Smart earlier, so that's good. At least I'm not flying blind. Looking for an opportunity. I think Bitcoin's probably going to be a opportunity. Let's see, BITO, BITX as well. BITX. Probably going to be a bounce, maybe buy a little bit. If it drops a little more, consider whether or not you made the right decision. Stop underneath the low of the day. That's only about 10%. That's not too bad. If we continue to move higher and Bitcoin manages a bounce, you'll be a hero. For now, I'm just going to sit and wait, see what the opportunities are. Dexcom bouncing. Let's see what else looks good. I do see activity, though. Do see buyers showing up. Okay, IWM small caps will probably get some buyers. Let's see what the 10-year yield looks like. 10-year yield. Okay, 10-year yield at new lows. So that's helping. Imagine if we were at the highs, if the 10-year was up here at the highs and we had this pullback that we're seeing in IWM right now. Boy, that would be bad. But now that the 10-year is backed off, looks like the bond market is anticipating the Fed's going to cut sooner than later, at least. Let's look at junk bonds. Remember, junk bonds lead, okay? And we started to lose the 21-day, but we held. Now we're at the 50-day. Do we bounce here? That would be a good sign. Keep an eye on junk bonds. Write that down in your journal. Keep an eye on junk bonds. If we bounce at the 50-day, that might be an opportunity. Limit your new trades. Limit the new trades, okay? Keep your cash. I'm 89% cash. I didn't realize it was that much in cash, but I did take a few more positions off on Thursday into my trip to see Mom. I apologize for video difficulties. I couldn't get a video to work properly. The audio was some crackling sound. Could have been my headset. I don't know. But pretty simple, pretty straightforward on what we were thinking of doing anyway. So if the markets managed to bounce and started to fail, we're still looking for upside. If we continue to move higher, that'd be good. But if we fail and we roll over, then I'll be looking at some TLT, perhaps some cash, put something in TLT. I'm not really interested in buying 3-month CDs or anything like that, like we were back in September, October of last year.
Thank you. And of course, Bob will be standing by. We always need him. Bob Pisani. Yeah, this is very important. The VIX can't last. I do want to point out that Warren Buffett, the annual meeting one day, did say this is not going to make sense. He said, Apple, which is an even better business, we will own unless something really extraordinary happens. We will own Apple and American Express and Coca-Cola. So it is unusual that he did in May say that he was right, and then so a lot of stock. Now that said, it's for the largest position Apple is in Berkshire. But he did say that he doesn't touch American Express and Coca-Cola. It just looked like it was in the don't trust no.
Okay, so junk bonds, we're looking for a bounce there. All right, IWM starting to bounce. IWM looks like an opportunity. Okay, so IWM looks like a bounce underway. Lower interest rates are good for small caps. Their borrowing costs are much lower. So if IWM can manage a bounce here, that would be a good opportunity. You can put a stop under the 200-day. Okay, stop under the 200-day IWM. keep it light. If you're gonna buy a few positions today, if you're gonna put some cash to work, minimize it. Okay, so we had a historic drop. So okay, here goes SPY. Those calls are doing well. Okay, I bought some 0-day calls, 520s. $5.20. SPY bought I bought the 0-day 520 calls. SPY. All right, looking good. So far, so good. All right, so the SPY hopefully will help with the. All right, we're starting to go into the gap. We're about to go into the gap SPY. Okay, that looks good. S&P 500. S&P. Okay. S&P 500. Okay, going into the gap is what we're looking for. Let's go to the 5-minute. Okay. Wow, we got a lot of stuff down here. Got to clear that out. Okay, we're into the gap. S&P is into the gap. Okay, so what we're looking for is either a follow through, buyers, look at the volume, shorts covering. Looking for either a follow through or a failure somewhere in here. All right, so far so good. Okay, resistance, S&P 500. Resistance levels on the S&P 500, we got 5250, 5300. Okay. On the Qs, we got resistance 450, 460, and IWM support 200, resistance 210. Watching those levels. Nice little follow through so far, pushing higher. IWM looking for a bounce. Currently have some January call credits. Put credits, 205, 200. So I need to see prices get back above 205 in the next few months. All right, just looking for bounces. Let's see all right, big bounce in the Coinbase. Big bounce in Coinbase so far. Okay, Coinbase much higher. Okay, so it looks like risk on as far as Coinbase and Bitcoin are concerned. All right, Bitcoin starting to move as well. Coinbase risk on. Looks like buyers. Okay, let me see what BITX looks like. BITX. Maybe buy a few hundred shares of that. It's already got a nice bounce. We're still off 28%. Okay.
for the value of the U.S. dollar, which means, again, I've quoted directly, meaning that we are looking at how much the yen versus the dollar could buy. So the higher
Okay, so far so good.
it's been a regime of stronger dollars and weaker yen.
Chipotle, nice bounce on Chipotle.
Just the last couple of weeks,
Meta, nice bounce on Meta. I have end of the month call credit spreads on Meta. All right. All right. So Coinbase, nice little bounce so far.
and moves by the Bank of Japan to intervene in markets earlier this year to prop up the value of the currency have led to that big drop in the value of the dollar and strengthen the yen.
Okay, Nvidia, looking for that follow through. Wow, nice trade there, Scott. Yeah.
Weakness in computer chip stocks helped propel the Taiwan weighted index lower by over 8%. You can kind of see here 8.5%. And then also the Singapore Straits Time index falling by about 4%. If you want to believe this, the relative outperformer was actually the Shanghai Composite in mainland China, which only fell by about 1.5%. But Melissa, overall, it has
Okay. So far, so good. Nice little bounce underway. SPY looking for a follow through. Okay, try again for Thinkorswim. Can't get into Thinkorswim. Remember, we're looking for a bounce that fails for any bond exposure. Looking for bonds to come back down a little bit. Coinbase starting to fade a bit. So it looks like shorts covering initially. Let's see if we get any kind of follow through in the markets. That's probably going to come over the next hour or so. So if we get any kind of follow through on the bounce, we'll see higher highs and higher lows. Otherwise, we'll just fail. So far, well, let's see what TLT is doing. TLT. All right. So that's why you don't want to buy the highs. Looking for TLT to back off the highs. Okay. Come back down to somewhere around 95, 96. I'd be interested if the markets show more weakness, especially the Nikkei. If the Nikkei shows more weakness.
Interesting you say that, Melissa, because here's what he said when I asked him about the possibility of an emergency rate cut, which would come between meetings.
The Fed's job is very straightforward. Maximize employment, stabilize prices, and maintain financial stability. That's what we're going to do. We're forward-looking about it. And so if the conditions collectively start coming in that on the through line, there's deterioration on any of those parts, we're going to fix it.
Didn't say there would be one, didn't say there wouldn't be one. Markets are trading with something like a 1 in 3 chance plus or minus of an intermeeting cut. But they've priced in definitively a very aggressive path for the Federal Reserve.
All right. So initially, we got a nice little bounce, short covering. Let's see if we can get a follow through. Still early. You got TLT pulling back bonds. People are looking to or have been putting money, cash into bonds. Okay, looking for a further fade on the bonds. Okay, let's take a look at the equal weight index again. I'm interested in these two data points. Number of stocks above the 20-day. Okay, so we're at 30, about 35% right now. The number of stocks above the 20-day is about 35%. Number of stocks above the 50-day, about 46%. So we're at the midpoint. Okay, do we get a little bit further lower? If we do, I'm looking at some possibilities like SPXL, okay, the 3 times S&P bull shares. I'm looking for that as a potential bounce. It's at the 200-day. Okay, so looking for follow through. Not doing a whole lot, just measured approach to the markets, looking for higher highs and higher lows.
I'm sure I don't know how you feel about the possibility of it, though I could guess. But if it were to happen, to say,
Okay, go back to IWM. Let's see, IWM. Okay, we're at 200 IWM.
Any further data, it would be seen negatively. And I think that's an important qualification, David, because look, the market sees pretty much what the Fed sees. They don't come to the same conclusion, but they see pretty much the same data. I do not see the data that would
CMG bouncing a bit more. CMG is still off $1.40, but bouncing. All right, so let's take a look at some of the indications that we were looking for to trade. All right, XLP. All right, so no follow through on the defensive trade. That's pretty interesting. XLV. No follow through on the defensive trade. XLV. XLU. Interest sensitive as well. No follow through at this point. We just got profit taking. So it looks like people, investors, smart money, are just doing what we're doing, which is to watch the markets, see if there's any more weakness. Do we roll over? Is this a bear flag on the SPY? But the defensive sectors aren't doing much. Let's look at materials, XLB, gap down, communications, XLC, gapping down. Markets are pretty weak. Markets are weak. Okay, XLC, XLE energy, gapping down. Brent crude, of course, was lower. Brent crude lower. Interest rates, the 10-year lower. Okay, so that's XLE. XLF financials, gapping down. Hammer, though, potential hammer at near-term support. Okay, there might be some opportunities in JP Morgan. I don't think there's going to be a big rush to do anything, folks. We got shorts covering. You got JP Morgan with a hammer back down to the June low. And we finding buyers in between the 50 and the 200 days, probably the 100 days right there. Okay, let's look at the S&P. S&P. Okay, S&P. We lost the 100 day. The 200 day is right there. Is it possible we get down to the 200 day before we find significant buying activity? That's possible. So you want to keep your cash. I'm about 89% cash. I'm about 89% cash. We're just taking profits off into strength, reducing exposure. In the previous few weeks, there was no real sell signal per se. It was just the fact that we're going into August. August tends to be a good month for IWM small caps, so we're watching for that. Tom Lee called it from Wednesday of last week, 5-day rally. That didn't happen. So Tom Lee, first time Tom Lee hasn't been correct in his call. Thinkorswim. Yeah, can I get in that Thinkorswim? How funny is it that it's not funny? I'm being sarcastic. How funny is it that these platforms can't open to let people do anything? Okay, I've gotten to the password screen. Let's see. Did they reboot? Looks like they rebooted. All right, so I'm about ready to get my security code in there. Okay, so let me do that. Let me see if I can get this up and running. Okay, looks like I'm in. Looks like I'm in Thinkorswim finally. Thinkorswim finally got in. Okay. Looking for higher lows on the SPY. SPY, SPX, IWM, QQQ. Looking for higher lows.
Well, thanks so much for having us. I think what's going on in the market right now is a microcosm to what's going on in society. We want to react first, just kind of fire aim ready. And I think about the talking heads when they used to say, same as it ever was, same as it ever was. So I have the very good fortune of doing this business for a long time. It's my 35th year. And I remember
Looking for higher lows for now. Okay. Looking for higher lows.
when Iraq invaded Kuwait, and my boss at the time, William O'Neill, thought we were going into recession.
IWM,
The market was rallying again. You would
TLT, pulling back further. All right. You don't want to chase TLT up here. Give yourself a better entry level. Many people were buying into TLT when they saw what was going on with the yen carry trade, the yen Aussie dollar forex pair. Okay, so
Now, we said 9 months ago in our report for 2024 that the average correction during the second year before market.
okay, so this is seeing a significant pullback so far. Okay, so here's the Japanese yen. All right, so the carry trade has been on the move over the last couple of weeks. It only started to rear its head the last 4 trading days. So this is starting to reverse. This is a good sign. Okay. JPY, PY, AUD starting to fade. Okay, so I finally got back into Thinkorswim. Okay. Okay, starting to fade.
Positioning standpoint, our theme has been own a little bit of everything this year, meaning we've been provided a gift of this oversold nature for the last 10 years of small mid-cap stocks. I think from a fundamental perspective, they're the best position assets for the next 10 years. Value stocks again, and own some what we like to call the consumer staples tech. You've been provided a gift here the last couple of days in terms of your Amazons, Apples, Googles, Microsoft's Apple. You absolutely positively have to have exposure to these names. Now, these names obviously got too cocky on the upside with respect to their valuations, and now they've been humbled. Everybody needs a little humility in their life, and we've seen that in these names. We believe that it's short-term and reactionary to be chasing consumer staples and utilities now, because especially consumer staples, David, these are very, very expensive names. If you do a relative peg ratio compared to technology, they're not earning on an absolute basis what technology is. So let's take a step back. Christmas comes early, and Christmas is today, and we should be positioning accordingly.
Yeah, looking for higher lows, higher highs. All right, watching the Aussie dollar, Japanese yen pair, watching these two. If we get a further fade here, that would be a good indication for the spiders. Okay, AMD with a bounce. Okay, cool. All right, so we've got Brian Belsky talking, rational ideas. Okay, I like Brian. He's an IBD. William O'Neill, scholar. He was doing his research through IBD 35 years ago. Watching Bitcoin for a follow through. Bitcoin. All right, so Bitcoin for the follow through on the bounce. Bitcoin. Looking for a follow through. Okay, I wouldn't put a lot of money to work initially. I would just watch the markets. We could afford to wait a couple of days. I mean, if you want to put your toes in the water, maybe you buy some. I would only buy options. That way, I have defined risk and know exactly how much I can lose. Maybe do some vertical spreads. That way, you can reduce your risk even further, have some exposure, but have limited upside as well. The Japanese yen, Aussie dollar, though, we got to keep an eye on that. Okay, we got to keep an eye on the Aussie Japanese yen pair. Okay, starting to bounce a little bit there. TLT fading down to some support. TLT fading down to some support. I don't expect any big moves that we're going to be able to trade just yet. I'd like to see how the markets flesh out over the next hour, hour and a half into 11 o'clock, especially. Okay, so it looks like we could see more bounce. Bouncing Betty. Whenever you get pullbacks like this, I've learned since the 87 crash, I had no exposure in the 87 crash. It was only after the December that I started buying some IBM at the behest of my broker at the time, Shearson Lehman. And one thing I did learn is that the markets over time will move higher. We're watching the S&P 0-day. 0-day is coming off the lower bands, but still looks like a bear flag. We could still roll over. So temper your appetite, because we got 40, 50 to 1 down on the NYSE. Qs are 22 down. SPY is 30 down. Oh, wow. The diamonds, the Dow Industrials are down 92 to 1. I don't know if that's correct. 54. There's only so much I can trust on these indicators right now. But down volume is definitely leading, so there's still a lot of people scared. A lot of scared people still. Okay. Watching TLT for any kind of correlated bounce. If the S&P, the spiders start to roll over, the S&P starts to roll over. Watch for a bounce in TLT. Okay, I'm going to take a couple of minute break. I'm not going anywhere. I'll be right here with you. I just got to grab something real quick, and I'll be right back.
So I do think that the market's still ahead of itself. If I'm projecting the 50%, I feel like the market's projecting a full 5G type upgrade cycle, and that may not happen.
At the same time, Tom, relative to other big cap tech stocks, particularly the Mag 7, is Apple, in your view, the most defensive? I mean, it may just be the cash cycle. It may just be, the services revenues. I don't know. That's the way it's
From
being
a
treated,
balance
at
sheet
least this
standpoint,
pullback.
Yeah, from a balance sheet standpoint, it clearly is the most defensive. So Apple has the ability, still generates $100 billion in free cash flow to continue to buy back shares, irregardless of what Warren's doing. And yeah, they're easily the most defensive name in the Mag 7.
You mentioned the multiple. I mean, does that give you pause at this point?
Yes. So when you look at Apple, they just came off 5 consecutive quarters of declining revenue growth. If you unpack their guidance for the September quarter, they're projecting iPhone revenue growth for the first time in a while. And the market is still valuing.
Expect volatility. So although we are watching a bear flag on the spiders, expect volatility.
Nice to speak with you. Thank you, Tom Forte.
Thank you.
Looking for
All right, let's keep an eye
some
on
clear
it.
direction.
They've been dropping
Okay, here's the
alongside
SPY.
stocks this morning, adding to a now double-digit fall.
Okay, we got some resistance right there. You can see that supply right overhead, that
The action in
red
We're also still
shaded
waiting,
area.
so to speak, for
And the level above that,
response,
523.
and potential attack on Israel. One would expect in some ways that would be having an effect on oil prices different than the one we're seeing in the marketplace.
Yes and no, David. I agree with you. It's keeping a bid under the market. I mean, look at oil prices compared to everything else. You're talking about the Kospi in Korea being down 7%, Japan, worst day since this, Textoc, whatever. Oil's holding up reasonably well. I mean, it's down a little bit. We're down about 12% now in a month, but down about 1% on a day like today. And David, I know you're an optimistic guy, and you had Belsky on, and we're just going to bounce from sort of optimistic Brian to optimistic Brian. How about that? If there is a recession, nobody is telling American drivers. According to Gas Buddy, we are seeing the highest gasoline use in America this year. Gasoline demand is not only up week over week, it's up month over month, and a new high for 2024. So if you're in the we're soon to go into recession camp, I'm not sure high gasoline demand would necessarily, David, be up there on my recessionary signals bingo card, unless you think people are driving because they can't afford to fly. But we know that the airports are also pretty crowded, or at least they were, David.
So where do we go from here, I guess, Brian? What are you hearing? What are your thoughts when it comes to all the people you speak to, obviously, about the movements in this market?
I was going to ask you the same thing because you're talking to many of the same people, David. Listen, here's the thing. Does OPEC react? You guys were talking about this intra-Fed meeting potential rate cut possibility. Could there be an intra-OPEC meeting rate cut possibility? The next time they are scheduled to meet virtually is at the beginning of October. The next quote-unquote, I'm doing air quotes if you're listening on the radio, big meeting is the in-person meeting scheduled for December 1st and 2nd in Vienna. That's where if there was a move, a big policy shift, that we could see that. So could OPEC, listen, they can do what they want. I mean, they can do, just like the Federal Reserve, David, they can make a change anytime they want. And if they start to see telling signals that maybe demand is starting to tumble globally in China, wherever it might be here in the US and Europe, no signs yet. But if they do, they could make that move. Remember, if you do the OPEC math, they're already cutting 5.8 million barrels a day, roughly. You've got the OPEC plus cuts. Then you've got voluntary additional cuts from Saudi Arabia. All this, of course, as we've talked about, you've talked about, David, that U.S. oil production is at 13.3. Listen, I think the things to keep an eye on for the near term, U.S. rig counts, we talk about them all the time. We don't. Let's keep an eye on rig counts. They start to tumble. That might tell you that the American oil complex is anticipating a potential
Low
slowdown.
tick alert
And I know
minus
just the
800.
person who has some time now to look at those rig counts.
You can count every rig, maybe, Brian. In terms of the levels on Brent to watch that might trigger some sort of meeting move at the next meeting, what would that be? Because right now we're at 76. It looks like back in December we were 74-ish or so. And I'm just wondering if there are any significant levels that you think, you know what, OPEC might be looking here to make some sort of change.
This is, dang it, Melissa, you and your stats and facts, you bring in like actual data to the party. It's
Just reading a chart, Brian, just looking at the chart.
I know. And the chart is not horrible. It's not great. It's not as good as it was if you're, an oil long back in April at $88, but your point is well taken. We are at 76. We are not at 46. We are not at 56. We are not at
Extreme low,
-6
tick
like a
alert.
couple of years ago. Brent crude, and I'll give OPEC a little bit of a compliment here, even though a lot of people have strong opinions. The reality is the oil market has been fairly steady in price. Yeah, we swing $5 to $10 a barrel, but for the last couple of years, the reason we haven't been screaming about OPEC or everything's been sort of whatever is because it's been kind of a quieter time. The management of that price level has been, and any, listen, you guys both talk to CEOs of oil companies or companies that use a lot of them. They'll all tell you they'd have lower prices than higher prices, but they'd rather have stable prices than even slightly lower prices. If prices are fluctuating $20, $30 a barrel every year, as a CEO or a CFO, it's darn hard to plan your cost basis for anything on that. So, Melissa, your point is well taken. Prices lower, but not low enough yet for some major change in policy. Best guess, but my initials are BS, so you never know.
Noted. Brian, always good to see you. Thank you. Brian Sullivan.
Thanks.
Quick check on the markets here. Stocks continuing their sell-off this morning, but off the lows of this morning. The Dow is down 2.8%, S&P down by 3.4%, and the Nasdaq down by more than 4%. Bob Pisani is here with us at Post 9 for more on what we are watching.
And we go off the lows,
Yes.
51.19 right at the open.
All right, keep an eye on the Japanese yen, Australian dollar pair. You need this to fade a bit.
I don't know where the economy is going, and you both know there's not necessarily a relationship between GDP and earnings growth, but generally 2% GDP, 6 to 10% earnings growth, that's a good rule of thumb to use. And the problem is we don't know where that GDP number is right now. There's high expectations, folks, for earnings, and the multiple is really high right now. Take a look at this here. This is a 2025 estimates for the S&P 500. Basically, we're expecting earnings gains of 15%. Is that a little lot? That's a lot. That's a very high expectations. A lot of it's in tech, of course, but generally work on 6 to 10% is a normal year. So this is very much at risk right now. That is not a recessionary earnings increase at all that we're seeing. The other problem is the valuations, the multiple, the PE ratio here. We are now looking at 19 times forward estimates on the S&P 500. That is not only, that is an expansionary multiple, not a recessionary multiple. So we have two problems here. So here's what everybody's doing, playing with how much earnings growth is going to be and what the multiple might be. And again, where's the GDP? If it's 2%, we're in better shape. If it's 0 or negative, we're in worse shape. So here's the current situation, 15% earnings growth. The PE is 19. That's how you get to S&P 5,300. That's where we were on Friday. Okay, let's change this a little. Let's lower the growth. Instead of 15%, let's do 10% earnings growth at the same multiple, 19 PE. That would assume the economy is in good shape. There's a soft landing. The S&P is 50.89. There's an estimate. That's not far from where we are now. Okay, let's play with other numbers. Let's lower the growth and let's lower the multiple. Instead of 19, let's go to 17. So 10% earnings growth, 17 PE. The S&P is at 45.54. Now let's be bearish. Okay, let's say we're only going to get 5% earnings growth. That's optimistic, assuming tech's going to be good. But a 15 multiple, 13 to 15 is a recessionary multiple. That's normal numbers for a recession. There you go. S&P 38.35. And let's remember, and here's the VIX, by the way. You see how strange it is to see this at 43? The VIX is in backwardation like this. Melissa, you're an expert on this. That is a very unusual situation and often associated with short-term market bottoms.
Right.
So all I want to say is, remember 2022, remember October, you were all over this. We were all convinced there was going to be a recession. The multiple went to 15 to 16. It just collapsed because everyone assumed, well, that's where we have to go because we're in a recession. They were all wrong. At that time, the numbers were wrong. And all I'm saying is people seem to be talking themselves into some idea of a recession here. 2 years ago, we were doing this as well, and it was wrong then. They crushed the multiple. Now they're trying to crush the multiple again, and they may be wrong again.
I don't want to be a defender of PEs here, but if we are talking about an economy that is changed by AI, which we talk about every
Right.
single day, then the PE should inherently be higher.
Yes, and there is an argument to be made that PE multiples should be higher
Yes.
long term. I mean, German Siegel's been making this argument for years that this is not your grandfather's PE multiple, the same as 20 years ago. That more efficiencies in operating has improved overall margins and earnings. But that's a philosophical thing at this point. I don't think the laws of gravity have been completely repealed. A recessionary multiple is way below the current
Where we are
multiple
now.
under any circumstances. You can argue, okay, it shouldn't be 13, it should be 15 or whatever it could be. But I don't think the laws of gravity have been repealed. Multiples matter, earnings estimates matter, and maybe historically they're a little higher than they were 20 years ago. But we are in a very optimistic scenario right now for the market, and that's what people are concerned about. Maybe the numbers are wrong.
Near term, market wise, what are you focused on in terms of at least something you think would be more of a tell?
Well, the important thing is I still watch this backwardation in the VIX here. That is, we were up this morning, 55 on the VIX and 33 on the front month contract, August, and then it goes down. Normally, going into the election, the numbers were way higher. The thing just collapsed all of a sudden. To me, that is so extraordinary.
Hey,
So look at
Lucy,
this,
good morning.
it was 55. The cash was right around 55. That is so extraordinary, strange, the difference in that in the few times I've seen something that extreme, usually things change within a few days. That's just short term. That's what
To be clear, all I'm doing right now is watching the Aussie yen pair. Okay, the Forex pair. We want to see this move lower. Currently on the screen, Japanese yen to the Aussie dollar. the carry trade. We want to see this move lower.
On what data, and then what do they see that we don't know, and everybody panics.
What are we seeing that we? I mean, we're seeing the markets are
What
seeing
they
something now,
seeing
right?
we don't know?
Right.
Yeah.
Maybe they're acknowledging that the markets are right.
There may be, I still think that, look, 114,000 jobs, 4.3% unemployment, that isn't anywhere close to recessionary
No,
numbers,
no.
not even remotely close to them.
And they're hurricane
we're
effects
talking
too in this
ourselves in
data.
some situation that does not exist yet. And we did this in 2022. The market was down 18%, and they were all wrong in 2022.
There was a lot of economists that thought we were headed into a
All
recession.
wrong. It makes you very humble about prognostication when you see what happens in that.
Terrible business.
Yeah.
Glad we don't have to do that.
Exactly.
Thank you, Bob Pisani. We're going to take a quick break here as the markets continue in sell-off mode, although off the worst levels of the morning. The Dow down 2.5%, S&P down by more than 3. Back in 3.
All right, just Bitcoin is looking pretty good, coming off the lows. An opportunity, perhaps, to buy some there. Looking for a follow through. Okay, looking good. Watching for a higher high on the spiders. Expecting lots of volatility. There's still, I'm sure, lots of people out there looking to sell. Watch the Japanese yen, Aussie dollar. We're watching that on the screen right now. We want to see that move lower if you're bullish equities for a bounce. Okay, everybody's got something to say about the markets right now. Okay, I'm just watching what the markets are doing. Okay. Man, Schwab is screwing up big time, eh? A lot of people talking about jumping ship. Okay, let's see. Let me get a... Oh boy, hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a follow-through day on the gap down, looking for a bounce, looking for shorts to cover more, maybe some buyers to come in for a couple of days. More importantly, watching the Japanese yen Aussie dollar pair on the screen currently. That's a 30-minute chart. So I'm watching prices, looking for it to dip further. That would help us on the long side on the indices. Currently not doing a whole lot. I'm about 89% cash, closer to 89% cash. Was 90% cash coming into the open across multiple accounts. I'm only trading on one account at the moment. I'm not in a hurry to do anything long term. Speaking of long term, let's go take a look at the S&P 500. Leveraged positions, SPXL. We're right on the 200-day. SPXL, the 3 times bull shares, SPXL. All right, this could still fail more. All right, so you got the 9 and 21 day crossing over through the 50. So by no means do I think that this is going to V-shape right back up to the highs. But intraday, we have some more short covering. Maybe some people trying to capture some upside short term. Got 3 days of above average volume. On the sell side, all right, back to SPY. Okay, and the Japanese yen Australian dollar pair. Okay, watching that.
Welcome back to Squawk on the Street. I'm Bertha Coombs with your CNBC News update. Iran says it is not looking to escalate tensions in the Middle East, but warned that it will punish Israel following the killing of a Hamas political leader in Tehran last week. Iranian officials said today retaliation would be necessary to deter Israel from future killings. Israel still has not claimed responsibility for the assassination. The Prime Minister of Bangladesh resigned and left the country one day after nearly 100 people were killed in clashes during protests demanding that she step down. The country's army chief says Bangladesh will now form an interim government. At least 300 people have been killed in Bangladesh in recent weeks as part of mass movements against the Prime Minister's And Hurricane Debbie made landfall today in Florida's Big Bend region on the Gulf Coast.
Yeah, I was surprised. I was a little concerned that I wouldn't be able to get back here on time, but we were north of the storm, so it wasn't that bad.
Georgia and the Carolinas through Friday and cause potential catastrophic flooding. It's also expected to bring storm surges along the coast of up to 10 feet. We've had some wicked weather this summer, David.
It was sunny by my mom's place.
Look at the broader markets and this sell-off. Of course, as we pointed out any number of times in the last half hour, we're well off the initial lows. That said, turn on the TV, you see we're still down 3% in the S&P and 3.5% on the Nasdaq. It's not a good day. Also, continue to get reports of any number of retail trading sites that are.
It's so. I mean, it can't be a coincidence that Schwab and other sites are unable to trade on it.
The 2-year, 10-year yield curve spread briefly turned positive for the first time since July 2022. Yields obviously bouncing a bit as well. We got the ISM services number. Our next guest says the Fed should have begun cutting rates months ago. And odds are the Fed will stick to a 25 basis point cut in September, but they should be more aggressive and cut by 50 basis points.
Kind of sucks, though. Definitely sucks if you were trying to get out. Actually, you know what? I can't speak for everyone, but calming the nerves first 30, 45 minutes, not a bad idea. First hour of the trading day is past. The markets just settled down. Doesn't seem like a lot of selling today. That probably occurred already. But block trades, it's about average. No really large blocks that I can see. Cooler heads prevail.
But at this point, the script doesn't say, cut intervening. But when they get to September, it does feel like they should be cutting much more aggressively. And, the other thing they could do and probably should do is signaling through speeches and press interviews and everything else that they are ready to cut and they're going to cut and they'll do whatever's necessary to make sure the economy stays out of recession. But an intermediate cut, that I think they'll save that if something really goes off the rails.
Yeah, well, why don't you tell people again why you believe 50 basis points is more appropriate and why you have been calling for rate cuts previously?
Well, they hit their mandate, their target. Their full employment and non-fuel inflation is back to target, appropriately measured. And even by their measure, we're back to target. And you can even argue with that 4.3% unemployment rate we saw on Friday that we've blown through full employment. My estimate of unemployment is something in the high threes, not 4.3. All the trend lines suggest unemployment is going to continue to rise. So if they've hit their mandate, and then you got to ask yourself why, if that's the case, a 5.5% funds rate target. There's a lot of reasonable debate as to what the so-called equilibrium rate, that rate which is consistent with policy neither supporting or restraining growth. So I get that, and it's probably a lot higher than it has been historically for a bunch of reasons. But it's not 5.5% or even anywhere close. So they got to get the rate down to something closer to equilibrium, and that means 50 basis point cut in September, another cut maybe.
Okay. Yeah, looking good.
They got to get it down to around 4%.
BITX, BITO, those are working. BITX. Let's take a look at Bitcoin. Bitcoin is a risk on, risk off asset. All right, so if we see risk on, we're going to see the price action move back above. This is a 60-minute chart. Actually, it's a 30-minute. Let me go to the 60-minute. 60-minute, we want to see price action above the 20 EMA. All right, we're trying to move above the 20 EMA. So I would say in the next couple of hours, we'll get a better read. If we stay above that green line and the green line turns up and price can resuscitate, maybe we get back, take back some of these losses over the last few days. All right, so measured approach. Don't throw everything at the markets hoping for the best. If you're down a little bit, don't exacerbate the situation by creating more problems for yourself. Maybe you take 1 or 2%. Maybe I like the idea of trading options. Okay, so I know my risk is the maximum that I pay for those options, or 25, 30% loss if I take those options. The maximum loss, I know what is. the cost of the options. But, I'd give myself 25, 30% stop if things don't work out. I don't want to buy a whole bunch of shares right now until I can see the markets. The markets are not going to bounce in one day and just reverse. I don't think that's going to be the case. We're keeping an eye on Japanese yen Aussie pair. Okay. That's still fading. Okay, so we want to see this fade. Okay, 1 minute's bouncing a bit. Whoops, don't want that. 15-minute. Okay, let's see if this rolls over. We want this to roll over. That would be good for the S&P.
NVIDIA, Intel, Bath and Body Works, Warner Brothers Discovery all suffering some pretty steep losses here, ranging between 8 and 6%. Our caller Quintanilla has a look, meantime, at what's still ahead on the show.
Small caps trying to bounce.
The Paris Olympic Games kicks off today after a big weekend of competition here in the Champs-Elysees. What's really striking is just how well integrated the games are with the city. You're not that far from the event, and yet you're already obviously on one of the most beautiful streets in the world. Squawk on the Street continues from Paris.
A lot of backlash on that opening ceremony, though. I don't know what they were thinking. The Catholic Church, all Christian churches, man. Anyway, hope everyone's having a decent morning. I know it's a down day for many. Try to keep your wits about you. I just want to show you something real quick, okay? Keep in mind, this is a long game, okay? This is not a short game. This is a long game. So this is when I started trading back in 1987, okay? 1987, that vertical line, right after the 87 crash into 88, okay? Multiples came back in. That green line dropping below the red line, that's multiples contracting. And you can see that the red arrow, that's the S&P. That's the S&P 500 back in 1987. Due to the chart ratio, of course, this is pretty muted over here on the left in the 90s. But the point is that the markets will continue higher over time. All right, so I'm not sure how far we're going at the moment. I don't think anybody does. All we can do is watch the flow of money. Right now, we've got a big change in direction in the Japanese yen, Australian dollar carry trade over the last week or two, especially the last couple of days. The Nikkei has dropped quite a bit from its highs. Okay, that's a remarkable drop. That's all due to interest rate decisions over in Japan. So, made it all the way back to the 1990 highs.
Welcome back to Squawk on the Street, live from the Summer Olympic Games here in Paris. We're keeping our eye on the markets.
Okay, so we had these highs over here in late 1989, 1990. The Nikkei peaked at 38,900 and change. And it, for the following 35 years, just did nothing. Started to bottom in 2012, made higher lows, higher highs. The point is that we got back above those highs from 1990, and now we're pulling back. Some of the ugliest price action on the Nikkei ever in a short amount of time. So we're watching how the markets react over the next few days, presenting some opportunities, but I certainly wouldn't jump in feet first and start buying a whole bunch of things because you could be wrong. We could all be wrong, and the markets move lower. It could also move higher. So I would like to be investing in options at the moment, investing my time in options instead of putting a whole a bunch of money in shares to work.
Today alone. Take a look at the metal count as well. The U.S. continues to outshine China, outshine France, outshine Germany and Australia.
Okay, so at the moment, watching NVIDIA. NVIDIA, there was somebody buying a lot of the 115 calls.
By the way, Simone Biles just finished up her final events. I won't spoil it for you, David and Melissa, but she will leave Paris as the second most decorated female gymnast of all time. Of course, you can see all of that on Peacock and on NBC tonight.
Who is the first most decorated gymnast of all time, Carl?
I knew you were going to ask me that, and I just didn't write it down. But she will be second.
Sorry.
That's all right.
Carl, I mean,
Mary Lou Retton, probably Mary Lou Retton, right?
Always so prepared. Is it
You know, the statistics book here are
No,
very
Nadia,
complex.
yeah, Nadia Comaneci. All right, we're gonna find out. I know you're gonna find
Nadia had the first tens, right? Nadia Comaneci.
Biles been incredible to watch.
Romania. Was it Romania?
Very emotional, more so than I've seen him after he wins Wimbledon or the U.S. Open or any number of the other Grand Slams that he's won so many times in his career.
Yeah, and you could see that just a couple of weeks ago in their last match where he did obviously come up short. So watch him do this and do that Golden Slam, as we said, only been done 5 times by the likes of Steffi Graf, for example. That's quite an achievement.
Amazing, and as I said earlier, of course, just incredible to watch some of the events over the
Okay.
Carl, thank you. We will find out the answer.
This is a waiting game. For me, markets that act this way, this is a waiting game for me. I'm very calculated. I look at the data. Right now, we're not making a furious bounce to the upside. We're not continuing lower. I do know that I want to pay attention to the Japanese yen, AUD, Australian dollar pair. Want to see that move much lower. Want to see that move much lower. Okay, here's okay. Here's the Japanese yen, Australian dollar pair. This is Heiken Ashi chart. So I want to see this stay red and trail off over the next few days. S&P is starting to bounce. If you're thinking about buying, I bought some 520 calls. Again, just limiting my risk to options, the cost of my option, and losing 25, 30% is the most I'm interested in losing. But calculated risk, if you're going to trade at all right, if you aren't good or if you're not interested in the day trade side and you're just looking for an opportunity for the long term, maybe you nibble a little bit. Bitcoin is still bouncing. I think the dip in Bitcoin is probably going to be an opportunity. Let's look at Bitcoin. Okay, so Bitcoin starting to bounce. All right, Coinbase. Okay, watching inside day for now. Coinbase. Okay, so this could very well trail off the rest of the day and turn into an inverted hammer. It would be a shooting star if it was at the high like this one here. So what we want this to do is to stay above the 200-day. So this is a multi-day process. It's a multi-day downward movement. We're below the 200-day, the dotted line there. So I'm looking for a close above the 200-day. Coinbase, Bitcoin. Okay, nothing to do. Okay. Okay, so we're looking at TLT too. Lots of investors putting cash to work. You can see we're well off of the 2022, 2021 high right there. We're just trying to get through this pivot at 103.60, 104. It's possible that if we have any more weakness that we could see cash flow into bonds. Okay. So this is a multi-day process.
opportunity. Homeowners are sitting on a record amount of equity, but cash out refinancing has not gained much over the past year. Melissa, how do you think the decline in mortgage rates balances out with the fears of recession, Diana? I mean, the reason why mortgage rates are falling is because people are worried about what's going to happen with the economy, and the decline in the stock market obviously impacts how people feel about their wealth, their situation. Right. I mean, with the builders today, you would think they might be less bad than some of the other stocks, but really, if you look at this as being your single largest investment, yes, mortgage rates have come down a bit, but if you're worried about the economy, you might be worried about your job, you're worried about your future, you're not going to want to take that step, especially if you're the first-time buyer.
We got some large buyers of the January 2026 170 calls at $72, 5,700 of those at $72, up to $81 in large lots, $47 million trade.
Nasdaq's still down 3.3%. There's Apple down 4.6%. Sorry, I'm going in reverse here. Warren Buffett's owning a lot of stock. He pointed it out. Yeah. So, but it can't go unnoticed, and it's not perhaps not unimportant given how large a stake that was for them at Berkshire. Now 277 billion in cash at that company.
Not just Apple, but also Bank of America. And so you pair these two together, and you're thinking during that run-up, what did Buffett see?
A lot of good people are watching the same thing, watching the Japanese yen, Australian pair, the carry trade.
We're going to have a lot more coverage of that right after this.
Okay. All right. So no follow through yet in the S&P. Spiders. All right. So some liquidity overhead keeps price at bay for now. We're not able to make it through the supply just overhead on the S&P. Okay. More important, what's going on with the Japanese yen, Australian dollar carry trade, that pair, the carry trade. Borrow in Japanese yen, buy Australian assets, make the difference between the two. Carry trade. Okay, let's see what these guys are talking about.
With tailored education. Get an expanding library filled with new online videos.
Okay, ES is just gliding sideways. Feels like it could roll over very easily. VIX pop up, have some more selling come in. I would limit new trades. Look and keep an eye on stock any trades that you do take, like on Bitcoin. Bitcoin has managed to get back above VWAP. Bitcoin's managed to get back above VWAP. And we're running up against supply right now. Okay. On the left is the 5-minute. On the right is the daily. Could be a hammer on Bitcoin. Look for a move back up towards that upper trend line. All right, let me just zoom out here. Okay, let me just go do this. Okay, so looks like something like that. Okay, I'll keep it underneath that body right now. All right, lots of supply. Exhausted selling there. Looks like some buyers coming in and pushing Bitcoin back up. Okay, keep an eye on Bitcoin. Also keeping an eye on TLT. Watching for flows into TLT. NVIDIA trying to push back up to the highs. You could see a little bit more follow through. There was some buyers of the 115 calls late last week.
delays, the news of the delays of its Rockwell chips. 360 round will dive into the sell-off in the tech sector that we're seeing. Names like Apple, Nvidia, a lot behind that as well. Here's a look at the markets. This is the Magnificent Seven, faced 650 billion market cap in sell-off today. Here's a look at the major averages down 3 and 4%. The S&P down 3.1% at 5182. The Nasdaq down 3.1%. It's down nearly 600 points at 17,852. The Dow down 1,075 points, down 2.7%, 38,662. And the Russell down 4.25%. These are big moves, folks. Concerns about a recession weighing, and we're seeing 10-year bond yields, of course, sinking as well. Oil at 72.69 the barrel, gold 24.39. The VIX is jumping. The VIX is at 40.62, and lots to discuss throughout this hour. We are off the actual session lows, but not too far off. That being said, we got news this weekend that Warren Buffett, the Berkshire Hathaway, to be selling off shares in Apple. Jenny Horn, markets correspondent here on Schwab Network, is taking a look at Apple and the story more closely. Good morning, Jenny. Good morning.
All right, so this is going to be a waiting game. All right, so right now we're just sitting here with the possibility that we could roll over or pop higher on the S&P. Okay, just watching Bitcoin, watching various asset classes, looking for money flow to become more apparent in positive or bullish flows like the TLT. Let's see what AGG looks like. AGG, Barclays Aggregate Bond Funds. I don't think there's any reason to do anything rash at the moment. I'm certainly not putting a bunch of money to work at this point thinking, oh, this is the bottom. We don't know that. At a minimum, we'd need to see a base, okay? At a minimum, here's IWM, for example. Here's IWM. So what would I be looking for? I'd be looking for a base down here. See over here? We were above the 200-day. It took multiple days, and then we finally made some higher lows and higher highs. That's what I'm looking for. I'm not looking to put a bunch of money to work at the moment. If you are a gunslinger and you're looking to day trade, okay, you're doing that with a higher risk factor. Of course, you know that. But you also have a higher reward factor. If you do get it right and the markets do bounce furiously, I'd be looking for flow into Bitcoin. Does Bitcoin continue to show more relief? This is a 60-minute. We want this above the 20 EMA. That's the green line. Okay, that's going to take a couple of hours more, probably the rest of the day. Volume looks good so far. Probably just shorts covering for right now. Okay, so that's contraindications right now. Let's see. The Japanese yen. Okay, Japanese yen to Aussie dollar pair. Keep an eye on that. We want this below the 20 EMA. We want this to roll over. Okay. That could exacerbate a lot of this pain that we're seeing in the short term. So if you're a short-term trader, look for the the Aussie dollar Japanese yen pair to back off. Okay. Okay, or you could do it the other way. JPY. Okay, you want this to move higher. Okay, so the correlation there. What's the US dollar doing? US dollar, Japanese yen. US dollar, Japanese yen at the low. Okay. US dollar at 102. We don't want this to go too much further. I'd like to see it stay around 100 to 102. I'd like to see the 10-year also. The 10-year also. Probably moderate in this area wouldn't be a bad thing. Okay, lower is good for small caps. So we'd like to see small caps moving higher. I'd like to see small caps base in this area. Okay, this is a 60-minute. I'd like to see that above the 20 EMA. That's not going to happen in the short term. Above the 200-day, need to see a base. Just like over here in April, we need to see a base for a few days. Most of this is due to the rate decision in Japan and how everything reacted to the idea that the US was going to be lowering their interest rates. That had an impact. Japan affected their interest rate, and that started the snowball, the two of those. You can follow it through the Japanese yen, Australian dollar pair. Okay, you want to see that roll over, Japanese yen to Australian dollar pair. You want to see that roll over. Okay, over the next few days, there's no hurry to do anything with this right now. Okay, oh, that's a US dollar. I said it, that didn't look right. That didn't look right at all. AUD. Okay, fading more. So that's what we want to see. That's what we want to see. Okay, we want to see this pull back in and resume this channel down.
It seems like, yes, things are moving towards a slowdown. There are reasons to be worried, but nothing is jumping out as some crazy high, crazy number that necessarily means there's immediate urgency to panic today.
Okay, Meta looking better.
In our view, wouldn't have been too soon to cut.
We'd be looking better if we slept together. All right, Bitcoin ETFs are doing better. All right, so BITX, Bitcoin ETFs. Oops, sorry. BITX. Come on. BITX. Okay. BITO. Okay, gapping down. BTCUSD. Okay. Sending channel. All right, SPY's trying to firm. Maybe we get a little fun. Maybe we have some fun here, and we look at this area of supply right overhead. Just coming up to it right now, 520. I have the 520 call that expires today, so I look for a little pop through this area. I'll take some profits off. Maybe take those profits and buy. Maybe Friday calls. I don't know. I'll keep it short term for now. If you're day trading, watching the SPY right here looks like it could push through an area of supply. Live screen, supply.
So if this same group that we know is a little bit more concerned about market movements, what we're seeing with markets today, that could shape their sentiment. That in turn could limit their spending further. So that is one warning spot to watch where the markets could impact what we're seeing in our data.
Yeah, I mean, we did get in today. Now, this, of course, is backwards looking, that the ISM Services Index did come in, and it was my understanding that it was a beat.
For a stock chart, stock charts.
So you think that maybe when we get this
dollar JPY AUD.
withdrawn based on what you're seeing?
That's what we're seeing in our data, which is really directly asking consumers what they're spending on, how they're feeling about prices, what their purchasing intentions are.
Okay, so far so good. Looking good.
And yeah, we had kind of a funny thing too because we do try to have more high frequency forward looking data, or at least up to the minute data versus.
Okay, Tesla. I did take a loss on Tesla. Put spreads, unfortunately for me, we had a nice big bounce on Tesla. I do have TSLL calls. Oh, you know what? Let me take off those covered calls while I'm thinking about it. Yeah, let me take those off.
Last month it was 48.8, and then July, I said August, I meant July 51.4%.
Okay, so I just took some covered calls off. TSLL, I had the 13s I sold, looking for a bounce. All right, watching the spiders for a push through this level. My apologies, wrong banner there. Should read SPY. Okay, I'm your host, Cosavini, coming to you from theclosingprint.com. It's just after 11 o'clock on the East Coast, 11:10 on the East Coast. It's Monday, the 5th of August. Watching Microsoft, watch the FANG stocks. All right, speaking of the FANG stocks, let's go take a look at that. That got whacked last week. Okay, we got a hammer off the 200-day. Okay, New York FANG index, hammer off the 200-day.
Today, it doesn't feel like we're in a recession. So we'll wait and see. If there is a need for an emergency meeting, I would say today's market movements alone are not enough to make that the case. But
yeah, one day's move is not indicative of a firm uptrend. Right now, I'm just looking for a spot to get back above 520 and rip a few points so I can take some of those calls off. Bought some 0-day calls. All right, Google looking better. It's off $3, but looking better. Microsoft off 9, pushing higher. Meta's off 10, 11. It's starting to retreat right now, Meta. All right. All right, so we got a nice hammer on the New York FANG index. Okay, oversold. Stochastics looking for a turn, looking for MACD to turn. So this is going to take a couple of days for this to all flesh out. But we could see some opportunity here. We got NVIDIA, of course, with earnings end of the month. NVIDIA watching that move higher. Remember, there's a lot of volume in the 115 calls. NVIDIA, the 115 calls for this week. That was late last week on Friday, was it? Okay, HOLO. That's come off the low. HOLO, hologram, microcloud hologram, coming off the low. Penny stock. Okay, so Jason over at Three Peaks was talking about Coinbase into the lows this morning, seeing a large buyers, plural, 5,700 January 2026. That's not next year, the year following, 2026, 170 calls. They bought those for anywhere between $72 and $81 per contract. $47 million trade. $47 million trade. So that's some balls there. Okay, Coinbase. So the big tell is what brought us to these levels in the first place was the Japanese yen Australian dollar pair. You need to keep an eye on that. Write it down. You need to keep an eye on the Japanese yen Australian dollar pair. However you can do it in your platform. I'm following it on stock charts. Okay, right now, New York FANG, buyers, that's probably just shorts for the most part, and some buyers, I'm sure. Hammer, I mean, if we get back above the 100-day or back into Friday's price action, that would be monumental. Okay, Stochastics trying to turn, it's oversold. RSI is oversold. Okay, if we can pop through this area, SPY should get something going here. We got some supply right there. You see that supply? Just overhead. Look at the volume. Watch the volume pick up. Watch the volume pick up. I had the 520 call, so I want to see this pop at least the 521, 522 sometime in the next few minutes. That'd be nice. Okay, Tesla, pretty big bounce on Tesla. I took a loss on some put credit spreads. The only reason I didn't want to get assigned. I didn't want to get assigned shares. That's not what I want at this particular juncture. 89% cash. I'll start adding if and when we start to see reasons to add to exposure. Or let me take a look at TRBCX because I would like to buy some TRBCX. Tom Lee's probably going to be right. Only 2 or 3 days later, he thought Wednesday would be like a 5-day rally. Oh, speaking of 5 days rallies, let's go take a look at NIMO. I know I'm jumping all over the place. The TRBCX though, I'm looking for an opportunity here. Okay. Not yet because this is showing no signs of a base. We need to see at least 1 week where we have a reversal like we did back here in April. Okay. Don't have that yet. So you got 3 weeks, 4 weeks down really. This had gained over 100%. So not losing any sleep over TRBCX. We scaled out into the highs anyway, taking risk off into strength. Okay. So TRBCX, you know that we were buying this back when accumulation started to show up. Okay. We started to see accumulation back in 2022. The moving averages went sideways on this weekly time frame. Okay. This is the weekly. All right. Moving averages sideways. That's a bottom forming accumulation. That's where institutions are picking up shares. Then it moves above the bullish 10 EMA weekly and starts to ride that. We gained over 100% and we're giving back some, but we scaled out into strength anyway. So we're looking for a base now, similar to what we had right here in April, right? So no hurry to do anything here. That's TRBCX. So what was I going to look at here? All right, let's go take a look at the NY. Oh, I wanted to look at NIMO. Okay, so we're getting close to minus 30% on the mid caps and small caps. These two are set up for a potential bounce, mid caps and small caps. The S&P 400 mid caps index and the S&P small cap 600 index, they're at minus 30%. So we could see a bounce in the next couple of days. So I'd be following the Russell IWM. Okay, so Russell needs to form a base here. Okay, so if you feel like you're going to miss something, you might miss a couple of points, but you also might miss some more downside if that's what's going to happen. So we don't know. We don't know what's going to happen. We need to see a couple of days confirmation buying at a minimum.
Well, thank you for all of your insights in the market strategy here today. The Dow is down about 922 points off the lows of the day. It was down over 1,100 points, I think, at one point. So let's get, and Kevin Green, thank you for your patience on this one, but in a breaking news environment like today, we're going to now kick it off and look at some of the names. So the first one you have here, Achilles, Altria, MO being the ticker symbol. Tell us a little bit about this story quickly.
Yeah, very quickly. Altria is one of these companies that shows a lot of resistance during these times. Whenever there's a flight to quality, you're going to see people heading into Altria. They're going to go into utilities. They're going to go into whatever perceived safe haven there is. And we believe Altria is one of those companies. We expect a lot of near-term volatility, but not as much as you're seeing with the tech sector, not as much as you're seeing with value stocks. Altria, yeah, it's down about $1.50 or so right now. But you're not going to see it go down to $10 that you saw with other sectors.
All right, my daughter's flying up to Boston. She's about ready to board a plane, so that'll be fun for her. Okay, so IWM. You can see that one day does not make a base. One day does not make a valid decision on the way I look at things. You got 3 days. What looks like it could be 3 days of above average volume. We've got 2 days so far. We're right at support, so we would see potentially a base form here. That would be a good area. If you're absolutely adamant about buying some IWM, I have a put credit spread. I want to see prices stay above 200. But other than that, if you're adamant about getting into IWM, I would give it a couple of days. Maybe if you were going to take 1,000 shares of IWM here, maybe you take 100 instead. Okay, that's the way I would do it. I would scale in. That way, if it does move lower, you're wrong on 100 shares and not 1,000 shares. Okay. If we do bounce tomorrow and follow through or base a little bit more, maybe you take a couple of days to reassess. If we do continue to grind higher above the 200-day, then maybe you add a little bit. Right now, I'm not doing a whole lot in terms of shares. I'm just doing options trades. And I'll look to buy some BITX, perhaps, some BITX options, some calls on BITX, maybe some September 25s. All right, BITX, maybe some September 25s or some September 24s. Do they have 24? All right, BITX. All right, they got a little bit more open interest at the 25 strike for September. Looking for a follow through. Tesla pushing higher. I did take some Tesla put credit spreads off for a loss this morning. As luck would have it, the bulls took it a bit higher. Not so lucky for me. Took a loss on that. That's okay. It's only one position. I didn't want to take the risk that we were going to continue to move lower, so I took that off this morning. Okay, bounced back above my short strike at 200. In hindsight, I could have waited, but I chose not to, and I took a loss. At the moment, just waiting for the weather to change. A little rainy, a little drizzly here, but not much. Let's see what Florida looks like at the moment.
Right. And you talked about picking up some stocks using buying opportunities as we're seeing pullbacks across the board with the S&P at 52.17. How far do you think the S&P can go down? I mean, are you worried? When will you be worried? When it breaks below something? Or
I'm more worried right now if not the quality of the stocks as a whole goes down. I'm more worried if the Fed is not actively engaged by September and moving in that direction.
So a lot
to take
weighing on
rates
the
down.
Fed. A lot weighing on the Fed. Let's see, Kevin, take a look at the charts where it's at 101 Con Ed today. He thinks it has a 6 to 8% potential to the upside and somewhat of a safe haven. Some of your thoughts on the charts, Kevin.
Yeah, and rightfully so. We are actually seeing the stock break out here. Actually, Nicole, if we're looking at a 3-year
All right, so Bitcoin continues to thrust higher. Bitcoin. So BITX and BITO, those are two options. BITO needs to get back up with the 200-day. Still needs to base like everything else. All right, let's see what's actually moving. Last week, we held the idea that the defensive stocks would follow through. Initially, those pull back. Let's see. Kellogg, gap up. Okay, looking for Generac. All right, bouncing back up with the 200-day. Not really that interesting to me. Dexcom following through. For those of you that are still in Dexcom, looking really good. Dexcom still working.
All right. And thank you for that one. And last up, we have one more here on the big three.
Dexcom working day 7.
Some of your thoughts there.
Yeah, if you're looking at a stock that's going to weather this storm, Raytheon is one of the
AMD, nice work there, Stephen.
Raytheon directly benefits from that, has benefited from that. Over 30% year to date in terms of performance. They have a sizable.
Okay, see Russell trying some puts. Let's see. Puts on what? Puts on the Qs. Okay. Disney. Okay, Disney looked good. Now it doesn't. too bad. AXP pulled back, Caterpillar pulled back, everything pulling back. People throwing away shares would be an opportunity. McDonald's, you know that I want to get back into McDonald's. Sitting on the 200-day. So this is actually a good thing. I know some of you bought some calls on Friday, 275s. What I'm looking for is a base right here. More than likely, this is going to push off of this level. Okay, let's look at this 60-minute chart. 60-minute chart on McDonald's. Okay, McDonald's, 60-minute chart. We're above the 20 EMA, so this looks good, trending. If we dip a little bit more, I'm looking for a buy point in McDonald's. There goes the SPYs trying to push a bit higher. SPYs above. High tick alert. High tick alert. High tick alert. Listen, you don't have to do anything. You know, if you're a junkie and you feel like you have to buy something, okay, I would limit my exposure. I'm doing it with options. I will do it with options for now. I took 89% of my exposure off the markets into the last few weeks. I got the 90% cash across multiple accounts, as you know. So McDonald's, looking for a bounce here. So I'm not eager to put that money back to work. This is not the time to throw money at the win and see if it sticks, okay? This is not the time. We got to see. What you want to see is more stocks making higher highs and higher lows. All right, you want to see all of this. You want to see all this green, not red, okay? Most actives on the Dow Jones, everything is red. JP Morgan showing a hammer. JP Morgan might be an opportunity there. Okay. Off 25 points, bounced. Playing for the long game. Short game, I just looking at options. Long game, I still need to see quite a few things happening. Tesla, I'm not doing anything. Puts, you could try it. You could try it. Look for a fade. NVIDIA, watching for a bounce.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading.
All right, so yeah, it's a possibility. Okay, SPY pushing through. Okay, so the level of resistance that was there disappeared. Okay, now we're pushing up to the next level. Next level.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern.
Okay, we got a tight squeeze on 0 day. 0 day tight squeeze, but down volume is ruling the day.
Ethan, how's my favorite client? Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends? All that research sounds exhausting. Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks. Can't be that easy. It is with Schwab.
We need tick above 0. We need tick, it's at 4 plus 4, tick plus 400. Okay, Bitcoin looking Looking like it could pop through this area, Bitcoin. Okay, my expectations are this could be a good day trade off the lows, and we'll see some selling and strength. But I don't think we're out of the woods yet by any means. At a minimum, I would like to see multiple days and a base. Okay, that's what I'd like to see. You don't always get what you want unless you go to Alice's restaurant, of course. But I'm looking for multiple days basing action. Okay, so right now we're between the 100 and the 200 period moving average. What's the likelihood that we go down to the 200 day? I think there's a pretty decent possibility. So you have to be rational about this. I wouldn't just go after. Yeah, you might miss an opportunity, but I don't know. There's just too many things pointing against. Here, let's see where we are for right now. Okay, so 10% down. 10% down. Okay, the 100 day was 6.5%. 200 day, 50 day, 921 will cross down through the 50 day. Next, above average volume. This all points to potential for more weakness until this changes. Okay, so this turned back down. Stochastics turned back down. We're still basing in here. Okay. Wow. All right, so this is going to start a phase one base. Okay, stage one base. We're undercutting the previous cup and handle base, or we're undercutting. We got into this price action. So this now starts the count all over again. Okay. Let's see, S&P, Spider Weekly. Okay, we're below the 10 EMA. Let's put the 20 EMA on here. 20 EMA. We're below the 20 EMA. Okay, SPY looks like it wants to push a bit higher.
And when I look at that, what I see is that nothing material has changed about crypto. In fact, I suspect that the conditions are getting ripe for a strong crypto bull move. We're closer to the Fed cutting interest rates today than we were last week. We're closer to the resumption of money printing than we were last week.
Not sure about the earlier margin calls, but 215 to 345 is usually, we see some margin calls then. I did get a
very quickly into risk off mode, but what we've also seen every single time is that it rebounds faster and higher than other assets. That's my base case for what we're going to see today and over the next 6 to 12 months. No guarantees, of course, but if history repeats, that's what the conditions are setting up for.
So if there is to be a recession, how does Bitcoin and Ethereum and some of these others act? There obviously is a 25% concern by Goldman Sachs for a recession. There's worries that the Fed is behind the 8 ball and should have cut already and causing a recession by not acting fast enough. If we were to have a recession, how does Bitcoin act during that time?
Yeah, I think the answer to that lies in how centralized authorities respond to that recession. If we see,
yeah, I did get a margin notice in the mail. Not the same thing as a margin call. It was just telling me that basically telling me to check your positions. It was telling me to check my positions. I didn't have any issue because I wasn't in margin, but it looks like margin. It looks like margin to, I guess, to the computers, because credit spreads, you have to put up a certain amount of cash on a maximum loss basis. You have to put up a certain amount of cash. Like for those Tesla Put credits, I think my maximum loss was 360 per contract. I had 10 of those, so $3,600. But if I had been put shares to me, I would have had what 1,000 shares of Tesla, which I didn't really want in this kind of market. So basically, the letter was telling me to watch it, to keep an eye on it. And I had multiple positions. I had the IWM put credit spreads, and I had Tesla put credit spreads. I chose to take the higher risk, shorter expiration dates on the Tesla. Take those off, even though Tesla is rising. So managing risk, that's not just about taking a position and then thinking about how much you're willing to lose. It's also about what are your existing positions in a changing market. You need to constantly look, every once in a while, once a week at least, to see what your exposure is. In my case, I didn't want 1,000 shares of Tesla. Even though Tesla did bounce, I took it off just to be that I don't have to worry about it. Okay, BITX looking really good. That's a nice bounce. Looking for SPY to move a bit higher. Okay, so the next supply level you can see on SPY is coming up overhead. Next major level is SPY. Okay, extreme high tick. All right, shorts covering.
So there is a little bit of that political response in that greater downward move as we see sort of Democrats
Stops getting hit.
rising in the polls. But on balance, it's mostly that first thing. It's a smaller asset, and therefore.
All right, extreme high tick. We got some shorts. Probably got stops overhead. People taking puts. Okay, we're starting to travel into this. All right, VIX is rolling over. VIX is rolling over. That's a good sign. All right, so somebody take a look at the Japanese yen Aussie dollar pair while I'm typing this. VIX dropping. Watch the Japanese yen AUD pair. A drop equal bullish intraday for stocks. All right, so that's probably dropping. I got a feeling that's trending lower. Japanese yen, AUD. Okay, yeah, that's dropping even more. Okay, that's a good sign. That's a good sign. There you go. Okay, so that's what we want to see. Okay, we want to see this moving lower. Okay, sorry. Want to see the Japanese yen, Australian dollar pair. We want this lower. Okay, get down there. Get down. Get down tonight. Get down. Get down. Okay, so the SPY's on the move. Okay, Bitcoin following through. Bitcoin, BITX, BITO, coin, BTC, BTCX. Okay, so we're coming off the worst levels of the session. It was almost 50 to 1 NYSE. Okay, Bitcoin, New York Stock Exchange was 50 to 1 down volume, now only 14 to 1. Only 15 to 1. Still down volume. So, okay, let's see. Into the gap. Coinbase, nice bounce on Coinbase. Okay, Coinbase with a nice bounce today. Coinbase. Okay, it must, if you're bullish, it must close above the 200-day, that dotted gold color line. And hopefully tomorrow open above this level, base a few days. What's this? 1, 2, 3, 4, 5, 6, 7, 8, 9. Day 10. All right, day 10 reversing. Bitcoin, US dollar. Okay, so let's take a look at Bitcoin, US dollar, BTC, USD. Okay, so you can see the hammer over here forming on the daily, far right. Okay, so the 5 minute looks good. 5 minute Bitcoin. Oh, where's my Bitcoin? There it is. Bitcoin.
Cut the cord on the way you get market news. It's market on close.
Okay, watch Tesla. Tesla looks like some profit taking.
Earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Time for developing stories. Caroline Woods is with us, senior markets correspondent here on Schwab Network, taking a look at CrowdStrike. Of course, we had that huge IT global outage, maybe the largest ever. Delta was trying to get some money back. So where do we stand?
Yeah, I was worried about Delta, flying Delta. Worried about that on the way back.
Negative this morning, and they've turned positive. Shares are up about 1.4% right now. They lost 15% last week. They're more than 40% off 52-week highs. But back in positive territory today. The cybersecurity
Bitcoin.
Against Delta's claims that it was responsible for the thousands of canceled flights following that IT tech outage in July. That was a result of a faulty software upgrade. Last week, there was news that Delta hired attorney David Boies to seek damages from CrowdStrike and Microsoft after the outage. Delta had said cancellations had caused up to 500.
Okay, so we got a 0-day squeeze. Got a 0-day squeeze with cyan-colored TTM bars, but we still got down volume. Down volume starting to pick up a little bit. Was 15-1, now it's 17-1. So they're selling a little bit more. Watch here. All right, down volume starting to pick up.
To offer on-site assistance, but received no response. Saying Delta, or I'm sorry, CrowdStrike said it's
All right, so a little bit more. Okay. All right. Apple's still down $9. On the news that Warren cut 50% of his position recently. So when he makes that announcement, that means he's already sold it. Dexcom moving higher. Dexcom up $1.32.
In terms of some analyst activity for CrowdStrike, we did see Redburn Atlantic cut its price target to 185, maintained a sell rating.
Okay, the Q's 11-1 down volume.
Maintained a $315 price target. And on the whole, analysts still very bullish on this name, about 80.
Yeah, one day, I don't think this is over with. I don't think this is over with. Okay, let's look at the Q's. Okay, we're sitting on top of the 200-day area. Okay, we need the base. At a minimum, we need the base. The momentum is clearly turned more bearish over the last few weeks. Nothing says this is over with yet. We got above average volume. 1, 2, 3, 4, 5, 6, probably 7 distribution days. Okay, the key though, I believe the key is going to stick with the Japanese yen, Australian dollar pair. We're going to need to keep an eye on that because we want this to fade completely and turn into a shooting star. If you're bullish equities, or if you're in an investing time frame and you're just looking for a reprieve. All right, this is looking much better, much better. Okay, we want to see this drop below the 20 EMA. That would be bullish.
not too long ago and delaying the release of the robotaxi by a couple months. So NVIDIA is essentially now delaying the release of their Blackwell chip so they can
Okay.
certify that it actually is it checks all safety specs and quality control. And I can see why they're doing this. They don't want to release a product that ends up being faulty, especially considering the high demands for those chips and the expectations, which are extreme for a company like NVIDIA. But if you look at the stock, Nicole, I mean, it's trading down significantly. It was around $90 earlier today. There's a lot of volatility after hitting $140 just a couple weeks back, and the stock is down considerably. But if you do, take into consideration the elements behind the revenue estimates, for instance, Citigroup actually still maintains a $150 price target within the next 12 months because they only expect about a 5% hit.
If the Fed comes out and gives an emergency cut, I don't think they're going to do it, but the signaling the possibility is probably one of the reasons why we're holding up as well as we are. Okay. I don't know. I'm ambivalent about a rate cut. They've already passed. I don't know. Hard to say. But a lot of dollars that were out there have disappeared. Well, they haven't disappeared. They just went somewhere else. So a lot of investors that had money on the table, or Dexcom is moving higher. Dexcom. A lot of investors that had money on the table have seen a lot of that dissipate or evaporate. All right, Dexcom looking really good. Dexcom. Last week, the week before that, we told you that this is probably going to be a multi-day, multi-week opportunity on Dexcom to buy dips and sell rips. Okay, so looks like institutions have been picking up shares above the 20 EMA 60 minutes, so this could continue. Dexcom.
Being part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
All right. So looking very good on Dexcom. Dexcom looking good. We told you that this is probably going to be a multiple week, multiple month trade. This gave back so much of its gains that couldn't help but to see this rally. All right. So look at this volume by price band. Okay. There's a lot of selling there, but there's a lot of buying too. And we're starting to see this bar right here as we're moving higher. This is looking really strong. Dexcom, buy dips. Don't buy the high of the day here. Dexcom.
Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks. Can't be that easy. It is with Schwab.
Schwab investing fees, 40 customizable themes, up to 25 stocks.
Okay, AMD's had quite a day. AMD, congratulations, Stephen. That's looking really good. AMD.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Watching Kellogg, Staples, Consumer Staples, Kellogg's. Big gap up. Look for a base. PepsiCo last week. Mr. Flood was buying PepsiCo. We're down a little bit, but giving back most of Friday's gains. But looking for a bounce in these, Coca-Cola and PepsiCo. Also looking for Procter & Gamble to do something, perhaps. That's pulling back in. Kimberly-Clark. Everybody needs toilet paper and stuff. Colgate, Palmolive. Consumer products. Clorox. Okay, Clorox holding up fairly well. Inside bar above the 200-day, so that looks pretty good. Clorox. Industrials pull back. XLI finishing up where we left off. We were looking at financials. Industrials pull back. Consumer staples pull back. Healthcare pulled back. Bouncing now. Utilities pull back, but not as bad as the rest. This is interest sensitive, so if the Fed continues to lower rates, you're going to see more money flowing into XLU. It's kind of a slow process, but looking good. And consumer discretionary. Are people going to have money to sell, to buy things? Looks like consumer discretionary is saying no at the moment. Let's see what TJ Maxx. TJ Maxx. I didn't want to buy TJ Maxx at the highs, so we're starting to get opportunities. So what we'll probably see is a cup build over the next 6 to 8 weeks. You got a cup build. TJ Maxx will be a trade probably in the near future. Bitcoin US dollar. Okay, watching that. Bitcoin US dollar, multiple day setup. This has got a base. It's been down for over a week and a half. So this has got a base here. Not a whole lot to look at there. Let's see what is actually working today. I'm not really interested in taking on a whole bunch of risk. I hope that you aren't. If you're day trading, it's one thing. But if you're looking for multiple days base like me for a surety, I'm looking for a surety. I'm looking for conviction. All right. So look at Microsoft, for example. Okay. So, yeah, Microsoft's at the lows. You may be thinking, okay, let me buy some Microsoft. Okay. That's your privy. For me, this is a double bottom, so I know that I stopped underneath 385? 385. Stop underneath 385 is probably good. Look for a push to the upside. But again, I'm probably more prone to taking options instead. Okay, I'm not doing anything at the moment though. Just sitting here. No, I'm not. Actually, I'm not. You know.
So I mean, the demand is still there, and I mean, these data centers that they're building purchases are going to be GPUs and CPUs. So we don't see it as
Meta, Bitcoin, BITX.
We heard how Berkshire Hathaway sold off over $75 billion, about half of their load that they had there, but it's still their number one holding. It's not like they dumped the whole thing. What do you think of a name like Apple? Do you say, oh, this could be an opportunity here, or do you wait and see and maybe keep waiting on the iPhone cycle?
Okay, dollars at 102, 102.67. The 10 years at 3.78. VIX is at 34 and continues perhaps to fade. It looks like it's going to base here a little bit. Crude oil at 73. That's going to help consumers' pocketbooks, of course. Okay, do I want to do some SPY? No, I got SPY. Exposure. Too far out of the money, but I got SPY exposure for Wednesday. Is it right? Wednesday? Let me see what I got there. 550s. For Wednesday. That's not likely to do anything, but IWM looks good. IWM, nice bounce.
What about some of the other names, Jamie? Do you have other names that scream out at you now that you say, oh, I'm going to, I don't know if you're going to back up the truck and load up the portfolios, but what names are you watching carefully that you're saying, hey, you know what, is it tech? Are you saying yes to tech soon?
Yeah, so we still say yes to tech. Our investing theme for a long time has been old economy companies who have been embracing AI, digitization, cloud computing, and as far as the picks and shovels. So, I mean, names like Apple, Microsoft are core holdings in our portfolios. But we also have investments in companies like ServiceNow that has taken a beating after earnings. Walmart is sort of poster child for an old economy company that's embracing digitization. Chipotle got hit after earnings, so we might be looking ahead to that. So, I mean, our focus is tech. We do have an overweight there, but we think it's more than tech. We think it's a broader bull market that's underway.
Yeah. Tom, I'll give you the last few seconds. Last final thought, quickly.
Sure, I think, for everybody, just sort of stay calm, right? Not that much has changed since Friday. We're seeing a bit of a breakout in the markets, but at the end of the day, it's been an amazing year so far. We were bound to give someone some back. Stay focused on the data. Until we're really worried about an economic slowdown, we're still in good shape.
Right, and we'll watch to see where we close on the day. The Dow is now down over 800 points, down 2.1%, had been down over 1,100. So we are up off the lows of the day, folks. Thank you both, Thomas A., Sevens Report, Jamie Myers of Laffer Tangler. Great to see you both. Thank you for joining me here on Trading 360. I'm
Bitcoin.
So join me then. You can download our Schwab Network app for free from the Apple App Store. And do keep it here because Fast Market is next.
Bitcoin looking good. Bitcoin. All right, looking for a follow through off this low. It's probably going to take a few days. I don't think this is going to all happen in one day.
With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Dexcom. All right, looking for Dexcom dips to buy over the coming weeks. Make sure you just give yourself enough time. That should work. Develop over. Okay, the dollar continues to rise. Okay.
Is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses.
Dexcom. All right, coming out of the daily too. Dexcom. The hourly chart looking good. Okay, the hourly chart. Dexcom. DXCM.
Trade brilliantly with Schwab.
DXCM. Dexcom. Nice relative strength. Volume is tapering off, but it is easing into the gap. RSI is coming off of oversold. MACD and stochastics turning. It's probably going to do well. Okay, I'm going to take a couple minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday the 5th. We're going into lunch hour. I'll be right back. Give me just 2 minutes.
risk-off event. So I would look at the credit markets, for instance. And while you've seen some modest spread widening, it's not even enough to entice, if you will, folks that are really looking for that spread widening as an opportunity to be able to add some more credit. You're looking at the positioning on the fixed income markets and duration. There's been a lot of talk about lengthening duration, and being able to take some of those trades off in the last couple of days, just given the moves in yields, perhaps has given opportunity for some more cash on the sidelines. As it relates to equities, though, I think it just comes back to we're entering a volatile period. We're looking for the Fed to be more accommodative. Frankly, Scott, I think the calls for, some significant interest rate cuts intra-meeting or in September, I think that actually might stoke the flames that we do have more of a recessionary concern than I think is really justified. Soft landing means going from, say, 2.5%. Do we get down to 1% GDP growth? Perhaps we do. But to get into negative territory, Scott, it will require so much in terms of a decline in consumer spending that the cards are just not on the table right now. So I have to agree with Joe. I think this is positioning, but I also think that there is some continued vulnerability in valuations. And again, depending on what you are able to use to pay for stocks, that depends on how much you're willing to pay for them.
Weiss, you've been trading kind of in and out. I don't even want to call it day trading. It's sort of moment by moment trading really for you today. Because on the lows of Meta, for example, you bought some, but before we even have a chance to really highlight that, you're already out of it.
Actually, I got back in it.
So just take me through, the thought process of why you're trading like you are today, so tactically.
Sure. Well, first, QQQ, short VOO, and short the Russell IWA. And I covered those pretty early, I'd say about 7:30 or so, just because I thought it was so emotional. And when markets trade so emotionally, particularly pre-regular hours, it's generally an opportunity. It could have been wrong. I mean, they could have gone down further, but I just thought made some good money in it. Didn't offset all the money I've lost, of course, over the last week, but made some good money in it. And then with that as my baseline thought process, I thought it was a good opportunity to buy Meta. I didn't buy it down 40, where it was. I bought it down like 30 and then made some money, sold it, want to take a fresh look, which I like to do, make sure no emotion creeps in on my part, and then sold it. Did the same thing by the way.
All right. Just listening to Weiss talking.
Which I'm now long again. I can't guarantee. I put stops in, because obviously I'm occupied here. So I can't tell you that by the end of the show I'd be long. I can also tell you that this is not for everybody.
That's true. That's true. Good point.
I've seen lots of markets like these. I'm not buying anything that if I'm completely wrong and it goes south in a hurry, forget about a stop. I'm not comfortable being there for a longer period of time. But I'm not adding new money to it. So I still have what was left, my core position in Meta. If you recall, about a month ago, I shaved my portfolio and sold things like Uber. But look, when there's this emotion, this kind of volatility, not to say you'll always make money, it's still only 60-40 that you will, but I think I can handicap that well on my part. One thing I'd say about what Joe said is that, and Shannon, is that this is just a confluence of events all coming together. And what I've been saying about this market for a long time, the economy, is that we're on borrowed time. I said just last week that at some point, right, the record tightening cycle that we've seen for as long as we've seen it is only delaying the impact, only being delayed in terms of the impact of the economy because of a couple things. I'll be quick because I know you want to move on.
Yeah, I do.
The first is that we have a COVID fire hose of demand that drove the consumer. Consumers clearly atrophying, as we said, with increasing debt levels, increasing delinquencies. And then you've got a cohort that's invested in the market that's always used to V-shaped recoveries. Now, too early to say this won't be one, but who knows? And then just as far as the VIX goes, I don't buy it as a valid argument. I agree with everything you said, because the VIX for the last year, 90% of the time has been at low double digits. So all of a sudden, this was going to be
everyone's short foul.
Right. But you could have made that case 6 months ago and got your head handed to you because the market moved up. So it's a contributing factor. It's not the only factor.
So you obviously have a fear of the Fed being behind the curve. You have the fear that what was at least in some circles, thought to be a given that you're going to have a soft landing. You have questions about that. Goldman's Tony Pasquarello, in his most recent note of the decline in tech stocks, says, I certainly feel like I've overstayed my welcome in these names, but does go on to say, quote, I tend to think this is a drawdown within a still decent environment as distinct from the start of something more serious and lasting. Then there's the idea that, well, what does Buffett know that the rest of us don't? Because he takes off half of his Apple position in the second quarter. So that stock's down a bunch. And Jimmy, I'm going to get you in a minute, but I want to bring in Josh Brown for a moment to comment on, Josh, what you think about this move from Berkshire, how you're thinking about Apple, and you know so much about how, you think that Berkshire makes some of its investing decisions, or you've certainly made it part of your career to try and figure it out. Just what's your take?
So I was surprised because you tend not to see him do things like cut a position in half. He either gets all the way out or he gradually reduces. So he has done things like this before. But again, this is a little bit more on the rare side, especially when it's his largest position. Keep in mind, Apple was half of Berkshire Hathaway's stock portfolio and worth about a quarter of its market cap. So this isn't just like, oh, I bought a little bit of Goldman Sachs and then I sold it 2 quarters later. This is something a little bit bigger. But I think one of the things that you're hearing in the media that is not true is that the percentage of cash is some incredible amount relative to what it has been historically. On a dollar basis, it's higher than ever. But Berkshire's market cap on a dollar basis is also higher than ever. So this doesn't strike me as Warren trying to signal something to the market or anything like that. And just to put that into perspective, Berkshire's market cap to cash and cash equivalents right now, based on what we just learned in this filing, Scott, that's 31%. The highest level in 4 years, but in the second quarter of 2020, it was higher than that. So right now, it's a little bit above the longer-term average of 25%. So it's elevated, but this is not Warren Buffett climbing into a nuclear fallout shelter. That's just not what it is. You need a denominator, and the denominator is the overall size of Berkshire itself, which has grown in concert with the cash pile for the most part.
I hear you on that, and I don't necessarily think that we would need Buffett to put up a smoke signal or something like that to suggest that there's doom on the horizon, and this is the signal for that. But I think in totality, you can say, well, they've been sitting on a mountain of cash for a while, right? Unable to find anything really constructive to do with it. And maybe part of that is because valuations they thought were stretched in many, many different places. And now you have this move taking some off of the top and a lot of it, of a primary position, the biggest position that they have. And you take that in total and you say, okay, he's been sitting on a mountain, unable to figure out what to do with it. Now maybe he's uneasy about the environment itself. These stocks have run a lot. Their valuations are stretched. So he's building that mountain even higher to be able to pounce when there is true blood in the street, as he's talked about before.
In his own words, what he actually said was that he doesn't want to do anything where there's not a lot of upside for a very small amount of risk. He's looking for an asymmetric risk reward, and he can do that because he's not a mutual fund manager. The clock isn't ticking. The money he's using is not inflows from investors who are looking for performance. It's insurance premiums. That money comes in no matter what. This is people insuring their home against fire and flood. So he doesn't have to do anything. The bat is on his shoulders. There's no on what he does. This is really important. So many people don't understand this. They think he's like a hedge fund manager with the meter running. So that's one. Two, if he's looking for very little risk but a lot of potential upside, Apple doesn't fit the bill right now. He started buying the stock 10 years ago at 12 times earnings, 10 times net of cash. It's just not the case. Apple's a 30 times trailing 12-month multiple. Price to book is 48 times. That's above the 1-year average, 3-year average, 5-year average, 10-year average. This stock is not cheap. So looked at in that context, it's not like incredibly shocking that he would take profits. And again, he's earning 5% on cash right now, like everybody else.
Of course,
That won't
but,
be forever.
but like everything
It
else,
makes more sense in that context.
I understand. Like everything else, I mean, timing's everything, right? So it's impossible to ignore the timing as well.
All right, S&P looks like it wants to fill that gap.
Let me ask you quickly, because I know you got to run, because you, like everybody else here on this desk and all
Bitcoin's looking really good, folks. Bitcoin looking really good. Maybe a little risk on Bitcoin.
Amazon doubling it recently. Are you looking to buy anything today on the dip?
I actually added to some Amazon on Friday. Not great timing. I could have waited. And I've lightened up on a couple of things over the last week or so, which I know we'll talk
Bitcoin
about.
looks like it's gonna go.
But I have
BITX, BITO, CONL, COIN. Saba, is that moving? Okay, Saba. I really like the action I'm seeing in Dexcom. Kasaba. Whoa, look at Kasaba pushing right through that 50-day, paused one day and took off to the upside. Nice.
So I'm in wealth management. I don't have anyone panicking yet. And we had a 60 VIX this morning. So I don't know, is a 70 VIX possible to really shake people out, or maybe not this time? So that's where we are. But I'll see you guys tomorrow. I gotta hop.
Yeah, you do. You got your call in 2 seconds. I'll see you, Josh Brown. Thanks for being here for us on a very big day. So, Jim Leventhal, we need to hear from you too. I mean, you hold Berkshire. I'm sure you have thoughts on just the whole thing today. Let's hear them.
I feel serene, calm, Scott, and I worry when I say that maybe I'm being blasé or casual. But as Steve just said, I've seen a lot of these markets. We've all seen a lot of these markets. You're not hearing any panic on this desk today. The question that Tony Pasquarello puts forth is, it's just a drawdown or something worse? I'm going with drawdown, exacerbated as we see in the VIX, third highest ever. That's higher than 2018, the fourth quarter. It's higher than 9/11. Okay, so that clearly was the hedge fund and institutional community worried about the monetary treaty. Look at the labor report, Scott, from Friday. We still created jobs. If I look at where GDP is estimated by the Atlanta Fed, and I'll grant you, all of this can change, but we're at 2.5%. Profits are still
0-day setup. We're just grinding along the upper bands. Starting to see dark blue band. Starting to see dark blue. Oh, got a little cyan. Cyan coming in. We got a trailing stop at 52. Looks like 52.15 on the S&P. Looking pretty good. Solid. Bitcoin looking very solid. Following through.
Couldn't this be Buffett saying, you know what, I'm in my 90s. I know that if something happens to me, the money that I'm giving away, if I give it away in positions, it's going to get crushed because they see the size of my positions. And this is what happens, right? They come in, the cockroaches come out of the woodwork and they take advantage of it. So couldn't this be him getting in position for more cash and selling down the portfolio? It's nothing he's going to say, right? He didn't say it when I've got this
SPY looking good.
cash, but I sort of think that's what it is. He's held stocks through economic cycles before. He's never been 100% cash. Apple's been overvalued, and I would tell you more overvalued over the last year because you didn't have this major upgrade cycle coming than it ever has been. So
Hi, Tick Alert plus 800.
Hi, Tick Alert. Okay.
Of those opining on what they're witnessing today, and whether it's the start of something worse, whether there should be real concerns about a recession or a hard landing. Steve, I saw a Big Short fame on X earlier today.
Okay, Bitcoin looking good. Bitcoin. Let's look at the spiders. Spiders pushing higher. Spiders coming up against supply overhead at 523. SPY 523. We got supply.
I don't think there's been overinvestment in the U.S. Plus, corporate balance sheets are quite healthy. As for a financial system problem, I just don't see it. And that's from the guy from Big Short, okay? When you think, well, maybe if he's coming out today, he's going to be piling on the negativity. Not so much, at least from this.
The problem with that is that 2/3 of the economy is driven by the consumer. I've already told you what the consumer's going.
All right, futures looking very strong. Futures. Bitcoin looking good on the bounce.
Years ago, he's not an economist. None of us are economists. But I just think, I do think that at some point you buy, but you buy bottoms up. You don't buy a general market sell off because some are still not at the right, at the right level to get in. So that's how I look at it. To Josh's point, Josh knows his clients, his customers, his accounts. But undoubtedly, and you see it, people that came in late, that played momentum, that don't have good professional guidance like Josh gives to his, and like everybody in Invest gives to theirs. Some got in late, and they're the first to leave. That's always the way it goes. So that's what you're seeing.
Wolf today, Jim says, not the time to buy the dip. Calvasino over at RBC says risks of a growth scare could lead to a 10% decline. We had a big decline earlier this morning. So, what's your thought on all that?
So our other friend of the show, Andrew Denny, writes this morning, he says, it's not rate hikes that kill a bull market and kill an economy. It is financial distress. It's somebody in the financial market, the financial industry getting taken out. And so far we don't see it, but you don't see it.
All right, SPY continuation. All right, watch how we travel, how we react to 523-ish. We're coming up against 523.
6 months, 9 months ago, we would have said that's the canary in the coal mine. That's where you look for something blowing up. The fact that it isn't is a tell that this is not as bad, that it's just a drawdown.
You have had some calls this morning that the Fed needs to do something immediately, whether it's say it or do it. Jeremy Siegel, for example, the Wharton School says 75 basis point cut in an emergency, which is somewhat remarkable. Our senior economics report, Steve Leisman.
Okay, measured risk. We're looking for follow through. Do we continue to see more upside? We got some supply overhead from last week right in this area. Okay. Dexcom looking for the follow through. Coinbase and Coinbase ETFs looks good. Bitcoin ETFs looking good so far.
Leaning towards the carry trade as an initial culprit, at least for today. And also the comments, I believe it was Shannon that talked about this being, there's a bunch of things going on. There's valuations, there's the Fed, there's the carry trade, all kinds of things that are happening. Maybe even Buffett playing a role.
Okay, watching supply overhead.
Before I talk about that, answer your question, I just want to make sure you guys are watching the 2-year, which is kind of the yield has come screaming back a bit of a
nice volume. Nice volume on the spiders.
And I think a couple comments, perhaps the comments from Goolsby this morning that were a little less alarmist than maybe where the market was priced in the first order. And then that ISM service index that I think brought things back a little bit and said, you know what, maybe we're not careening out of control towards a recession. And I think
all right, we got some supply at 523. If we get through 523, we could see some nice rally. We're already up quite a bit. ATR for SPY, ATR. Okay, Dexcom is 94% of its ATR. Let's see, SPY. SPY is trading 136% of its ATR. All right, we're pushing back up.
I certainly think the Fed is going to come back, step back from all and say, okay, what do I really know? And I know that there was a weakening in the
SPY 15-minute looking good.
Some of that might have been linked to an influx of workers to the workforce. We've talked about that over the last couple of days. And they're still at 114,000, which is in a normal time, that's not a bad jobs number. The ISM services coming back a little bit. It's not very strong, but it's not
Okay, watching the SPY, changing direction.
All of that, which is why the Fed chair just
High tick alerts, high tick alerts.
Because that's what he said he thinks.
Okay, we're starting to see longer time frames, 15-minute, 30-minute. We're starting to see some green signals, some green shoots, if you will. All right, so we got the 15-minute SPY crossing over the EMA cloud. You got cyan colored bars on your TTM, looking for this to continue. Okay. Looking better. All right, let me go check Money Magic's levels on SPY real quick. SPY. Money Magic levels on SPY. We got 541, 540. Okay, so we got a ways to go to get up to those levels on SPY. 540, quite a ways to go. We're gonna see halfway into the gap, maybe a divergent range, as Steve Hammer likes to use over at HFT Alerts. A 50% move back into the gap, perhaps, for an area to sell into. 523 is a level we need to pay attention to. 523. We're coming up against it right now. 523. 523 going once, going twice. Let's see if we can get through 523. Note the volume. Note the volume. Watch the volume. See if that picks up. See if this volume picks up as we start to rise through this area. 523, there's supply right there. We'll step away for a couple minutes. We'll come back. 60 Minutes still has a lot of work to get through the EMA clouds. TTM has turned yellow, headed towards the zero line, but we're running up against supply right now. Okay, we need to get through this level right here. We're running into some supply. We're running into some supply right in this area. If we can get through 523.50, 523.25, 523.30, that should do it. We'll erase this block of supply that's overhead. Look for a follow through. Then we'll shift back to the 15-minute chart. 15-minute chart shows a lot of potential into the gap. There's a gap over there from this morning. That wick is the last of that selling into the morning bounce. Okay, so we're moving a bit higher volume. We need to see more volume picking up. All right, so got more shorts covering. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's Monday, the 5th of August, 12:30 approaching on the East Coast, the best coast, the coast with the most. I'm your host, and I'll be here with you until 4 o'clock, 4:15, perhaps at the latest. I need to cut the grass, but I don't know that I'm going to have a chance to do that. I've been out for a few days, go and visit mom. Got back midnight last night. I don't know what we would do without Uber. I don't know. $25 door to door from the airport to my house. It's only about 15, 20 minutes away. But man, that's so convenient, not having a long-term parking or have somebody pick you up in the middle of the night. You know, beautiful. Speaking of Uber, let's go take a look at Uber. This guy that picked me up last night, nice Indian fella. Uber. Okay, so that's at 54. We'll watch that one. Uber. SPY continuation, looking pretty good here. High tick alerts continue. That's indicating that we could see more follow through. High tick alerts. High tick alerts. More high tick alerts. $5.23 SPY. Okay, we're pushing through 523. Looking good. Looking good. All right, nice follow through. Nice volume. Nice volume. First couple of 60-minute bars this morning. Okay, looking good. Pushing through 523. Looking good. Okay. Change of character here. We've broken above some pivots. Watch the volume. Watch the volume down at the bottom there. Watch the volume on a push higher. What an opportunity. If this follows through, people piling in more and more as we continue this trend reversal. Way overdone. So it appears way overdone. Whoa. Whoa. Big change. Big change there, Grover. Thank you.
Right now, probably it has to be the best performer of the day after the bell, and it's a powerhouse in AI, and it's a leader in the networking side of it. They've had great acquisitions, and AI, things like BNC, Inware, they're going to drive the revenue here in quarters to come. So I'm real excited about increasing their stake there.
So it just sounds like you feel across the board that this was overdone today. To your point, not only is Broadcom now positive, AMD's up near 5%. On the day as well. VIX is way off of its highest levels too. We're talking north of 60 earlier. We're at 30, a little less than 35 now. CrowdStrike, by the way, which has been very much in the news of late, is up 2%. So there are some, pockets, albeit
Okay.
that are finding some green today.
Yeah, absolutely. I think there's next brings opportunity, and I've been on the show a couple of times over the past month or two, saying that my fear of a black swan would be a Japanese yen move, and to the degree that it has. Even though I forecasted it, it's tough to time, it's tough to manage, and really this is where you want to be able to have some cash on the sidelines, and something like this takes place, and you're putting it to work in these opportunities. But I'm not gonna go out and take a low is in. I think we could potentially shop around, but I feel very confident taking a position here or betting that we have a significant type of low that we could really work off of through the rest of the year.
All right, I appreciate it. We'll see you soon. Thanks for calling in, Bill Baruch. Joe, you want to comment on any of that?
Look, I just think for the viewers who are sitting at home, have a 401k, have a long-term investment portfolio, you have to take comfort in several things that you've heard today. Number one, the Federal Reserve is restrictive. They're going to fix that in the coming months. Number two, are we teetering on recession? Everything that you've heard from Jimmy and others is suggesting a softening in the economy, but not a hard recession. And then lastly, the most important thing, the ballast in your portfolio, which is bonds, it's working today. And if bonds weren't working, I'd be more concerned. For the rest of you that are out there trading and speculating on the market, pricing and liquidity, those are the two words that are most important today. And that happens when every asset class that has leverage is being sold off.
Well, if you were out there clamoring for a pickup in volatility, you're getting your wish. And then some, maybe a little more jarring than you want. Nonetheless, you've got your volatility.
Okay, SPY.
The big mountaintop peak just after the open, or right around the open this morning. Bertha Coombs is following everything outside of the equity markets today. Has the news for us. Bertha.
Hi, Scott. Vice President Kamala Harris will set out this week on a 7-state campaign tour. It'll be her first appearance with her running mate, who has yet to confirm that they're expected to make their debut tomorrow in Philadelphia.
Okay, Tesla holding up fairly well. NVIDIA looking for it to run towards that 115 level. We saw those calls trading last week, the 115 strike for Friday, this Friday, this week's options, the 115 strike calls. Watching the S&P, currently fading a little bit from the high there. All right, we got some supply in this area.
And UK Prime Minister Keir Starmer condemned an attack on an asylum seeker hotel in northern England, calling it far-right thuggery. Starmer convened an emergency security meeting saying a standing army of police will be set up to deal with rioting that he blames on far-right agitators. That violence coming in the wake of a mass stabbing at a dance class last week that left 3 girls dead and was then falsely blamed on a Muslim migrant through an online misinformation campaign.
Wow, civil war in frickin' UK. Jeez. Okay, looking for higher lows. Looking for a higher low in the S&P. Okay. I got to take a 2-minute break. Give me 5 minutes. I'll be right back.
Market was sideways and moving down slowly, and there was a lot more concern around recession and things like that. And you can tell that right now we have more market fear than we did at any time during COVID or during the COVID sell-off or during the 2022 sell-off, which is really interesting to see that was that high on just market fear in general, which goes back to the fact that VIX hit 65 overnight, the highest it's been since COVID or 2008. So really high numbers. A lot of people are scared. Now, when it comes to recession, the set of charts on the right, we're actually nowhere near the peaks of COVID or the 2022 selling, but we are higher than the start of each one of those. So if you can kind of mark the start of each one of those selling periods and see how the recession fears were being talked about, they're less than they are being talked about now. So now is higher than the start of those, nowhere near the peak. So hopefully we stay under those peaks. We'll see. But the short term, again, those charts on the left, much more fearful right now, the market is, than we were anytime during COVID, anytime during 2022. So there's a lot of short-term fear, and there's a lot of good reasons. It's not just, hey, we got a little overvalued and there's a bit of a correction. You've got jobs data, you've got the carry trade unwinding, you got potential issues with Iran. All of that's feeding into this narrative, and plus it's an election year, so you're going to roll more dice, of course, coming in. It's got everyone's worried about the very short-term stuff. So it's an interesting time to be trading, and you guys nailed it on the last segment. Stay risk defined. That is just that's like the holy Bible of trading right now. Don't put yourself into a trade that you could get blown up on. But again, just wanted to highlight this data. You guys take a look at these charts. If it's unclear, let me know, and I can answer some questions. But the idea here is short term, we're more fearful. The U.S. is more fearful, and long term on the recession. The start of it is scarier, but we're nowhere near the peaks of COVID in 2022.
Landon, I see exactly what you're saying and what your graph shows. How are you getting this data? What do you guys do to control, to grab it and put it up like this? Are you reading? Where are you getting it from? Give our viewers a little background.
Sure. So it's much like the when we look at Apple data and we say people like iPhones more than they did last quarter, whatever it is, we're actually reading social media posts. And I say reading, I mean we're having computers read them. We're looking for sentiment. So for the market fears, we're looking for phrases like selling shares, sold out, markets crashing, things like that, or buying puts, anything where people are indicating that they're very afraid of a large move to the downside. And then when it comes to recession, it's a larger basket of words. But it's just generally speaking, people talking about recession fears and all the different ways that can happen. So we're actually looking at natural language of social media posts and what are people saying. And then we analyze that for cues that tell us this person is bullish, this person's bearish, this person thinks that we're fine, this person thinks that we're headed in a bad direction with recession. And all of those get combined, and we can go back and slice and dice the different time periods. And that's why we thought it was appropriate to bring up the two most recent sort of fearful times that we've seen over the last 4 or 5 years.
Yeah, Landon, I want to focus on the recession part of this because I think this is really telling and kind of important. And because Kevin and I are so old and we've been through so many cycles within the markets, when you look at the start, both in COVID and the 2022 selling, they're really, they're not elevated at all, right? Isn't that typical, what we've seen historically happen where the markets get too comfortable? If you were to put your data for the recession fear on now from maybe mid-July or from March when we were just rallying in a straight line up, would that have been really low then, with basically giving you a telltale sign that, hey, we've become too complacent? Because I think that from Kevin and I, in our experience in the markets, that's typically what happens, right?
Yeah, it's right. I mean, people are the most comfortable at the top and the most scared at the bottom, right? And you're absolutely right. I mean, the recession fears, they have started to tick up a little bit over the last few months, but when you compare to what it is now, I mean, you're talking like 10, 15%, right? It is very, very small, and that's moving up. But then this is just a giant spike, and I think everyone kind of had something in the back of their mind, like worrying, like, inflation and jobs and economy and are we headed in the right direction? All of that kind of stuff is in the back of their mind. And then when you get any kind of spark, right? And we've got some sparks. We got the jobs, we got the carry trade, we got Iran. You get enough sparks, and then all of a sudden those fears are instantly validated, and now they're sure that we're headed for a recession. So I would agree. I think it's concerning that people are more certain of a recession or more fearful of a recession now than they were at the beginning of the COVID lockdowns or at the beginning of the 2022 selling, which again, that one's kind of in there just for reference. It's obviously nowhere near as big, but we can't go back to 2008 on social media because it really wasn't around very much. I mean, the sample size is way too small. So I think 2022 kind of just shows you, when you have a market sell off over that extended period of time, this is what can happen. That's how bad it can get. But we're much higher at the beginning of this, whatever this ends up being, than we were at the beginning of those two.
Yeah, that bright green bar on the right. Real quick here, Lane, before I let you go, is there a specific time frame that these take place in? Whether it's 6 months between those bars, or is it a year? Do you have any clarity on that?
Sure. So for the start and end, we honed in on the couple 2 or 3 trading days that mark the beginning and end of each one of those, and then for the peak, we found the largest value in between. For the now period, it's today, yesterday, the day before, and so it's basically over the weekend and today. For the beginning, I think it was I went off the top of my head for COVID. I think it was February 20th, and the end was March 23rd, I believe. And for the 2022 was early January and then October, some date in October. But we basically found when the VIX spiked, when the selling stopped, all of that, and marked those on the calendar and went back and looked at and compared those dates.
All right, great data. Thanks for pivoting today on this. I think it's really an important discussion. Appreciate it, Landon.
All right, guys. Thank you.
All right, that's Landon Swan, co-founder at Lightfolio, breaking down fear, market fear, recession fear.
Fear will make you do things that you don't always want to do.
Yeah, and remember, as much as markets change, Kevin, they remain the same as far as historical moves and reactions. A lot of times, not all the time, but a lot of times. But we wanted to get into a discussion about Amazon, which is down significantly after that earnings. They fell over 8%.
Dexcom following through.
Now the stock's only up about 9%, or about 7% so far this year. So we've given up some gains. Look at the month; it's down 14% this month. It's below its 200-day moving average.
Yeah, I mean, the NASDAQ, large cap tech, they've all sold off pretty significantly here in one different, time frame or another. Amazon got hit hard after earnings. It got hit hard again this morning, down to $151. Now it's $160. But these stocks opened lower and got hit, and now they're recovering. But I mean, Amazon's still down 4.4%. Still not having a good day at all.
Yeah.
So
it was down 150, 160.
Yeah, 151. There's a lot of these. If you look at the Magnificent Seven and large cap tech, some of the lows on the day today, right after the open, were low lows. Yeah. I mean, people are looking now going, wow, what did they trade there? Probably right on the open.
Yeah, 8:32, 8:31 Central Time. All right, Ken, you got an example there? We've actually got a market maker move in there, nearly $6 either way because of that heightened implied volatility in the near term. So how do you want to look at this from an example? Trish?
All I did was, if you're looking to do something, remember, Amazon does not pay dividend. So you can use options to get long deltas without having to worry about dividend exposure or missing out on any dividend. So the paper money trade that I looked at here, going out to August 30th, so about 4 weeks from where we are now, I bought the 160 call, sold the
All right, Dexcom looks like it wants to continue. Watch Dexcom. Dexcom. Nice follow through on Dexcom. Volume. You know what we're looking for? We're looking for VWAP up and to the right. Volume coming in. Big move on Dexcom. Look at the relative volume. Okay, nice reversal underway in Dexcom. Day 7. Day 7. All right, so it looks like we're going to roll over in the S&P. So be careful with your S&P.
Move that August 30th date closer. If you want to do it more short term, maybe 1 or 2 weeks. You know, this is the 3-weeker here. If you want to lower that net debit, move that long up.
Yep.
So yeah, this is one that just gives you some deltas. You know, if Amazon were to rally higher, it's in the calendar spread family. Careful about the long vega in the calendar spread. Not just bounce are pretty high, but it's just a move that it gives you upward direction.
Yep. Let's
I
bring
can talk for
Yeah, we talk a lot about these going into earnings because implied volatility in the near term options are so elevated.
It's just a good way to risk define play delta.
Right.
Without that maximum exposure code. All the exposure you have is what you pay for.
Yep. It's buying the 160 call on the August 30th weekly cycle. That's 25 days to expiration. Buy that 160 call, basically at the money. Sell the August 9th weekly 170 call. $10 wide bullish call diagonal. Paying roughly, we've got $750 debit on there. It's trading closer to $7. So you can get it cheaper on that one. $700 in risk. What you pay, what debit you pay is your risk. Break even about 163 because you're going to have the opportunity when the market's open to roll or adjust that short 170 call. But staying risk defined on this one. Also, you have some assignment risk on that short 170 call.
Dexcom is going. All right, look at the volume. Dexcom volume.
This just takes advantage of maybe a grind higher, maybe just like Alex said, to fill that gap.
There goes Dexcom. Look at that. Ooh, nice.
Sessions there, or at least not even fill completely the gap, and then creating ability to sell that higher vol in the August 9th weekly options that expire on Friday on your short option, and then what you're buying. There's some dispersion there, which remains, which is basically the reason why you're paying less than the width of the call diagonal, about $7 compared to $10 width of that. So a good look at a call diagonal there in Amazon. All right, let's take a quick break. When we come back, we're going to take a look at NVIDIA. Chipmaker stock has rallied over 100% this year, despite the massive slide that we've seen over the last month. Stick around, Fast Markets will be right back.
Low ticker at -800.
Looking for higher lows. Looking for higher lows. Futures just lost to 105. Watching that. Okay, let's see what these guys are talking about.
Particularly those who are underweight fixed income, begin to think about better ways to provide total return to their total portfolios.
All right, big candle on the daily there. Dexcom starting to move.
Coming up at 1:10 p.m. Eastern Time on ETF Edge. We'll talk about treasuries, money market, corporates, and high yield. That's etfedge.cnbc.com. Scott, back to you.
Bob, thank you. That's Bob Pisani. Hope you watch ETF Edge. They're coming up top of the hour.
That was interesting, I thought. The comment from Snyder Pimco, Weiss, the time is now to cash out of cash. I think as yields are coming down, you have so much money piled on cash. And, you know, whether it's the time is right to go into fixed income or not, that's up for people like you to say. But what about that notion? The time is now to cash out of cash.
Assuming he didn't mean right now today, I think he's right. I think generally speaking, yeah.
All right, Dexcom looking really strong. Dexcom.
It's coming back. It's not fully back.
What we look for is an upward sloping VWAP. Upward sloping VWAP. high relative volume. You can see the volume is picking up here. Volume's picking up. Okay. Look at the buying at the open here. Look at the volume bar, the horizontal volume bars at the open. Looking for horizontal selling bars overhead. Don't see anything until we get up at higher levels. So right now it looks pretty good for Dexcom. Okay, I got to take another couple minute break. Get my son some lunch. I'll be right back. Give me 5 minutes. Looking for dips to get bought on the S&P. Dips. Looking for higher lows.
Is there still value? I'll get your opinion too, Shannon. Is there still value to be had in the bond market, particularly, let's just say, the short end?
Taxable fixed income market, without question, yes. In the fall, we began to urge the viewers to move out of cash. The last opportunity that they had to do that was in April. And remember where we were in April. That's when the Federal Reserve kind of got a little skeptical about the improvement in inflation because we got some uncomfortable readings at that point. But that was your last chance. Jeffrey Gundlach did a phenomenal job over the last several months talking about the real value being in the taxable fixed income market. I think there's more to come. I think the Federal Reserve is too restrictive. They are going to lower rates. It's going to have a positive impact.
Low tick alert -800.
And it's much needed.
I was just going to say, this is again, we were talking earlier about moving away. There is opportunity outside of just treasuries. To Joe's point, there's going to be opportunities in the credit markets as these spreads widen. So I think that you need to look outside of cash, but we've been talking about lengthening duration all year. And so if we start to see even rates tick up again a little bit as some of this is digested, that might be, if you have not made that move, and an opportunity to do so.
Yeah, I mean, the one thing I want to say about fixed income, for me as an equity investor, it's ballast. It's ballast to offset the volatility in the equity markets, but you still have real return in fixed income. So this is a good time if you're looking for ballast to buy bonds. Rates are going lower, in my opinion. So, to the extent that you want ballast, that's where I start from. Otherwise, Steve's exactly right. This is a time to buy equities.
We will have more on this major market move just after this break.
Looks like a little consolidation on Dexcom up there at the high. Little consolidation.
Discounting or looking at these stocks unfavorably right now,
but there's some valuation that's very compelling. I'm not saying Micron is, but I'm using an example that they're just selling everything indiscriminately that's tied into the data center, the high bandwidth memory chips that are in those data centers. But again, they may be first rebound contingent upon perhaps a market that settles down, which I don't think has settled down. Obviously, volatility's collapsed since the opening today. But right now, I think this market is still very tenuous going into maybe September or even early October. So therefore, NVIDIA is an easy one to grab cash from. And like I said, you have to be willing and able to take risks all the way down to $80 because I see that as potential next level support.
All right, great stuff. Great backdrop for us here, George. Appreciate that, George Sella, Senior Markets Correspondent.
Got some big earnings to talk about as well. Don't forget about those. Starting, Joe, with Palantir, which reports after the bell. Stock, like many of these other growth names today, is still lower, but off the lows of the day.
Yeah, absolutely. Part of this carry trade where you're seeing the AI adjacent names being sold off over the last several days. It touched the 200-day moving average this morning, which is rather interesting. On earnings, you need to see the commercial segment really have strong growth to the degree of 40 to 50% attributable to AI. We know the strength in the business as it relates to the government. It's been the commercial segment where the excitement's been for investors.
What a time for Uber, Weiss, to report. It's coming tomorrow, okay? Stock's down near 20% in the month. I'm sure the chart today probably looks like a lot of the other growthy names. Let's throw that up. Not quite as a sharp of a rebound, but there it is.
Well, look, I sold mine, I forget how long ago. I sold it, came back in, sold it again. Concerns about the consumer. I mean, it's an expensive product, and versus mass transportation is extremely expensive. Plus, if you're going out to restaurants less, and if you're going shopping less, doing more online, I just think it's going to be challenging. So I could be wrong, but the good news for me is, selfishly, even if it has a great quarter, it's unlikely to reach the level that I sold it at. So
You want to comment on that one too?
I've said I'm concerned about Uber. I need the return of profitability in this upcoming earnings report.
Amgen, that's tomorrow.
Amgen's an interesting one, all-time high recently. We want to hear about how they're integrating Horizon Therapeutics, and they're also introducing their own weight loss drug, Maritide. They're focused on something that would be less frequent for the users of it. I'm long Amgen personally.
Disney, this week too.
A lot of moving parts here. How weak or not is the theme park business? They better not move back the streaming profitability target of this calendar quarter for streaming. And then, of course, ESPN and Hulu. I mean, there's a lot of questions that they can answer, and I hope they will.
All right, we will answer final trades. We'll do that next.
Low tick alert minus 800.
Investor checking.
All right, more low ticks. Looking for higher lows, not a reversal of fortunes. We got about 35% into the bounce on the S&P, taking the close down to the low this morning. We've got about 30%, maybe 40% on the bounce. VIX is still pushing higher. Lots of volatility.
Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
RKT, Rocket Mortgage.
No noise from bell to bell and beyond. Available anytime, anywhere, on any device.
RKT, a little fade off the highs. Inexpensive. Looking for an ABCD pattern. So that looks like A right there. B, maybe B and C. Rocket, mortgage, finance. Let's look at the weekly. Okay, if the Fed starts lowering rates, this company should continue this trend.
Trading at Schwab is now powered by Ameritrade, giving traders with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders.
So we want
And with
final
guided
hour.
learning.
You can bet on that. I hope you join me at 3 o'clock with closing bell. We'll do it with Dan Greenhouse, with Stephanie Link, Edgar Denny, Richard Fisher, Aswat Demoter, and Kate Rooney. We're loading it up because we're going to have a big show. I hope you join me for it. That's your final trades. Jimmy, what do you got?
AbbVie, very strong healthcare provider, excellent valuation.
Okay. Steve Weiss?
Leidos, look, we see what's going on around the world in defense. It's stable earnings. Defense spending is not going to come down. So I think this is one where we definitely want to be.
Jen?
Healthcare stocks, we anticipate second half sales growth for the sector, but also a little bit of defense here.
Okay. Good stuff. Joey?
Earlier this morning, KKR traded down to 98.25. Put a buy stop down there, see if you can get some on the second sell-off.
I appreciate everybody being here. I know your phones are ringing off the hook from clients, et cetera, but we will see you at 3 o'clock. I look forward to that.
Very aggressive, ominous music, CNBC graphics, trying to get people to tune in, to sell them. Okay.
Yeah, I guess I'm someone who uses like humor to deal with things. So I was gonna say, has anything happened today? But it might be too soon. So not enough time passed. Obviously, a really, really red day. We're gonna take a look at a heat map in a second. When we do, you'll be able to see just how broad the selling is. Now, to Jenny's point, we got now. They're not as bright as they were this morning. So that's the one, I guess, silver lining if you're looking for one.
Rocket mortgages.
Ugly overnight. A lot of it's stemming over from Japan. It really, really got out of control. I don't want to say that it was overdone. I don't want to say that it was underdone. I don't know yet. We'll find out in time. But it was getting crazy. I mean, you saw VIX futures 37. You saw spot VIX like 70. You saw Topics and Nikkei down 12%. You saw a global deleveraging happening before the open on Monday. In the overnight hours of Sunday for futures, there just wasn't enough liquidity to handle all the selling pressure, and it led to this. Now, this morning, these were way brighter. They're still very red. They're still very bright.
August 30, 75 call.
What's your point?
August 30, 75 call on Dexcom.
It was down 700 points lower than where it was right now.
I want to buy some. What's McDonald's doing? I want to buy some McDonald's. All right, so we're sitting on the 200-day. Could be higher tomorrow. I'm going to wait a day. I'm going to wait a day on Microsoft. McDonald's.
Day of selling, but we would have erased almost $2 trillion in market cap as of like 9 a.m. here Central Time. So it's been a wild day. Obviously, hoping to see where we close, maybe a little bit easing off of even lows currently we're seeing at around.
Okay, so SPY, we identified a level that would probably run into some resistance. SPY. Okay, thought we would run into some resistance on the 5-minute chart at 523. We in fact did. All right, so now we want to see a bounce back through this level. Maybe tomorrow, maybe today. Okay, so we can see where we ran into some resistance.
Tesla had its own news as Elon Musk is allegedly filing a lawsuit against OpenAI and Sam Altman in the District of California. We'll look more
In case you're interested in these particular scripts, they're pay for scripts. It's like $20 a month. It's this script right here, invite only. So it's the Lux Algo price action concepts that I have. Okay. Just testing it out. It's got a 30-day money back guarantee. Just checking it out. They have a free version too. That's pretty good. Free bird.
This feeling on Friday, this uneasiness about where we left things in terms of the market, and going to the weekend, there was chatter geopolitically, and I kept looking at Bitcoin because it's the one thing that's open, and it was mostly okay. It was mostly hanging in there until about a couple hours before the futures were about to open, and it rolled over and there was a liquidation of a ton of coins. You saw it in Ethereum as well, right before late into Sunday. And so I think it did kind of preempt and kind of foreshadow ultimately what happened overnight. So looking forward to get Kevin's thoughts on that. Looking forward to the Palantir preview as well. And then for upvote, downvote, non-endorsements, non-recommendations, a couple of these names, I think, had there not been the macro backdrop and the big global sell-off today, Jay, these would have been the stories of the day. So there's plenty to get through. Let's start with one of those.
Okay, looking for a higher or low, looking for prices to stay in here. Would love to see prices stay above VWAP. Remember, what we want to pay attention to is the Japanese yen to Australian dollar pair. Okay, we want this to move lower. We want this to move lower, and it's moving lower. So this is actually going to be a nice tailwind for the indices if this continues to make lower lows and lower highs for the record. Okay, so if this continues lower, okay, if we get this is the Japanese yen, Japanese yen, Australian dollar pair. Okay, so this is the carry trade that everybody's been hemming and hawing about over the last few days, which saw a dramatic move as Japan affected interest rates. All right, so that pulled back. It's pulling back now. So that looks good. So if you reverse this and look at the Aussie carry trade to the U.S. The Japanese yen, you can see this dropping. Now it's reversing, putting in a hammer. So both of these are saying the same thing. They're looking for a follow through. No promises. Let's see how this goes by the end of the day into this week. Okay, so they're talking about the Nikkei right now. All right.
Person who borrows yen, well, you're borrowing cheap. You're getting
He's talking the U.S. yen, not the Aussie, which showed the biggest move.
So you're making money on both sides. Yep, and here's the yen weakening to support that all the way really here through its peak just about a month ago. July 10th was when the Mag 7 peaked. We're down 20% since then. Similar move here. The yen has gone straight down to about 144 today. What do we watch for now? So I usually about 13%. It gives
All right, so
up to 15%. And then, of course, the global growth concerns.
RKT, rocket, RKT.
Everything came together.
All right, fading from the highs, looking for that to continue. Rocket. Let's see what the calls look like out in, let's say, January. Let's see what January looks like. Calls. Not too bad, actually.
That's part of the global backdrop. So let's talk now about how real the recession risk is for the markets here in the U.S. and whether the Fed should get more aggressive with cuts because of that. We have team coverage from coast to coast. Steve Leisman is here with a dramatic turnaround in the Fed's outlook. Rick Santelli is tracking Treasury yields as they slump across the board. Diana Olick has what that means for mortgage rates. And WaFd CEO Brent Beardall has the impact on lending in the regional bank sector. We'll close things out with KKM's Jeff Kilberg on whether today's weakness is a buying opportunity. Welcome to all of you. And Steve, let's start with you. As people are calling today or speculating on whether there would be an intermeeting or emergency cut, what are you hearing?
Yeah, that was somewhat priced into markets. It's not my expectation. Look, Rick is going to offer you more detail on this in a minute, but the 2-year yield has reversed course a bit since our interview this morning with Chicago Fed President Austin Goolsbee and that better than expected ISM service index. It leaned against the idea of an imminent recession. Still, there have been, as Kelly said, dramatic moves in the Fed funds market. 84% probability of 50 in September now. A little bit less than earlier this morning, but still an odds-on bet for a 25 in November, and then come back with another 50 in December. 25 in January. Added all up, about 150 basis points of cuts built in through January for a market that, I don't know, a couple weeks ago was looking for maybe one cut this year. It's pretty aggressive, but a little less aggressive than it had been this morning. Goolsbee wouldn't rule out an emergency cut from which there is some pricing in the markets, but he also didn't say it was imminent. He did lean against the market's exuberance for imminent cuts.
You look at how the market reacts in its predictions of the Fed funds rate, there's a massively more volatility in the market reaction on a day-to-day basis than in what the actual moves are.
All right, let's look at the forces at play. The unwind of the yen carry trade, just a great conversation right there between Kelly and Peter. But one thing I can add is that we don't know how big that is. We don't know how much there is to unwind. I'm pretty sure that the regulators don't know either. You've got the check over valuation and then this sense of the Fed behind the curve. So how far behind the curve and how much it needs to do to catch up is the pressing question. And there's another question. Those first two items there, how much should the Fed react, if at all, to the tech sell-off or the unwind of the carry trade? Maybe nothing at all. Worth remembering. Early last week, Kelly, most forecasts were looking for 2% growth this quarter and this year. The jobs report was weak. Could be more weakness ahead. But up until then, other data points.
Oh, boy.
Recession.
All right, we'll pick up more on that in a moment. Steve, if you'll stay right there. And we'll turn to Rick in the meantime with more on this move in yields. And Rick, the yield curve momentarily disinverted. The 10-year at its lowest level in more than a year. What are you hearing? What does this all mean?
Well, before we get to the charts, I'll answer that question. Many believe that Peter Bookvar was talking about the epicenter of what the conversations around the water cooler are. Wednesday, they raised rates in Japan. Today, we see some of the aftermath of that. And granted, right in between, we had our Fed. But the real counterfactual here, Kelly, is even if the Fed would have done a quarter, the previous meeting, I'm not so sure that much of this would have turned out very different. And I think there's still a weakness in the carry trade. And I would also pay attention to what's going on with the Hong Kong dollar and the onshore, offshore Chinese yuan. There's a lot of liquidations going on there. There's also sort of carry trades that might be in that region of the world. I don't think it's over. Quickly on the charts, if you look at an intraday of twos, what should jump out at you is the low yield today was 364. You open the chart, would it have closed there? Would have been the lowest yield close going all the way back to 722. Look at the intraday of tens, the low was 366. That would have been the lowest yield close going back to June of 23. And as Kelly pointed out, twos, tens spread briefly, very briefly, was positive. It's gone down just a bit. It's now minus 11. And keep in mind, the last close we had of a positive 210 spread was the 1st of July of 22. And finally, tens to boons have never been closer since SEP of 23 than today, which really gives you a flavor for what global rates are doing and how the U.S. kind of leads the pack. But no matter how you slice it, it's an important week. 3s, 10s, 30s, tomorrow, Wednesday, and Thursday, respectively. And right now, 2s, 3s, 5s, 7s are all higher in yield on the day. 10s are basically unchanged. 20s, nobody's paying a lot of attention to. And 30-year bond yields have been the one yield that's been tough to put in positive territory, but its move for lower yields was rather limited. Back to you.
There was certainly a little bit of relief in markets, Rick, when the ISM services wasn't so bad. And I think that's behind some of what you're talking about.
Oh, that was huge.
Yeah.
I brought up the number at 10 o'clock Eastern, and I could not tell you how huge, what a difference that made. Now, many are saying it was prices paid. Sure, but all the components were significantly better. It really kind of made everybody take a breath.
a small sigh of relief. Rick, for now, thanks. Rick Santelli. The drop in the 10-year is partially responsible for the recent plunge in mortgage rates. At long last, Diana Olick has the latest details this hour. Diana, what can you tell us?
Well, Kelly, rates took another leg lower this morning. The average on the 30-year fix dropped 6.
Okay, so we're just watching. Sorry, it's not Dexcom. Watching the Aussie dollar versus the Japanese yen. Okay, so watching these two pair. You want to see this moving lower. You want to see the Japanese yen, Aussie dollar moving. If this is fading even more, okay, this is looking good for the follow-through. Looking for a higher low in the S&P. Make sure you give yourself enough time. I'm not interested really in 0 day at this point. I'm interested in maybe a week out or more.
Your monthly payment was about $2,240. That's not including insurance and property taxes.
Today, that monthly payment would be $1,989. More buyers would also qualify for the loan at today's lower rate. Now, normally news like this would help the home builder stocks, but they are all lower on the day with the broader market concern about the economy maybe overshadowing that rate drop, which makes sense given that for most consumers, a home is their single largest investment. Lower rates are certainly helping affordability, but we are still seeing record home prices, and nationally at least, prices are not coming down month to month, Kelly.
So maybe if you put a little bit more down, you could get some quotes in the fives. You think
Okay, Japanese. We want to see this continue. All right, so I'm not doing much of anything. You don't always have to be trading every single day. You want to look for your best fat pitch. Fat pitch right now is what happens if the Japanese yen, Aussie dollar pair continues to fade. You can see what it's done over the last 2 weeks. This has put in an incredible move. So we're looking for this to reverse. Okay, Eiffel Tower looking kind of pattern, very extreme. RSI is rising. Look for it to turn back down. Now, if this starts to pick up again and start to rally, that would be a bearish signal. So right now, watching the S&P for the bounce. Let's see what the 0-day looks like. 0-day. I'm not really interested in 0-day per se. I'd like to see a higher low.
Great news for banks is this is not credit related. Credit remains incredibly strong. Liquidity is high. Capital is high. And as you just
I'd like to see Tesla rally a bit more. Tesla. I'd like to see NVIDIA gather a little bit of steam. I'd like to see that on NVIDIA. The 115 calls were very active for this Friday. Last Friday, Leastar picked up on that. McDonald's, looking for a buy on McDonald's. Right now, the volume just tapering off. Looking for a B and C pivot on McDonald's.
Is the spread on mortgages over 10 years. Traditionally, that's been about 200 basis points. Today, it's about 240 basis points. And I would expect that to come in, which is great news for consumers.
That's what Steve has been waiting to hear.
Been talking about that for a while, but Brent, I don't understand what you're doing here, because isn't your phone ringing off the hook with people wanting to refi their loans today? I mean,
I always tell you a favor.
What?
No, that's absolutely true. And the great news is banks are
Bitcoin also looking for that to make a higher low. Bitcoin looking for a higher low.
And we are not seeing any.
So the way I would proceed after a big meltdown last week, the way I'm going to proceed is, I'm 89% cash. I was 90% cash at the open, just a 1/10% shy of 90% cash across multiple accounts. I'm only going to be working on my trading account. So trades that I'm taking this week will be only in my trading account unless I tell you otherwise. The weekly TRBCX, which I'm very interested in getting back into a larger position, it's 3 weeks down from the highs. I'm waiting for a base. So look at April. April gave you a nice little reversal signal. Need to see that at a minimum to even think about adding to TRBCX at this point. We could slip more, so there's no hurry. You should be comfortable with the idea that it's going to take a few days to get a better signal. We want to see good signals. We want to see data-dependent signals. We don't want to be taking, at least I don't. I'm speaking to myself. We want to be taking data-dependent signals that show high conviction on the part of institutions. That'll show up in volume and money flow. Let's just take a look real quick at the sectors, and I'll show you what I mean. Okay, sectors need to perform. They need to show. Actually, before I lose my train of thought, let me go take a look at number of new highs versus number of new lows. Okay.
At the lowest income levels of your borrowers, the lowest credit scores, you have not seen an increase in delinquencies or a worrisome increase?
We have not to this point. Now we have what I believe is very high credit quality to begin with, but the reality is the consumers are being very proactive in terms of managing their credit.
Okay. NYC. Let's go. New highs, new lows. Okay, so this is the first time we're below the zero line. Okay. That needs to change. Advanced decline needs to turn back up. That needs to be changed. That needs to change. Looks like the New York Stock Exchange is headed to the 200-day. This is a composite. Okay, 2,000 stocks. So at this point, let's see if I can show you an example. Well, the last time we sold pretty hard, okay, back in April, March, April, we had several days down. It took us 2 or 3 days to bottom. Right now, we don't have that. So at least wait until you start to see prices slow down and we start to produce blue elder sticks. Once you do that, then we've got a better opportunity. Right now, the conviction is to the downside. So we should assume that there could be more. And depending on what the Aussie dollar, Japanese yen pair tells us, this is another part of the signal. Okay. We're looking for this to continue this fade. All right. We also want to see junk bonds hold on to the 21-day, the 50-day. Sorry. We want to see if junk bonds hold on to the 50-day. All right. So we got 3 components there. Japanese yen, US Aussie dollar pair. The junk bonds, we want to see that hold at this level. Okay. And we want the New York Stock Exchange to show some blue elder sticks. All right. So that's going to take a couple of days. Intraday, you can trade your hearts to your heart's content. Intraday, oversold conditions, buy the low, sell the high. But I'm looking at swing positions right now that I'm uncomfortable with. So I'm not going to put any shares to work until I can see concrete evidence of at least a base forming. Okay, so we broke this trend line. Let me just annotate what I'm thinking here. Okay, so could be basing right in this area. Okay, so that's what I'm looking for. Okay.
Go answer the phone, Brad.
Advanced decline. Okay, advanced decline could bounce here.
Really appreciate it. Ben Beard, always a lot. Ben, thank you as well. As you mentioned off the top, Wall Street's fear gauge, the VIX, briefly hitting its highest level since the height of the pandemic, a level my next guest was hoping for when we spoke on Friday. So now he says this is a buying opportunity. Here with where he's adding to positions, Jeff Kilburg, founder and CEO of KKM Financial. He's also a CNBC contributor. Jeff, walk me through the last 24 hours.
Well, Kelly's been extraordinary.
Jeff's pretty good. Jeff on CNBC at the moment. Jeff's pretty good. It looks like the SPY wants to turn here.
I'm not a contrarian, but what we saw back in June and July, that leadership, that top 10 stock.
Okay, let's go take a look at the New York FANG index. These 10 stocks, we'd like to see these bounce. I'd like to see these bounce. New York FANG index, we want to see a hammer, hold, and get back above that 100 period moving average. Bitcoin looking for a follow through tomorrow, next day.
We sold puts going out just the next Friday, regular expiration, collected $16 because of that explosion of volatility. Those same puts 3 hours later, Kelly, are at half. They're at $8. So when you see that type of volatility come in,
VIX starting to roll in. VIX is starting to roll back down. Jeff Kilburg on right now. He's really good.
We get the fact that the consumer is weak. We're going to see more data this week on the earnings, but the VIX, you have to use it to your advantage to mitigate risk, define risk, and also allocate towards risk when other people are fearful.
Do you pick up, for instance, any new positions in the Mag 7?
You know, I think Tesla's a great name. We've talked about Tesla. It's been very volatile. You saw a recent uptick, but that's been the laggard of the Mag 7. I think it makes sense when you see a swoosh down in any of these names. However, NVIDIA, which I've been critical of, from 125 all the way up to 140, I've covered that positions. I'm looking to get long here. Yes, Kelly, you heard it right.
I was going to ask if you were waiting for like the 80 level or thought, it's time.
If you look back in the last couple of years, we came out of that 950 level. Now it's $95.
LRCX.
Back and fill. As an old trader, we always look for back and fill opportunities. So yes, we're going to get excited about the earnings at the end of the month. We are very mindful of
LRCX. I liked what I saw last week. Let me take a look at it, Frano. Ooh, I'd like to see a base. LRCX, I'd like to see a base.
Also, to see the market move higher at the end of the year. There's a ton of noise out there, but you have to separate the noise. And there's just so many volatility tourists there. I have to chuckle. But the more volatility tourists we see and pseudo investment committee folks out there, the more opportunities to buy some of these great names, like some of the Mag 7 individuals.
So that answers my next question. I was going to say, what aren't you doing? It sounds like you're not, for instance, pouncing on the VIX and thinking, okay, you know, time to expect this volatility to last for quite some time, or to be
I think it stays elevated, but we can manage a VIX from 20.
Okay, so here's LRCX, Frano looking at. Let's look at Raytheon. Okay, Raytheon consolidating. That looks pretty good, Raytheon. Raytheon's consolidating. Let's look at General Dynamics. Okay. Let's look at Lockheed Martin, LMT. Hey, Goose, what do you need, baby? LMT needs to come back in and start to base a little bit. LMT, Northrop Grumman. Okay, so LRCX, I like to see this. I like to see this base in this area. It's just like, it feels like it's in the middle of nowhere. Stochastics turn back down. MACD still shows momentum, clearly bearish. RSI is sitting at 20, 30. Okay, LRCX is sitting at 30. I'm very particular. If I'm going to put any money to work, I'm very particular on what I'm looking for at the moment.
But one market technician sees a deeper pullback ahead. Maybe stock in a fair lead has two key levels she's watching.
Okay, let's see. Apple looking for a pushback up to the highs.
And still to come, they call him the Oracle for a reason. Warren Buffett's Berkshire Hathaway shocking investors who learned they dumped half their stake in Apple in the quarter ended June. Shares having their worst day in almost a year and are 11% off the highs now. Apple, I mean. We'll hear more about that from one Buffett watcher next. Plus, Brent crude turning negative for the year, while WTI is at its lowest level since February.
Okay, just keep an eye on this. Keep an eye on this pair. Keep an eye on the Japanese yen, Aussie dollar pair. Okay, this is fading rapido. This is fading quite a bit. Okay, this is fading quite a bit. Okay, so lower highs, lower lows. That's exactly what you want to see. That should lead to higher highs and higher lows. Okay, should and will are two different things, but this is definitely data-driven decision making right here. This needs to continue to make lower highs, lower lows. That's fading the move from last couple of weeks. Okay, so this looks pretty good. This looks pretty good. Let's go with solid candles. All right, so there you go. Let's go Heikin Ashi. Let's go Heikin Ashi. Let's go with Heikin Ashi charts. Heikin Ashi. Okay. Let's go 4 hour. 4 hour. No hurry. No hurry to do anything. Okay, so that needs to fade some more. Okay, that need to fade more. All right, that move started, that trend break started back in July, beginning second week of July, and really started to accelerate when the Japanese financial powers that be started messing around with their rates. The Fed also signaling potential rate cut soon. Watching Apple. Okay, the FANG stock's just kind of sitting here. So keep a chart of the Japanese yen, Aussie dollar pair open. Keep an eye on it. What we don't want to see is the New York FANG stocks fade this move off the low. Shorts covered, new money came in most likely. Okay, we still don't have a turn in MACD, stochastic. That'll be as a function of price. Still a bearish mode for the past 3 trading days. And looking for a bounce. Google's starting to fade a little bit. All right, let's go take a look at what's the sectors. I wanted to take a look at the sectors real quick. Forgot to do that. Sectors. Can of glance. Okay, so here are your sectors. Biotechs, real estate. Real estate holding up very well. Watch RKT, Rocket Mortgage, IYT Transports, not so much. No, none of these look that great. XBI. Okay, XLK, the lows, Doji spinning top, industrials, financials trying to show a hammer, energy, communications, materials. You can see that there's not a lot to inspire at this point. Even the defensive sectors, XLP, XLU, XLV. XLV looks okay. XLY, consumer discretionary. All of these below their 9/21/50 day. And not a lot to look forward to at the moment. Bitcoin. Bitcoin. Okay, watching Bitcoin. All right, Bitcoin on the weekly. You can make the case for a big cup and handle, a failure on the handle for now. Bitcoin, we want to see higher lows and higher highs. Bitcoin, we want to see higher lows and higher highs. Earlier this morning, we told you that if it got above the 20 EMA on the 60-minute, we would look for a follow-through. Okay, so this is early. You're early in, early out if it fails. So we've seen some nice price action to start the day and following through on a 60-minute Bitcoin. All right, so this is a process like a Coinbase is the same thing. Coinbase, that needs to get above the 20 EMA. BITX needs to get above the 20 EMA. Okay, this is still working. Okay, so Japanese yen, US dollar. Excuse me, Japanese yen, Aussie dollar.
He did actually say it at the annual meeting that he wasn't finding a lot that he found attractive. And I do think it's of note. In my view, it's pretty clear that he wanted to de-risk the portfolio. I look at his cash level as a percentage of the total size of Berkshire.
Okay, so watching these.
Since 1990, which is as far back
Okay, so this is going to be key. It was key for the sell-off. It'll be key for any reversal on top of Bitcoin and junk bonds and the New York Stock Exchange Composite. Watching those. All right, I'm going to take a couple-minute break. I'll be right back.
Opportunity now to look through what might be something very attractively priced. What would you add either from what you kind of want them as a shareholder to do or how you're looking at the markets today after this kind of difficult couple of weeks?
I think I would just say you got to keep it in perspective, right? Like at the end of the day, yes, he trimmed some of his stocks, but at the end of the day, he still owns over $274 billion worth of equity. So it isn't exactly the call that it's the end of the world. And I think just like he's a guarantee doing, we should all be doing is looking through the carnage and looking for those opportunities. Mindful of the fact that, maybe we will see a recession. I think that's unclear. But I think you're looking for high quality companies that can make it through. That's exactly what Buffett's doing right now, if I had to bet, and it's what we should do too.
We need the modern day Dairy Queen. What was it, 1999 or whatever, when everyone was buying.com. I think that's when he bought it. So I'm thinking about the deal today, maybe Mars and it's impossible, but it's one of the fun guessing games anyway to try to figure out what he'll do. Bill, for now, thanks. We appreciate your time today.
Thank you.
Bill Stone with Glenview. There are some bright spots in the market sell-off, like Tyson Foods trading at its highest level since February of 2023. This after beating estimates on the top and bottom lines. Meat sales rebounded. Lower grain prices helped cut down on feed costs. The shares are up 3.5%. We'll have more of today's biggest movers on the other side of this break. Don't go anywhere. Time OpenAI wrote a blog post which included some emails from Musk as well, saying there is no founding agreement or any agreement at all with Musk. Musk claims rest on convoluted, often incoherent factual premises. So the drama kind of ensues, it continues. Obviously, Tesla shareholders don't necessarily like when Elon Musk's attention is focused on other things, but can't necessarily say that this lawsuit is what's weighing on shares today. Because if you take a look, the Magnificent Seven is all lower today as the AI trade kind of continues to unwind. And then if you take a look at some of the EV makers, with the exception of Rivian, which is higher today, we're seeing weakness. Lucid is lower. The Chinese EV makers, take a look, NIO, XPeng, Li, BYD, U.S. listed shares all trading lower today as well. GM and Ford also contributing to weakness today as well.
Tesla continues to be one of the most argued about names on the street. I was just looking at the analyst breakdown. It always just blows my mind how evenly split it is. We know there's usually a little bit more bulls in general in the market, but this is about as even across the buy, hold, and sell as you can find.
Yes, unlike the other Magnificent Seven stocks, which are all very, which skew very bullish in terms of the analyst breakdown, Tesla actually has more holds than buys right now. If you take a look, there's 40% of hold ratings and about 36% buy ratings. So pretty even, as you said, but a little bit more in terms of the hold count. Given the fact that Tesla has come off of its highs recently, now down 20% year to date, it's actually trading above or below the median price target of 217.50, but it's still pretty close. It was trading above not too long ago. In terms of other EV news, though, Alex and Jenny, that could potentially be weighing on shares, especially the U.S. listed shares of the Chinese companies. Reuters is reporting the U.S. Commerce Department is considering banning Chinese software and autonomous and connected vehicles in the U.S. According to this Reuters report, the Biden administration plans to propose a rule that would prohibit Chinese software in vehicles in the U.S. with level 3 automation and above. So that would effectively also ban testing on U.S. roads of autonomous vehicles made by Chinese companies. Under the proposal, automakers and suppliers would need to verify that none of their connected vehicle or advanced autonomous vehicle software was developed in a foreign entity of concern, of course, like China. So we know that the U.S. has already sought to limit the entry of Chinese EVs into the U.S. by adding 100% tariffs. And then that clean energy bill makes it more difficult for automakers to use Chinese-made batteries. And so now this goes after, or according to this report, it will go after the software component, which could be weighing on shares of these Chinese-listed companies as well. And one other quick thing that I wanted to mention, bringing it back to Tesla, there was a podcast that Elon Musk was on over the weekend with Lex Friedman. It's been part of an 8-hour podcast where he interviews multiple leaders. And I listened to a little bit, but I have to give credit to Al Root over at Barron's, who clearly listened a bit closer than I did. But he pointed out that Elon Musk actually gave some kind of positive commentary in terms of numbers for Tesla. He said that Tesla will generate sales of more than $100 billion this year. So Tesla generated about $47 billion in the first half of this year. So $100 billion or more than $100 billion would imply second half strength, a stronger second half than first half of the year. Also higher than 2023, which amounts to about $97 billion. So that seems to be getting overshadowed by some of these other headlines today, and also this overall strength that we're seeing in the market. But I do think that's important to point out as well.
Okay, I totally do as well, and I completely think that's been overshadowed. I mean, I could not agree more. I feel like, hey, I guess who knows if they'll hit that target, as they've been one to make promises, perhaps, and they can't always fulfill as quickly as we'd hope, but that's still objectively a good piece of news. So we'll take that for what we will, and appreciate you bringing that piece of information for us. Caroline Woods, Senior Markets Correspondent, as always, appreciate all of the great Tesla insight. So now we traded his name, Alex. And I will say that as far as like liquidity goes, I mean, talk about another name that's seeing some pretty hefty volume today.
No doubt about it. Opened way lower, 185, low of 182, bounced back now to above 200 a share. Just an incredible day all around once again. Say you think that this was an overreaction. You want to, participate to the upside. The FOMO feeling of Tesla has driven that out of us, no pun intended, so many times throughout its life as a publicly traded company. August 205, August 212 and a half, buying the 205, selling the 212 and a half, call vertical here. $3 debit, 208 would be the break even. Have a chance to make a little bit more than that though. Make 450 on this trade. Theoretically there, risk 300. So 1.5 to 1 reward to risk. So a little bit of asymmetry, given that you need the stock to rally about $7 from the current share price just to break even by the end of next week. Certainly possible, but again, you need something to happen. So typically when you need something to happen, we want our reward to be a little bit bigger than our risk because probability is not in our favor.
Yeah, that's a good way to consider. Obviously, probability today not so much in your favor as Tesla's making about a 3% move to the downside here. We will leave it there, though, for our FOMO segment. Now, coming up next time to talk another space of the market that could also lead you to feel FOMO perhaps today to the downside, as that is Bitcoin and the entire crypto world, as Bitcoin futures down about just over 13% here on the session, just trading at around 54, just shy of 55,000. We'll discuss more with Kevin Green, some of the pressure weighing on that space coming up next.
The trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, we could see a nice little move up to 523 again. SPY, nice move up to 523 perhaps, if we can accelerate. SPY 523. Friday.
Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade fluently with Schwab.
SPY.
No noise from bell to bell.
Okay, 0 day is starting to turn yellow. TTM is starting to turn yellow on TTM. Yellow. Still 9 to 1 down volume on the NYSE. 15-minute making a higher low. Looks pretty good. Got blue on the 15.
Yeah, I mean, we are seeing a little bit of clawing back some of those earlier losses. As you kind of talked about, we did see crypto down. We were looking at Bitcoin down about 18% on the session. So moving back to the upside here, trading around $54,900. I think it does appear that there are just a lot of traders are utilizing it for liquidity, being able to sell out of their Bitcoin. Maybe they already have some profits and maybe deploying that capital somewhere else. We also saw a pretty substantial drop when it comes to Ethereum. Earlier today, it was down around 20%. Once again, that one is also pulling back. We're moving back to the upside here. Big touch $2,200. Now trading at around $24.87 right now. So once again, it seems like there's just a little bit of a risk-off tone, maybe some liquidity being taken out of this market, redeploying that capital somewhere else, maybe it's some defensive sectors like treasuries, or even looking at maybe defensive stocks. And right now, I think we are just trying to hold at these particular levels. From a technical standpoint, actually, if we do close, not only just for Bitcoin, but also for Ethereum at these levels, it would be a nice little hammer candle. And if you're looking at Bitcoin, it's still kind of in a bull flag scenario.
Okay, rain bands are starting to come in. Rain bands are starting to come in. Around 4 p.m. should start seeing a lot more rain. Okay, SPY. Just watching SPY.
Via the cell phone as things were kind of unfolding last night. And I had some angst around what was going to happen in the Sunday's Open, but I couldn't have predicted what we saw last night by any stretch.
Dexcom watching. McDonald's pulling back a bit more. McDonald's, Tesla at the high, near the highs of the session. Tesla, Meta, near the highs of the session. Meta, Nvidia, highs of the session. Nvidia, just off the highs of the session. Nvidia, Apple, just off the highs of the session. Did gap down, but near the highs of the session above VWAP. All right, nothing to really nothing jumping out at me at the moment. All the spider sectors are lower at the moment. All right, VIX starting to turn up. No follow through on SPY. VIX starting to turn up. Need to see a lower high on VIX. Volatility is still very high. VIX at 33.50. VIX at 33.50 and climbing a bit now. Okay, earlier we were talking about TLT as a potential place to put some cash. TLT, IGG, AGG, IEF. Okay, so buyers stepping up at the low of the day. TLT after a gap up on Friday. TLT. All right, so this is holding strength. This is holding, so that's got to be buyers coming in and parking cash. Just shy of 100. Okay, AGG, Barclays Aggregate Bond Fund. This is the kitchen sink of bonds. This is what the bond traders use as a reference or a benchmark. IEF is the 7-10 year. Okay, that's faded a little bit. All right. Being I'm 89% cash, I'm not going to do anything at the moment. We'll see if we get a better opportunity or if we hold this level. We lost the 100-day moving average. That was Friday. Here's the S&P 500. Okay, so very large spinning top, very large, very wide price action. 5,100. We're down 10%. 10%. Is that enough for institutions? Well, if it is, institutions will start to add a little bit by little bit, and you'll see price action stay pretty much above the 200-day. We don't have to go down and touch the 200-day, but if we stay above it and start to base right here, that's as good a place as any. Above 5,000. Let me see what Brent has to say. Brent, any updates from Brent?
We got to leave it there. Appreciate it. As always, senior markets correspondent for the Schwab Network. We'll take a short break. We get back. It's time for an earnings preview. We're going to look at a next-gen favorite in Palantir with George Tillis. Stick around. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free.
So Robinhood already shut off 24-hour access. All right. So you can see that right there. Robinhood shut off 24-hour access earlier in the morning.
Have a passion for online gaming or want to explore the space economy? Choose from over 40
Okay, we got to get above 5,400. That's the feet at hand. We need to get above 5,400. That would neutralize gamma. Right now, we're very negative gamma. Possible that we could move lower before moving higher. All right, so the market makers right now, we have to see them unwinding short hedges. Any rallies that we've seen thus far is probably just put monetizing and some unwinding of short hedges at this point. So we need to see a measurable follow through, higher highs, higher lows, and volume pickup. Right now, it's until we get back above 5,400 on the S&P cash. We're susceptible to these bouts of volatility and selling as the markets move lower. You know that in order for the dealers to hedge, many times they'll sell futures, which exacerbates any downward movement. That's why I like to stay in the cash for right now. So it's very much a day trader's market at the moment. Swing traders, I would say, moderate any new positions. Okay. There's no hurry. You could wait until next week. If we get a nice base here and we start to move off of here and we see more conviction, then you have the ability to take some measured risk. Right now, it's too risky. The markets are too risky for, longer term swings. I prefer not to buy shares at the moment. I prefer to have defined risk, i.e. SPY calls or puts, SPY puts or calls with maybe some verticals to reduce the cost basis, and probably out Friday. 0 days fine intraday, but watching that yen Aussie dollar carry trade pair, looking for that to fade even more. Okay, so there's a lot of things that have to fall into place before we start putting money to work. I'm 89% cash across all of my multiple accounts, and all I'm dealing with right now is my trading account. Not doing anything with my retirement account or the wife's or the kids' college accounts. Business account, not doing anything. Just the trading account. That's all I'm dealing with right now. In order to prevent catastrophic P&L failures during tumultuous moves like today, market makers need to essentially be net long puts. Most of these puts are way out of the money. Tiny insurance policies that will most likely expire worthless, but during times like this, these puts start to accrue a lot of value, especially if the markets move lower, dropping, providing delta gains. And if volatility is ripping, then we've got vega gains. All right, so we got the VIX trying to stay higher. Okay, so we're looking for prices to stabilize. Okay, so that won't happen. That won't happen until the market makers start providing better liquidity in the markets. If we see, you can see the gamma model below. 5,000 is a major level of inflection. Okay, that's a good ways down. Also note that I showed earlier. Did I show you this? No, maybe I didn't. Let me show you the anchored VWAP. Anchored VWAP 500 is anchored VWAP. No, that's not it. Anchored VWAP. Here we go. Okay, so here's SPY daily, SPY daily, and anchored VWAP. Note where anchored VWAP is. Anchor VWAP is hovering right around 500. Okay. Note NYMO. NYMO, the closer it gets to minus 100, minus 80 is a good level as well. We could see some inflection. And note the histogram down below. It's all red. All of these things are pointing to keep your cash close to the vest. Keep as much cash as you can. You know, if you're going to day trade anything, be in and out, quick profits. For now, until we see these start to turn yellow and NYMO get down to, say, minus 80, SPY has a possibility to make it down to 500, Anchor VWAP. And a previous pivot over here from April. Okay, a larger head and shoulders pattern. Looks like that could be playing out too. Okay, so I would say for those of you who like to day trade, you know what you're doing, most of you, I'm sure, in the trading room. But as far as swing trades and higher risk meaning multiple days time frame you're thinking about, I would do less of that. I am doing less of that right now. We're going to get an opportunity. Just got to see it first.
They are profitable. They're generating 13% net income margins, about 81% gross margins. So I think that's very compelling.
On a day where the cooler heads are prevailing, one of the coolest heads I know, and George Tillis with some great insights. We appreciate that ahead of Palantir's earnings, George. Of course, senior markets correspondent for the Schwab Network. That's going to do it for Jenny and myself here on Next Gen Investing. Thanks for tuning in. The watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy.
Just reading through some of this again.
In seconds. That means you can stop waiting
Low
and start
ticker
investing in
minus
stocks,
800.
bonds, money market funds.
All right. So I'm not the only one thinking this way. All right. We're not the only ones thinking that we shouldn't be aggressively sticking our necks out at this point. All right. Keep a lot of your cash. Keep a lot of cash until we see clear. We need to see clear signs that hedges are being closed. All right. Wow. All right. So volatility trigger, we want to get futures. We want to see that get back above 55.09. And for the S&P cash, we want to see us get above 54.80. That's a long ways to go. Short term, you're probably going to see your P&L drift a bit lower. I wouldn't focus too much on that unless you're the opposite, 90% invested. Hopefully, over the last few weeks, you've been taking profits off in the strengths, as we had been suggesting, into this trend, the green line, this trend higher. When it broke and prices stumbled below the 921 day, that was reason to get more aggressive and take some risk off the table, fewer positions open. The 100-day didn't hold. So today we're watching how this unfolds. When we start seeing hedges close, it's going to be pretty obvious. We'll see price action firm up. For now, limit your exposure. Unless you're a hound for risk, you don't mind intraday exposure, which is probably the best because you're in and out before the close. That's fine. I learned a long time ago that times like this, you got to wait for the hedges and the market makers to unwind positions. That'll show up in 2 or 3 days of price action, and we could still go down and test the 200-day. Okay, so the SPY, if you look at the SPY, we know that anchored VWAP is at 500. Okay, and look where the 200-day is. Anchored VWAP, anchored to October. This anchored VWAP over there to the right, top panel, that's anchored to October 27th, October 27th of last year. You can see that line's anchored to that point. Okay, we came close to testing it in April. This is a little bit more serious pullback. All right, so expect we could see more downside. If you want to hedge, maybe TZA for IWM, TZA. Or QID, ultra short accuse, or maybe you want to do puts. I'm not doing anything because I'm in a pretty good situation right now. I'm in a pretty good place. When this whole Hezbollah thing started a few weeks ago, and Hamas, that was reason to start thinking about reducing your exposure, perhaps. TRBCX, when we started watching TRBCX more closely, we were thinking that TRBCX would give us a signal if it came back and tested the 10 EMA weekly and did not bounce, which is where we are right now. Back in April, we came down below the 10 EMA and bounced back the following week. We're not seeing that right now. So this is a reason to reduce risk as well in your 401k IRA. In my opinion, this is just what I'm doing. I can't tell you what to do. You need to check with your financial advisor. But this looks pretty good. We could come back to the 2021 bear market pivot high. We could come back and test that and then bounce. Anything's possible. But we need to see the evidence that dealers and market makers are closing their hedges.
Nicole, from a trader's perspective, this
Yen carry trade. All right, starting to firm right in here. The yen LC dollar.
Into the European markets and then into our overnight futures. And then really, remember,
Yen Aussie dollar.
These are the overnight markets that affect our futures before U.S. stocks even open. Because let's face it, once the U.S. stock market opens, then the
Okay, so UN, Japanese yen, US dollar, Aussie dollar. You want to see this fade more.
Within about an hour before the U.S. markets open. Then, even though we're down still between 2 and 2.5%, the markets came way off the highs. Bitcoin was down below 50,000. Now it's 55,000.
Okay, let's see what Bob Pisani's talking about. Okay, they're talking Magnificent Seven. All right, we already know that. There's not anything that we don't know about the FANG stocks. Okay, so we're supposed to start getting rain. I just got a message from our HOA to lock everything down. Oh, I got a item out there. I should pull off the. It's not going to go anywhere. It gets windy.
The Chicago Fed president saying that if the economy is deteriorating, they will move forward and fix it. I mean, that could be alluding to an intermeeting cut, possibly. A lot of folks talking more now about 50 basis point cut in September if we wait that long. You have Jeremy Siegel.
Bitcoin looking for a higher high. We're producing a higher low, looking for a higher high now. Bitcoin. Recession odds are 25% now. I thought that we were talking recession late last year, early this year. Yet the markets rallied. And here we are. Here we are now. 10% off the high.
As we get to the 2 o'clock hour, it's still down 12.5, almost 13%, but it's not down below 50,000. It's rallied back up to close to 55,000 now. But people coming out reiterating that they're still bullish, reiterating $70,000 price targets. You mentioned that Goldman Sachs raised the probabilities of a recession from 15% to 25%. So those numbers ticking up, a lot of people just starting to realize the amount of risk that's out there in the market. But that being said, Nicole, here's some stats that are pretty interesting. From the high on July 16th, the S&P 500 touched down 9.7% on the lows this morning. The NASDAQ from July 10th, down 15.7%.
Reduce your risk, trade less, wait. Intraday traders, you know what you're doing.
Austin Goolsby's comments about one data point is not going to change what the Fed does. People are screaming for a in-between meeting cut. I don't think that's going to happen. That would show panic by the FOMC. People talking about 50 basis points and another one. I don't know if that's accurate. I think there's a very steady hand on the Federal Open Market Committee, and that's Jerome Powell. And I don't think he's going to push the panic button.
IWM holding tough. Hold it. Let's IWM. Let's take a look at the 10-year yield. 10-year yield. TNX 10-year yield. All right, that's pretty low. Trying to get back above the 20 EMA at 3.78%. The 10-year yield. The US dollar was lower earlier, bouncing back above the 20 EMA. So this has a chance to get back to 104. I really don't want to see the dollar too much lower. In this area is fine between 102 and 104. We want to see strength in the dollar. Okay.
And some of the other moves that have been made overnight, particularly in Japan, might mark kind of a short-term panic low. I think that most of this is not being fundamentally driven. It's driven by positioning, by leveraged players getting margin calls essentially and being forced to sell. And so it's hard to tell sometimes how long.
Best thing you can do is just take it easy. Hold on to your cash and wait.
I don't see any reason to really think that. Most of this is not driven by the jobs report or earnings or things like that. It really does look like there's a big positioning that got into early July there, in the NASDAQ and the yen and everything else. And now a lot of that's now reversing quite violently in the last 2 days. I think that's what we're seeing now.
More about that, because I was talking about that about a week ago, about the yen carry trade and how that seemed to be dissolving, and that was part of the demise that we had seen of technology.
All right, VIX looks like it made it back up to the highs that we saw around 1 o'clock, and we may be fading at this point. You could day trade these moves, but an exercise in mental energy. How much mental energy do you want to expend? You make a couple of nice moves during the day. I'm not looking to scalp every 5 minutes. Given the stress that creates, having to watch this fluidity in the markets right now, the volatility is just all over the place. So we run up to the highs, VIX runs up to the highs, and now it's starting to fade again.
And there were questions about the yen, but from my last check, it was still strengthening. And so that carry trade and getting those more cheaply in order to use that as an investment tool, less likely to happen. What do you think the Fed does? Do you think the Fed's going to do anything between now and September?
I got it. No, so far, what we've seen so far has not been sufficient to, I think, generate a kind of intermediate cut or an emergency kind of thing. I think they would only do that if they thought that the treasury market, the banks, or the financial system was really,
All right, not much of a bounce at the moment.
so far there's no real sign of it. I don't know if the Bank of Japan
Can feel like a lull in the markets at the moment. It's 2:10 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Monday the 5th. Happy to be back. Happy to be together. Happy together. Happy together. Ba, 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 bum, ba, bum, bum. All right, Vix hanging out at the 1 o'clock high. Okay, let's take a look at the bigger picture. Let's go take a look at the bigger picture for a second while we're waiting for the markets to tell us what's up next. Let's take a look at that. Let's take a look at the weekly. Weekly. Let me go to the weekly. All right, let me just go here. S&P, SPX. Go to the weekly. All right, here's the weekly. All right, so let's take a look at some pivots. All right, so on the way up, from the October low up to the high. I don't want that. I want, okay, so from the October low up to this high was a 62% gain on the S&P. Okay, if we go back here, let me go out a little ways. No, let me go out 5 years. Okay, there's the COVID low over there. COVID low. All right, we're gonna produce some confluence levels. All right, so over here, and then we're gonna go from here to here. Okay, so we got confluence levels. Confluence levels right there at 4,300. I don't see us getting down there, but anything's possible. This is the weekly time frame. Okay, so take that off. Okay, we know that anchored VWAP is right around 500 for the spiders, S&P spiders. So let's do this with the spiders instead. SPY, because we anchor VWAP on SPY. Okay, let's take some recent pivots. Okay, so we got this pivot here. Oops. And this one. Okay. Okay, so we got this one. And this one. Okay, let me do a 236 here. Let me do 236, 382. That's right in this area. Right around 500. So all these levels are starting to fall into place. 500 is anchored VWAP. We also got 236 right here. You can see 236 right along in this area. Okay, so we might be close. We just have to see. We have to see the evidence. Okay. Let me tag that. Okay. Okay, so we're right in the zone, 382 from this pivot right here at 404.99. That came in October of last year, and then the previous October of 2022. Okay, we're 2 years into that. Nearly 2 years into it. That 236 lines up with 382 right in this area. And then 500 is anchored VWAP. Okay, I showed you anchored VWAP. Okay, here's anchored VWAP. You can see that 500, right around 500 is anchored VWAP. We also have this pivot low from March, April. So we got a lot of things going on in this area. So I think we're pretty close. I don't think we're going to crash any further, if you will. Okay, let's take a few levels here. Okay, and go here. All right, so from the October low up to the high, that was 39, 40% more or less, 40%. Okay, so from October low up to this high, 40% gain on the S&P spiders. To the downside, we're down 10%. So we've given back 25% of the gain that we made since October. While it's not the best situation, if you're still holding on to positions and looking for a bounce, we were taking profits off into strength for a good reason with the whole Hamas, Hezbollah, Israel issues. We had the Fed. Lots of reasons to be reducing risk into this time of year, July, August. And here we are 4 weeks later, trying to figure out or trying to see some unwinding of hedges and looking for evidence that institutions and market makers, dealers, are done with this downside. Still potential to see 500 or slightly below 492, somewhere around in there, but certainly looking for a bounce in this area. The only issue I have is that it's the time of year where the S&P at times has pulled back, and we have a NIMO at like minus 68. We were looking for a NIMO of minus 80 reading, which would mean we'd see more weakness. That's the bearish caveats. The bullish caveats are that we have already seen some breadth washout in mid caps and small caps. Okay, mid caps and small caps. So if this is all confusing, I don't blame you for being confused, but just basically we're close, but not quite there. So if we see some conflicting indicators, that's what we're looking for right now. And we're looking for those to add up. Right now, it's just we could see more downside first. So I'm not going to put any risk on the table except for intraday charts. Maybe a little swing. Looking for Dexcom to follow through. I'm okay with that. That's options. I got some risk on IWM. That's options. Got some risk on Meta. That's call credits. I don't see it getting back up to 540 before August 30th. That's a call credit spread. Got about another $2 that I can gain on those. NVIDIA, 115 calls that expire Friday. Hopefully we'll get a little follow through tomorrow in NVIDIA. Rocket Mortgage, those are calls for January the 18th. Okay, looking for a bounce and a follow through on Rocket Mortgage, JRKT. And Tesla, looking for a bounce in Tesla. So there's not a whole lot going on. Again, I'm 89% cash. I'm Cousin Vinny. This is my 218 commentary, just kind of getting exhausted talking about all this stuff because we're just sitting here doing nothing at the moment. I'm your host. I'll be here until a little bit after 4 o'clock. Who do we have reporting tonight, earnings wise? Let's go see whose earnings are being reported. Okay, I believe Palantir is reporting tonight, right? Palantir is reporting tonight. Hims and Hers. Let's go take a look at some of these names. Palantir reporting tonight. Palantir. Okay, that's already pulled back quite a bit. If Palantir reports any kind of good news, we could see a bounce. I'm not looking to do anything. Hims and Hers. Okay, that's already pulled back a bit.
So this might be that strategy that works in this type of environment too, Nicole. I've talked about that with you before.
Car. Okay, I went to see my mom. I rented a car from Hertz, not Avis. There was a lot of cars on the lot, not a lot of people renting. All right, CVS Health is reporting on Wednesday. CVS Health, that's lower. Uber, that's well off its highs. Uber's well off its highs. Okay, so the other thing I'm noticing, okay, you should probably notice this as well. Okay, name a chart. Okay, let's take Lilly. Okay, just out of the blue. All right, so where is it? It's at a recent low. Okay, let's take a look at, say, IBM. IBM. Okay, off the recent highs. Let's look at AMD. AMD. Okay, little bounce, but it's at recent lows. So intraday trading, fine. Intraday trading is fine, but we're not trending. We're certainly not bullish trending. Okay, we might be trending to the downside. So if you're thinking bullish, you want to see all of these charts reversed. You want to see the opposite of what I'm looking at. You want to see AMD up and to the right. Okay, you want to see all these charts up and to the right. All right, so I just used the reference of Lilly, a couple of just random charts up and to the right. That's not what we're seeing right now. We're seeing the opposite. We're seeing down. So most charts are showing you that. What I'm getting at is if you look at 100, 200 charts, most of them are probably going to look like Lilly, or let's see, J&J was higher. That's trending. Okay, so that's looking better. A CAD. Okay, Procter and Gamble. Some of the consumer staples, even these are pulling back a little bit, but pushing a bit higher. Clorox, Colgate, Kimberly-Clark. Even more so, look at the sectors. XLB pulled back. Can we bounce? Probably. Communications pull back. Energy pull back. Financials pull back. And so on. XLI, consumer staples above the 50-day, but pulling back. XLV. You see what I mean, each of these sectors has 30 to 40 components. Most of these stocks are pulling back. This is not a market to get cavalier and start buying on the upside, looking for upside at the moment. We're not trending. Okay, SPY, a little fade at the moment. Okay, so most of what I'm looking at is not giving me confidence that we're going to see a follow through anytime soon. So we need to see more higher highs, higher lows. Most of these stocks need to get back above their 921 50-day. Those need to turn up and to the right. Not the case at the moment. Okay, so XLU, money flow is bullish, but we are fading a little bit. Okay, let's take a look at some of the other markets. There are other markets besides the U.S. Let's take a look at world indices, see if there's anything there. Okay, so here's Germany, DAX, Canada, UK, all of these pulling back. Okay, Nifty 50, India. India looks okay. Let's take a look at the Bombay Stock Exchange. Bombay Stock Exchange. Okay, I mean, as far as trending stocks or trending indices, Bombay Stock Exchange looks pretty good compared to something like the Nikkei, which obviously is down a lot. What's the Hang Seng? Hang Seng. Okay, fading below the 200-day. EWZ, let's see, Brazil at the lows. EWW, Mexico. Argentina, lower. You see what I'm looking at? Most of what we're seeing are lower lows, lower highs. So the risk is more downside potential.
We saw some call buyers in Apple also. They were out in the September cycle. So I'm thinking maybe this is a trader setting up for some good news going into the release of their iPhone 16 and that expectation.
Italy. Okay, pulling back.
Moving higher since that Worldwide Developers Conference in early June. But this was out in the September 240 strike calls. Trader bought over 30,000 of these 240 strike calls for average debit of about $1.35. So that break even just above 241 over the next 46 days. That's about 14.
Ireland
Share price. It would be a new
holding up fairly well, all things considered, with all the turmoil that's going on over there. Chile off.
About 3 times normal daily average volume that we've seen over the last week of trading.
Emerging markets lower.
Some massive option volumes in their
South Korea lower.
over the next month and a half. We're going to see some more gains for Apple.
United Kingdom, lots going on in the United Kingdom. That's lower. Taiwan lower. France lower. Spain sitting above the 50-day. Maybe we get a bounce there. Netherlands, nope. Switzerland holding on to the 50-day. Germany losing the 50-day. Sweden losing the 50-day. Canada, our friends up north, losing the 50-day. Australia losing it.
So when do you buy? When do you step in? Is there opportunity? I mean, we just finished talking about Berkshire Hathaway.
Okay, so there's really got to see at least a few days of positive bullish price action. Even back here in April, things like the All World Index, we had a higher low. Okay, we faded like we did for the last couple of weeks. We faded, and then we started seeing higher lows. That is a bare minimum. That is a bare minimum what we need to see. One day does not make a reason to put money to work. Okay, so back to the Japanese yen, Australian dollar pair. Blah, blah, blah. Say that 3 times fast. Okay, the weekly still in a descending channel. Okay. Okay, so we want to see this fade a little bit more. Okay, there's a reason why we're not putting on a lot of trades, throwing trades out there, because everything is moving lower, lower highs, lower lows. Most everything I've seen so far are below their 200-day or 50-day moving averages. All sectors are red. Most international indices are red. Save your cash. That's all I can say. Save cash.
David Nelson is with us, Chief Strategist over at Bellpoint Asset Management. We had a couple of days of selling at the end of last week, and maybe some people were hoping to come in today and have it all turned around with up arrows. How did that happen?
That got all dashed, I guess, late Friday when we got the news on NVIDIA and the delay of a chip, and of course, Buffett's sale of, a big portion of his Apple stake. I think Buffett's sale of Apple really says a lot more about his view of the economy than it does about the stock. He also sold a lot of Bank of America, and that's a clear indication he views the economic backdrop as poor. But if that's true, Nicole, then a lot of these companies that are for sale today, these are going to be the best stocks to weather that storm.
So selling off these names, I mean, we were just having a great conversation with Tom White, and we were saying, the prudence that we saw is raising cash. In fact, they have a record amount of cash there at Berkshire Hathaway, $277 billion. When do you say there's opportunity? Are you seeing opportunity in the market? Do you think that with the NASDAQ 15% off its highs, and the S&P 10%. I mean, those are the probably lowest points. Are there opportunities yet, or are you waiting for something?
Well, I came in fully invested, so for me, it's usually what I look to do is I look to upgrade, or sell something that isn't working for me, and either add to a position that I like more, or buy a brand new position. I look at some of these large cap names. Everybody's concerned about the valuation of the Magnificent Seven. You saw this mass rotation for a while going into small caps, and what's happened in the last several weeks, the valuation gap between the Magnificent Seven and some of these other asset classes like small caps has collapsed. Some of these names are very, very attractive. I thought Apple's announcement on their version of AI, Apple Intelligence, I thought it was brilliant. They're effectively making 1.3 billion iPhones around the world obsolete. That creates a pretty big upgrade cycle. And again, I would say to you, these are companies with fortress-like balance sheets that have no need for credit. So in an economic downturn, this is where you're going to want to be.
Right, understood. At this point, there were high hopes of that Apple iPhone cycle happening sooner than later, but now because they're pushing back the AI portion of this, the 16 is what everybody thought they would be able to get this in September, but that's not going to happen now, right? Let's wait.
It's going to happen over a couple of cycles. It's never going to happen over one product cycle. And of course, it's up to Apple to deliver an exciting product. I think the bigger issue within the AI trade is that's really been playing out over the last several weeks is this mismatch in timing within the AI complex. The build out of the infrastructure is well ahead of the adoption of AI. The hyperscalers are ramping up a lot of CapEx, and they're not getting the payback yet. So you have to look around there, what can work in that environment. If you look inside Meta, they're spending all that money, but they're getting paid off right now. So I would look to Meta as a name that you would either add to if you don't already own it. If you don't own it right now, you should.
Let's get to picks. Let's get to some stock picks. You mentioned Meta as a name that you should own, that you like. It's down today 2.5%. Many of these names are well off the highs. What other names do you think should definitely be in a portfolio?
If you don't have exposure to NVIDIA at all in your portfolio, most portfolio managers right now are underweight because of the run in the stock, and most portfolio managers have owned it for the last couple of years and have benefited from that. But if you don't own any, this is where you're going to have to start to scale in. People mistake this company as just a chip company. It is not. It is a systems company. And AI engineers cannot easily change to another chip company just because they have a better, faster, or cheaper chip. NVIDIA brings them AI tools and software that they're using right now. They're not going to easily change that. So unless you believe artificial intelligence is not coming, if you believe that, then of course avoid these names. But if you do, then these stocks are going to work out over the long run.
Yeah, understood. There was a lot of talk about things that are going on that the leverage players are getting margin calls. You have the yen carry trade, which is not working any longer, and 2-year yields falling so quickly left people wondering what's lurking. I mean, this is sort of reminiscent of when the regional banks started failing, when you started to see moves like that. Do you want to comment on any of those thoughts?
Yeah, you brought up probably the biggest concern. The last time 2-year Treasury yields fell this quickly, Silicon Valley and signature banks failed. So it does beg the question, what's lurking out there? Plus, around the world, we obviously have a lot of concern. Every corner of the planet is a geopolitical hotspot. There could easily be an attack on Israel from Iran at almost any moment. And of course, we have these currency trades that are going out there. The carry trades that are being unwound creates a lot of concern. So there's likely things lurking out there. And I've kind of been doing this for a while. I know I can't avoid all of them. I do my best to sidestep what I can. But day trading in and out of these names is probably not the best thing that the average investor should do.
David, it's great to see you. Thank you so much for being here. A big day right now. The Dow's down 927 points. We're nowhere near kicking in the circuit breakers, but certainly you could feel the tension, right? When the VIX went up over 60, something's up. David Nelson, Bell Point Asset Management, thank you for being with us. Still ahead, Charles Schwab just released the July stocks report. Names like Nvidia and Tesla heavily traded. We'll tell you in what direction. Some of the investor sentiment as well. Some of the key levels they're watching and more. Joe Mazzola coming up next. We'll be right back.
Okay, waiting for some signs. VIX is starting to move back up to the highs, 34.20. Watching the Australian dollar and the Japanese yen pair. Looking for this to fade on the screen. Looking for this to fade to give us a tailwind. It is 2:35. If we're going to get any kind of follow through, watching for any signs of margin calls this time of day.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
The one issue I have is that we've already had a bear market that ended in October 2023, late 2022 into 2023. So I don't see another bear market. 10%, we're off 10%. So that seems a good area. We do have Anchor VWAP right around 500 on the SPY. Watching that. Anchor VWAP in the upper panel. Anchored to October 27th reversal. Last year, October 27th. That line is anchored to October 27th. And that currently is down there near 498, 499. So SPY just in the middle of nowhere. 500. The next couple of days, 500 would be right around the 200-day moving average.
Maker Mars may be in advanced talks to acquire the snack maker. Of course, Kellanova makes Pop-Tarts and Cheez-Its and Eggo waffles. A deal could reportedly come together imminently, assuming the talks don't fall apart. Kellanova, of course, was spun off from Kellogg here last year. You'll probably remember that. Has a market value over $20 billion. Mars is privately held. Something to keep in mind. But the Wall Street Journal reports that including a typical deal premium, a deal could value Kellanova at around $30 billion, which would rank among the biggest transactions so far this year. It certainly would be the biggest food and beverage transaction in quite some time. We've seen quite a few analysts weighing in. RBC upgraded shares of Kellanova to outperform from sector perform, raised its price target to $76. BNP Paribas upgraded to outperform from neutral, adjusted to $74. DA Davidson raised its price target all the way to $80 per share. Out with a note saying that they could catch upwards of
S&P
$7 per share if they were
futures at the lows of the evening session right now. Histogram, TTM histogram is going red.
So that's the big deal there. And look at that number with you see Kellogg right there, 72.46, up 15%. So now let's move on and talk about another food name, and that is Tyson Foods hitting new 52-week highs. A quarterly report looks like the food stocks are taking over, at least for today. At least for today, Tyson shares up about 3% after the meat producer beat on both the top and bottom line and gave a little lift to its full-year outlook. CEO Donnie Kane said the company's disciplined actions and focus on the fundamentals have resulted in a positive turnaround for their business. In terms of the actual numbers, adjusted EPS of 87 cents easily topped analyst expectations of 61 cents per share. Revenue rose about 1.5%, a little more than that, to $13.35 billion. That was also higher than the $13.2 billion that analysts were expecting. They saw particular strength in beef. Beef volume was up more than 4%. Pork volume was up more than 1%. Chicken volume did fall about a little less than 0.5%. The company said looking ahead to the full year, Tyson boosted the low end of its adjusted operating income to $1.6 billion from 1.4. They kept the high end at $1.8 billion. They continue to expect relatively flat sales on the year, but shares that investors clearly happy with these.
Are going to fade. All right. So the futures are fading a bit more.
Now up about 17% year to date. All right. Thank you for both of those. Kellanova and
VIX heading back up to the highs.
the upside, some few up arrows there. Thank you. Nice to see you, Caroline Woods. Charles Schwab just released its July stacks report. For the key takeaways, let's get right to Joe Mazzola, head trading and derivative strategist at Charles Schwab and Company. Good afternoon to you, Joe. Great to see you. There's a lot to go through on the stacks report, but first I'd be remiss if I didn't note the big sell-off.
Okay, fading about a bit more. S&P.
This is somewhat historic in its own right, at least for this year. Some of your thoughts.
I'll give you a little history right now. Earlier in the day, we had 90% of the S&P 500 was trading down, and really only happened twice in the last year where we've had that kind of breadth degradation. So, yeah, it's one of those days. You saw the big spike, both 55 and approach 60 at one point. There's a lot of unwinding of some short volatility positions. There's unwinding of the carry trade, and when all of this kind of happens all at once, and then let's not forget we also got some fairly, I would say tepid. I wouldn't call them bad, but unemployment figures last week, and combine all those together, and it led to today's sell-off.
And that's also part of it as well. I mean, there's the inside baseball folks, those who are highly.
All right. So here we go. We're pulling back.
Margin calls. You mentioned, you're right, unwinding some of the short positions. The yen carry trade also really for the pros. But the basics like seeing
And the best to just hold on to your cash if you're day trading these moves. So be it. But we are weakening now.
No, absolutely. I mean, that was something that we found out last month when we interviewed our trader client population and said, hey, what are you looking at in the macro world that's causing you a little concern? And the change in unemployment was something that they identified as, hey, that's it's moving fairly quickly, and it is causing us some concern. I think, Nicole, the way that kind of matriculates its way into what's happening, kind of with client data, and then what we see in the retail world is just like you mentioned. When they see data like that, they say, okay, is my job safe, right? Or if I own a business, do I expect to see some of my clients maybe pull back some of their spending? And then how does that make its way through the economy? And those are fair, legitimate questions to ask. I think what my answer to that would be, it's just we've seen deterioration in the jobs report, but overall, the economy is still holding in. It's not as strong as it was, and that was something that I think we knew coming into 2024, and that was the Fed's goal, to kind of cool things down a little bit. Seems like they got there. It's just a matter of
Low tick alert minus 800.
All right, fading.
So we'll all wait here with bated breath and see what the next move is by the Fed. In the meantime, when we get to this July,
200 days, the next level, potentially.
All the folks trading, and you saw, just like Fed speak, right? Like the ISM manufacturing was.
All right, let's take a look at IWM. IWM. 200 days. Got a base in this area. IWM. SPY. SPY could fade a bit more down to the 200-day. Anchor VWAP is at 500-ish. TLT, a good place to park cash if you want some safety. TLT holding the highs. Weekly TLT is showing you potential.
So with the equities, and you said you noted some equity selling, and some of the sells, I'll start there since it's that kind of day, had Tesla, and also I think Palo Alto was on there, and AT&T. Tell me about some of the names that were sold, some of your thoughts there.
Yeah, Tesla, that was number one on the list, and it's been a trade that we've seen 2 months in a row, so it's becoming a pattern here. I think when clients see a bounce, whether or not they're maybe just reducing some of that risk in their portfolio, that's been kind of a common trait over the last 2 months. Same thing with Palo Alto Networks. You could attribute probably some of that to what we saw in CrowdStrike and the pullback that we saw and kind of how that affected markets a couple weeks ago. But there seems to be this common thread when some of these tech names or some of these high beta names that have sold up, when they start to bounce, maybe when they're starting to reach some of those high levels that they've seen before, clients are trimming into that strength.
Right.
And the opposite, Nicole, it's the opposite on the buy side.
Yeah.
TLT, you could also sell
Low
some
tick alert minus 800.
credit spreads, perhaps.
Yeah, I mean,
Nah, not enough implied volatility.
Had a rough July. Nvidia, Chipotle, and Broadcom. And,
SPY.
I think
Implied vol is still very high.
there's another thing they all have in common is that they recently were split adjusted. So that does drive a little bit more of that retail activity. Doesn't mean it changes the value of the company, right? You're just, taking a pizza and cutting it into different slices.
Extreme low
What
tick alert.
it does do is it drives retail activity because more people can participate. And then it also drives option activity. For clients who maybe want to sell puts as way to buy these stocks at a lower price, they're not going to do that necessarily on $1,000 stock, but they might do that on a $100 stock. And so when Nvidia gets a split and is trading around $100, you start to see some of that selling put activity. Or in this instance, we did see a decent amount of call buying activity once it started to bottom out.
I mean, when we start to think about anxiety in the market, it seems like Tesla was sort of tired and done. And the questions about Elon Musk and, the earnings were coming up and people weren't feeling confident. And Jensen Huang was the best and Nvidia was soaring and everybody wanted to get on the Nvidia train. And it did. It moved, went up to 140 and Tesla was, so people were selling Tesla and buying Nvidia, only to see the whole thing sort of, Tesla went to 220 and Nvidia went to 120, now to 100. I mean, this is why this is very difficult, right? I mean, you're watching 100, you're watching 200-day moving averages, but what do you do?
I mean, look at these moves, Nicole. These are 25, 30% moves in a matter of a month. So these are, this is not a market for the faint of heart. What I do say is that you trade smaller, you look for opportunities, and you kind of ladder your way into positions. One of the ways that you can do that, as we just mentioned, was kind of selling puts and so
SPY.
Kind of scale your.
I don't know. It just feels like we're going to go down and test the 200-day.
These names as a way to, should the names kind of pull back further, you're basically putting yourself in a position where you could potentially buy them at these strikes. And like I said, if you scale them down through multiple strikes in multiple months, it could give you a chance to maybe buy and kind of dollar cost average your way into those shares. That's just one way to take advantage of the heightened volatility.
Once again, if you look at most sectors and most stocks in these sectors, we got a lot below the 9/21/50 day, some even below the 200-day. There's not a lot of positive catalysts for any kind of upside at this point. So hedging, TZA for IWM, TZA. That's in a weekly range. Not seeing a whole lot of upside there. IWM pulled back.
Low tick alert minus 800.
Like I said, it's hard to think about them, and kind of we'll see what happens with those names. But one thing that I think was interesting is when you talked about the rotation trade, right? It was a big theme of July where tech was selling off and you started to see a lot of buying on in the Russell names. Clients weren't necessarily buying the
Bitcoin. All right, Bitcoin was trying to make some progress. Bitcoin.
make their way into those positions. And I think that makes sense, right?
Bitcoin's flat VWAP. Bitcoin.
The Russell itself, there's still about 40% of those companies within the Russell that don't
Bitcoin.
there's other ways to trade that. You could look at the S&P 600.
Intraday. Bitcoin.
Potentially make your way into some of those small caps, given the fact that they do have a profitability screening. Now, the other thing to look at is all of
Flat VWAP. Bitcoin.
Russell in the month of July, I think, basically given up in the last 4 trading days. So, if you were looking for an opportunity, to play in some of those small caps, that 10% move, that rally that we saw in July, is all gone now. So once again, you have the ability to maybe take advantage of some of that volatility.
Yeah. Hey, Joe.
Futures below VWAP.
Today, you always bring us this important stocks report from Charles Schwab.
Continue to show weakness.
Right now, the Dow is down 1,052 points. Joe Mazzola from Charles Schwab.
TLT bonds.
Still ahead. We'll bring in our panel. We want to talk about some of the tech names. We're going to look at Apple and some of the big moves that we've been seeing. The correction in the NASDAQ, the yen carry trade. Could it happen again, or is that done? We'll be right back.
Apple pulling back.
Neil, how's my favorite client? Quick question, Carl. Can you offer me the same choices as Schwab? Choices? Yeah. At Schwab, I can get full service wealth management advice and invest and trade on my own. Come on.
All right, TLT.
Need, right? Neil, tell me you know this. Gotta run, Carl.
TLT.
Schwab. Have a choice in how you invest.
Grinding higher TLT. Okay, holding the highs. An area to park some cash, perhaps.
Insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Back to the watch list, we're watching shares of Apple, shares of everything. In fact, shares of Apple are off the session lows, but still it's well into the red. The market is reacting to the freight decisions that we saw. Japan, Berkshire Hathaway's disclosure of selling a stake in Apple. There's a lot to digest here. Logan Gillen's with us, analyst at Jewel Financial, and Caleb Silver's with us, editor-in-chief at Investopedia. Thank you both for being here. Logan, I'll start with you. I was talking about Apple. Of course, you had Warren Buffett's Berkshire Hathaway selling off half the stake. It was about close to $75 billion. Who knows? They may sell off more. But still, it's the number one holding. Some of your thoughts on what's going on in tech and Apple in particular?
Yeah, I mean, I think that finally the valuations are catching up with tech a little bit, and there's been some selling that's going on to kind of get out of that overvalued place. I think there's more of a shift going towards the value plays. My colleague Quint was just on with you Friday, and he was saying the strength that Apple saw on Friday, because remember, it's one of the few stocks that was actually up on Friday after they beat on top and bottom line. He was saying I would sell into that strength
coming into the weekend because Apple is still overvalued, still trading at a forward multiple of 28 with expected EPS growth of about 10%. So I think there's still a lot of overvaluing going on here. And for a long time, Apple was kind of the darling, and it was because of that Buffett trade. And
Let's see what TZA looks like. TZA. All right, that's middle of nowhere too.
piling into Apple and Microsoft and Google as almost like the safe play. But no longer is that the safe play. I think people are finally moving out of those mega cap tech spaces. They're trying to
Not a whole lot is bullish on the day. AMD had a pretty good day, but it's still down. AMD is still down below its 50 and 200 day, and those two are rolling over. You got gains there. You probably want to take some profits off.
Are you hearing anything? Are you seeing any activity or questions about Apple?
Yeah, well, certainly Buffett's sale over the weekend got people very interested in how much Apple they're exposed to. And just in case people don't know, it's one of the top 2 or 3 stocks held by the biggest mutual funds in the world. It's in nearly 400 of the biggest ETFs in the top 15. So you own it. Everybody owns it. And to the oil and gas point, people piled into it like a value stock when there was nowhere else left behind. It was a safe haven, not so much anymore. So people are very concerned about how much exposure they have to it, how much exposure they have in general to the Mag 7. People now realizing they were overweight just as the market was overconcentrated, realizing that in themselves, in their own portfolios, you don't see a lot of individual investors dumping Apple, passive individual investors, just because it's such a big part of their holding, introducing curiosity about their exposure.
Right, and this move, by the way, it was monumental. It brings the cash position of Berkshire Hathaway at $277 billion. That's a record. He's been selling
TZA, IWM. Sitting on top of the 200 day. IWM. Weekly. Okay, support right in that area.
Logan, what may be the safety play? I mean, are people rotating? Are you seeing some other moves? And what would you recommend to folks?
Yeah, I mean, we're recommending to clients
IWM support at 200. Looks like we're going to bounce off of this area.
reduce the exposure there. We've moved actually into short-term treasuries for a little while just as a place to kind of sit and wait, kind of like Buffett in what his psychology is going into the next few months is waiting.
Low tick alert -800.
We like the dividend names and even the small cap names that really not done anything. They still have some strong valuations under the surface. We think there's a lot of opportunity there. It's really a shift in a rotation into more of that value play versus these high multiple companies that they really have to be excellent in order to perform in this environment because there's so much expectations going into these earning reports and going on from there.
You still like tech long term, Logan, right? I mean, right now you're saying short term treasuries, but long term you're still a tech guy, right?
Yeah, I mean, certainly. I think there's going to be a time whenever these things are going to be valuable again. I mean, one of the names that we like is Meta. So Meta is one that we would be interested in the future. Right now, Apple
IWM.
valuation is just completely out of whack for us.
Okay. Look, we had 2 guests pick Meta today. Thank you for that. Caleb, I'm going to give you the last word. Your anxiety index and anything else you've been watching and catching
TZA.
on Investor Media.
Yeah, the anxiety index is screaming like a 2-year-old that just dropped an ice cream in the playground. People are very concerned suddenly about a recession, the drunken run recession getting louder. People are concerned, obviously, about their own personal finances, the volatility, the VIX up at 48.50. That gets people's attention. So they're looking about what happens when we go into a correction. What's the usual path forward after a correction? How many do we get in a year? Typically one. First one we've had in a long time. What's a bear market? We're not there yet, but people are struggling.
Okay, so IWM. I just took put credits off. $50 profit per contract.
Thank you, friends, for being with us here on the watch list. I'm Nicole Petalini, every day 11 a.m. and 2 p.m. here on Schwab Network. Download our Schwab Network app. It's available in the Apple App Store. 1064 downtown. We'll be right back.
Low tick alert -800.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with Schwab Network. Streaming 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Low tick alert minus 800.
All right, let me put that in the spreads channel.
I'm my favorite client. Great. I started using Schwab investing feeds, so now I can easily invest in trends, like wearable tech. Trends? All that research sounds exhausting. Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks. Can't be that easy. It is with Schwab.
Schwab investing fees, 40 customizable themes, up to 25 stocks in just a few clicks.
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
All right, TZA, watching for that to follow through. Just a small hedge for now. Got 500 shares of this, looking for a push higher.
Index now back about 51.75. Did lose some there in the last hour or so. Really 11 a.m. was pretty much the high of the day. That was at was about 60 points ago, 70 or so. So yeah, we faded pretty hard since then. Obviously, it's not a good session. But at least we're off the lows. There's some of the real incredible kind of catastrophic action from this morning has recovered. But obviously the moves are still sizable in magnitude. But just for example, Nvidia up $10 compared to
McDonald's with the pullback. McDonald's with a pullback. Looking for a bounce in McDonald's. Maybe I'll trade it tomorrow. It's back below the 200 days. So I want to see how this reacts to the 9 EMA. We got about half the amount of volume we saw Friday. So watching McDonald's for potential trade. It's a little after 3 o'clock. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday the 5th. Gap down. We bounced, took back about 50% and then faded. We're potentially making a higher low at this point.
Mostly on the macro side. Firstly, just look at VIX 36. This is really where you have to start the analysis today. The going from a very low VIX to a very high VIX really speaks to some of the shock value here. A lot of folks that are, again, once again trying to look at this as a sort of one-off type of thing, but let's not forget the macro backdrop here. Yes, there's pressure being applied as the then carry trade unwinds, and there's some very fun, exotic stuff to attribute to some of the pressure and selling, forced selling that's happening. Obviously, this is a big risk off event, but from a liquidity standpoint, it seems pretty clear folks got the shoulder tap over the weekend when futures are getting hit. But last Friday, after the week employment, which was on top of a bad week of data already, don't forget this really does still center on economics and the general slowness in the economy that we are now seeing pretty loud and clear in front of us. So exacerbated by some of these other forces for sure, but really at the heart of this is a story about the U.S. economy slowing down, losing its edge on the rest of the world as the Fed has to cut now to try and save us. But look, we really need saving. There are really high valuations in stocks, and so a lot of that has to come off. Look at the way they're buying the dip in the semiconductors. It's not bad. I mean, 2.5%, much better than we were earlier. Trying to hold on to at least some of these levels.
Okay, looks like futures are changing direction. SPY. We got TTM changing direction. Okay, pretty flat. Back to VWAP. All right.
Relative to where the Fed funds rate is and inflation. And that's all fair, and I think Rick's exactly right. And to the point that the discussion just had, the Fed just said, Jay Powell just said, effectively, we're going to cut in September. And the only pushback I was going to provide to Ron is Austin Goolsbee was on the network this morning. And if someone at the Fed of seniority wanted to say something to the market, it's not that hard to get in touch with Austin Goolsbee and tell him that.
Jackson Hole's check is on August 23rd.
Sure.
So that's probably when he's probably going to say something. It's not going to come out before.
Right, but to Dan's point, Goolsbee was on CNBC today. I can assure you that many members of the Federal Reserve had no idea that.
Wow, Ron and Sana. Haven't seen him in a while. VIX at the highs of the day.
I can assure you that that is the case. And so in that environment, the Federal Reserve, if it is taken by surprise by a market-related event, does have some requirement to be at least vigilant and examine and explore what's going on to make sure that it doesn't represent unknown risk that is just now presenting. And that's fair, but I also just want to add, the S&P is down 3% right now. The equal weight's down 100 basis points less, call it 2.25. As it should be. And right now, only two sectors are underperforming the index: tech and discretionary, obviously Tesla and Amazon. So it's not as if there's this humongous broad-based dislocation that the Fed needs to step in to ameliorate. It's really concentrated. It's not great, but it's largely concentrated in those names that for a lot of people had gotten overbought at highly valued. The other reason I argue the Fed's behind the curve, if you look at inflation break-even,
S&P equal weight index decisively losing the 50-day. Headed back towards the 200-day. Probably gets to the 200-day. Number of stocks above the 20-day are moving lower. So once this moves a little bit lower, what I'm looking to do is take some SPXL. Okay. So once we see the number of stocks above the 20-day drop into about 20% and start to turn, I'll be buying some SPXL. Okay, so I'm not sure where this is going to stop right now, but S&P equal weight index, looking for the number of stocks above the 20-day to get down to about 25 to 20%. To take a long on SPXL. No, why would you want to step in today? TLT pushing higher, TLT.
in some sectors, but I'll tell you what I bought today, or I added to. Eaton, because their commentary was outstanding. Their orders grew 9%, organic growth grew 9%, aerospace grew 13%, electrification grew 13%. They're ending the year with $11 exiting the year in terms of earnings, and the stock is down 25% in 2 weeks' time. And Lam Research, oh my goodness, that stock just got hammered in 2 days. It was down 20%. It's down 32% on the July 10th highs. And the company beat, they raised guidance, and margins were very strong, up 300 basis points in gross margins and operating margins. And their commentary was also very encouraging about wafer fab equipment spend, AI spend, et cetera, we know. The stock has gone from 31 times earnings to 19 times in 2.5 weeks' time. To me, that's an opportunity. Am I going to catch the bottom? No, probably not. But I'll buy a little bit along the way on the way down. That's what portfolio managers do.
And to add further context.
Okay, watching TLT. TLT is moving back to VWAP. TLT moving back to VWAP, back to the highs. This is a good area to perhaps put some cash on the side, watching the volume.
How are we going to determine, when you look at what's happening with mega cap tech, okay, it's been driving everything, obviously. How do we know whether, the bulk of the selling is over? How do we know how far stretched valuations were, if in fact you believe that they were?
They might not have been, although they might have been overinvested, right? And so was a correction long overdue? Absolutely. I mean, when you have a VIX that shoots to 60 in a matter of days and then drops back down to 30, you're probably talking about, in technical terms anyway, a momentum bottom that may well be followed by a price bottom if you're talking in purely technical terms. I think what's also interesting, Scott, though, is in light of what's going on in the Middle East, the fact that oil prices and energy across the board is down, when there are worries even being stated by Secretary of State Blinken that Iran could attack Israel within 24 hours, and yet energy prices collapse. With this, you know that there's a large amount of forced selling going on. This is the environment, 97, 98, take a couple weeks, maybe a couple months to catch that price bottom. But obviously, opportunity sets arise when the VIX spikes as high as it did today in an environment that's not like the great financial crisis when it hit 80.
You want to address Berkshire and Apple, since it's one of your largest positions that you've been consistently, for the most part, adding to?
Well,
I mean, maybe trimming some, but give us your
I was buying in the spring when the stock was at 160, 170 because everybody hated it, and there was never going to be an iPhone refresh cycle, and services couldn't be sustainable at 14% growth or 26% of total revenue, and it was just like every day we would get up and see a downgrade or numbers cut. And so I added to it, and I made it a 9% position in my portfolio, 300 basis points higher than the benchmark average. And right before earnings, I did trim that 300 extra. So I'm market rate. So I'm still big in the name because I do believe in the iPhone refresh cycle. And I do think that services is sustainable in double-digit growth. And I think AI is going to be a big deal for them. It may not happen next year. It may take place in 2 years, but I think it is going to be a big deal. Meanwhile, they're buying back a ton of stock. The valuation has come down. Not as much as I'd like it to. If it comes down more, I certainly would add it right back and be overweight again. I don't really know Warren Buffett why he's selling, but that it is. What's important is it is still a very big position.
Sure, but it's still very
It's his largest.
Timing kind of is everything, and for somebody as legendary as Mr. Buffett to have been sitting on a mountain of cash for so long, and now making that mountain even higher, one makes the speculative leap to say, well, maybe he thought prices were too high before to deploy that capital, and now looks at what's happened with mega cap tech stocks. Apple had a humongous run after WWDC.
Right.
Maybe looks at the greater picture and says, okay, maybe it's gotten a little bit crazy.
Well, and that's one of the reasons why I was trimming too. You're up 31% since the springtime in the stock alone. But I would argue that he's had an enormous amount of cash for quite some time. And at the peak this year, the S&P 500 was at 19%. So, you got to just kind of take a step back. And if he's raising cash because, he wants to have the options, whoever takes over after him, they have the options to do whatever they want with the cash. I don't know. But I do know that it is still a very large position. And I also take the other side of Bank of America, and I will be buying that stock when I
be buying that stock at 1x book at this point in time with a fabulous balance sheet, good management, cost cutting. So I don't know his position on that one either, but I will take the other side.
Yeah, they've been selling that stock too, Bank of America. Thanks for bringing that up, just to make sure everybody is on the same page. You want to weigh in on this Berkshire move and Apple? What do you think it signifies? If anything, it's all speculation.
Yeah.
But nonetheless, timing kind of is everything.
Well, not having spoken to Mr. Buffett directly, that's a little bit tough.
That leaves us to speculate. Sometimes we're forced to do that.
Look, I mean, they made a boatload of money in it. He has always been someone who's prudently, paired his positions and rebalanced his portfolio when appropriate. Now, there was no
Okay, so anything I'm doing at the moment, these are hedges.
maybe he does want to give them some flexibility and not be tied to positions that pre-existed them. And so I hard to speak on his behalf. He hasn't emailed me as yet. It's happened in the past.
VIX still moving higher. VIX still moving higher.
The timing was quite good insofar as building a cash position right before the market gets hit as hard as it has.
Is there a message in here about just these stocks in general, this cohort of stocks? Did they get way too extended? Is this a mother of all buying opportunities for an opportunity that people really believe in, and that being AI? You saw what the capex numbers were, remarkable year on year for all of these companies. Now, in large part, it was justified, even though the market sort of took issue with certain reports and the amount of money they're spending.
Now, listen, unlike Ron, Warren Buffett did email me. Apparently, he enjoyed the Deadpool movie this weekend. But besides that, he did not tell me anything.
All right. Might seem like the end of the world at times, but it is volatility. We do have headline news, headline risk with Iran and Israel. Park some cash in TLT. I think that's what I'm going to add to that if that continues to move higher. The 99 or the 100 call, those look pretty good. The selling is pretty measured. It's not really catastrophic. It's not dropping. We are off 17 points on the SPY. That's unusual, but that's pretty good. Looks all right.
Cyclicals and the industrials and the energy financials and that sort of thing. Friday, totally reversed. Everything that worked in July, totally reversed on Friday. And it was just like a bloodbath, right? So I don't know, we'll probably settle in here. We're gonna see some puts and takes. I still think if we're in a 2% GDP world stock, which I do kind of do. So if I think that, I still think that these companies that are tied to certain themes, electrification I mentioned, semiconductor build out, semi-manufacturing, that's a big deal. All onshoring, reshoring, housing. I mean, do you see where 30-year mortgage rate is today? 640. I mean, that's pretty great. It was at 780 in October. Probably have to get that down to
RKT. You hear Stephanie talking about interest rates. RKT, higher volume, pushing higher. We've got the weekly trend as well. Looks like it's turning the corner. Let's take a look at the mortgage rate.
That to me sounds panicky. I don't think they need to do that. They've not done it that way in the past.
30-year mortgage rate on the weekly. 30-year mortgage rate, 6.8, 6.7%. Look at the 15-year mortgage rate. Whoops.
I don't believe an intermeeting move would be wise here, not in the current context.
Can I just add to this? I find this conversation just absolutely
6%, more or less.
almost at a record high, just off of a record high. Valuations are excessive, sure. We're down a little bit. I mean, granted, at the lows, the S&P was down, call it 10% or so, but people weighed about half that. The economy still, to Steph's point, doing okay. The ISM Services Index came out and it grew.
You know, anyone who bought a mortgage, bought a house in the last year or so, maybe in the next couple of years, they can refinance, do a refi for below 5%.
Too late. If they are offsides on August 5th, then they were offsides on September, 4 days ago, whenever the meeting was.
But just take this into account. Yeah, so in 1997, they didn't raise rates because of the Asian currency crisis. In 1998, they cut because of long-term capital. 2011, 2015, 2018, there were events that took place that either kept them from doing something they planned to do or stopped raising rates and started cutting because an event occurred that threatened not just financial market stability, but economic stability. If that were this, then there would be cause for intermediate.
That's right.
But we don't know that yet.
And so thus far, would you say what we're experiencing, whatever this is, and we all agree that someone somewhere is at some trouble, would you agree that this is LTCM, whether Thai Bog or
It's not a credit problem.
or Orange County? Is this anything like that thus far?
S&P bouncing.
And the tequila prices.
No, not yet. But again, there's a lot we don't know because we haven't identified who the players are that have been really engaged in that yen trade.
We'll have to leave it there. Thanks for being here. Great to have you on our program here on set. That's Ron and Sana. Of course, you guys are going to hang around, right? We got more to talk about.
Okay, we got about 40 minutes to go. 40 minutes to go. See S&P spiders moving back up to the highs. I'm going to take a 5-minute break. I'll be right back.
They're saved from today's sell-off, Scott, after reports Sunday. Mars is in talks to buy the food manufacturer. Shares up about 15% now. Lenovo, of course, is the company behind products like Cheez-Its, Eggo, waffles, and Pop-Tarts, everything in my pantry, basically. With today's move, though, Kellanova has a market cap of over $24 billion. Mars, which makes candies like M&M's and Snickers, is a private company. Now let's move over to crypto because those cryptocurrencies rallied hard through the weekend and into today following Friday's disappointing jobs report and the biggest drop in Japanese markets overnight since 1987. Bitcoin today dropped below 50,000 for the first time since February, and crypto-related stocks like Robinhood, Coinbase, MicroStrategy, and Marathon Digital, they're all falling in sympathy as well, Scott. Steve Kovac, thank you. Come back to you in just a little bit for more stocks on the move. We're all over this sell-off, of course. Recession fears, one of the culprits for the global market meltdown. That's after Friday's disappointing jobs report. Let's bring in former Dallas Fed President Richard Fisher now. Mr. Fisher, it's good to have you on. Thanks for being with us.
Yeah, thank you, Scott. Good to see you.
I'm sure you've heard some of the calls made on this network today that the Fed needs to do some emergency action. You laugh, but what's your reaction?
Well, it's a little bit eerie. It started in Japan. It was off over 12% in Taipei. Taiwan was off over 8%. And when I say eerie, it reminds me of 1987. October 18th is when things started selling off in Hong Kong. And of course, we had a dramatic move, 20% down on October 19th, 87 here. Now, what did the Fed do? Alan Greenspan on October 20th, so the day after the huge downward slope, came in and said simply the Fed is ready to provide liquidity to support the economy and the financial system. Did nothing else. And I think this business of asking the Fed to react with a cut, I agree with Ron and Sana, who just said, maybe because we've been friends for, I guess, 30 years now, that it would be panicky and it might send the wrong signal. The Fed will always act if something occurs that threatens the credit system or the economy. And it's not clear that what's happened the last few days, including today, with the Dow off over 1,000, that's going to impact the economy significantly or threaten the credit system. If it does, then they would move. And the other thing I would say, Scott, is remember they have the Jackson Hole meeting coming up in 2 weeks. That's right. That'll be a very interesting session to watch and see what kind of signals that are sent. I don't see any need to move intra-meeting unless there's a threat to the credit system. And we can't say we see that yet after just a couple of days of harsh market reaction.
Ron made the point, though, that the Fed shouldn't do anything before September, but they should say something now along the lines of what you suggested Greenspan did back then, that Fed Chair Powell should come out and say, we will provide liquidity. He said exactly what you say. Should he do that? Should the chair come out today and say, in light of these global developments, the Fed will be there to provide whatever liquidity is necessary if it is needed?
I'm not sure you should say that today, but you should have it in his back pocket. And again, we have Jackson Hole in literally 2 weeks from tomorrow. So I think there's no such thing at the Fed as instant analysis. And the one thing I disagree with Ron on, which is rare, is of course they were aware of the Japanese carry trade. Everybody's aware of it. And the Fed brains have been watching that very carefully. But they have to be careful not to just have instant analysis and react like so many people appear to do today. Their job is to think things through, be calm, reassuring, and make sure that it's not threatening the credit system. We did see a big pop-up in spreads today, triple C's and jump, and we saw it starting over the weekend. So maybe that's sending a signal. We'll have to see, Ron. We'll just have to see, Scott, and see whether or not that requires some statement from the Fed. But I'd have it in my back pocket just in case. That doesn't mean you cut necessarily. It does mean you can provide some reassurance by a simple statement like Greenspan made at 87. But this isn't 87. This isn't 20% in one day. We'll just have to wait and see what it takes.
Do you think they're already too late, though, to cut? The point that Rick Reeder of BlackRock makes today is they're already far too restrictive, given where inflation is relative to target, and then especially relative to where the Fed funds is already. That they're way too restrictive now, and they need to do something sooner rather than later, even if the economy is still in a relatively stable place. I'm quoting from his post on social media a short time ago.
Well, Rick is one of the giants in the business. I have enormous respect for him. But again, here I beg to differ. I don't think they need to cut right away. I think there is room for them to move in September. I'm not of the view that they need, at least as of now, to move 50 basis points or more. Some have even said 75 basis points. I think they've done a good job. Inflation is coming down. We're disinflating further. The economy is still growing, although weakening. And thus far, despite all the criticism that Powell and the committee have faced, they've done a pretty good job. We're still not landing, and it's not clear we're going to have a harsh landing yet. We'll just have to see. But why would you want to move before September if you have a chance to make a statement at Jackson Hole where you have almost all the other good central bankers around you, and see what you can come up with that may be reassuring?
Well, I mean, I guess I would only suggest that just because there aren't credit issues today doesn't necessarily mean that there won't be any related credit issues over the coming days, if not weeks. That would be well before. 2 weeks is an eternity in anything. So anything can happen between now and Jackson Hole.
S&P moving back up towards VWAP. I'm not seeing any real reason to do anything at the moment.
The other thing, Scott, to bear in mind, unlike 1987 when we had portfolio insurance and index.
Greg, I don't know if you're listening. I know, Greg, you're real estate in Connecticut.
Somebody somewhere is having a problem, and a large one at that. To what degree is the Fed thinking about that?
They're monitoring, Scott, constantly. I mean, nobody has better databases or monitoring mechanisms than the Federal Reserve. So, and especially given the fact they let the horse out of the barn, as I've said many times on this and other shows on CNBC, on inflation, they're watching things even more closely than they did before. So it may be they'll have a better sense. I'm sure they are talking nonstop to the big bankers and other credit allocators to see if there are problems. And if they detect that there are problems, then I expect them to make a statement at some point. If not, their job isn't just to, Scott, just to satisfy market operators. Their job is to make sure the economy is stable and the credit system is functioning properly.
I hear you. It's good to have you. Great insights, and I appreciate you sharing those with our viewers. Richard, thank you. We'll see you soon. Richard, thanks.
AMC trying to get back above 5. It was above 5 earlier today. AMC. Bitcoin back to VWAP. Chipotle. I'm going to look at Chipotle. Looking for it to push higher. Chipotle. CMG. Chipotle.
And Gen AI, CEOs are saying the more capex, the better, but investors are increasingly focused and worried about the impact on earnings. Adding more fuel to those worries and the sell-off is a report over the weekend that NVIDIA is now delaying Blackwell, its next AI chip. Meanwhile, take a look at Alphabet shares. This just happened in the last 30 minutes, this ruling. They took another leg lower after losing its DOJ antitrust suit over search. At the heart of the case are Google's payments to Apple to be the default search engine on iPhones. That's a deal worth tens of billions of dollars. One that regulators say lets Google illegally monopolize the market for online search and related advertising. This decision, a major victory for the DOJ, and only the first in a wave of antitrust cases against big tech. We'll have to wait longer for the remedies. This initial finding, Scott, is about Google's liability. We've reached out to Google, but we haven't heard back yet.
Okay. Steve, thank you. And Stuart DePosa. Joining me now, the so-called Dean of Valuation, Aswath Damodaran, NYU Stern School of Business and Professor of Finance. Good to see you today. What do you make
SPY.
of this, especially related to
Off the lows of the session, but off the highs as well. Not much to do. Hedge. It's going to be a waiting game, I would guess.
So from that perspective, I think some of this cleaning up is long overdue. So I'm not surprised. I'm just surprised it happened so quickly and essentially in such a compressed time frame.
Yeah, the interesting thing of speaking with you, of course, is you're not only a trusted observer, you're a shareholder in many of these companies. So take me inside your own head today on how you're looking at this pullback, whether it's an opportunity you see or you're simply waiting because you think more is to come.
No, all year I've been saying I would not buy these companies at prevailing market prices starting in March, other than Tesla, which I added earlier this year. At the same time, though, I would not be in a hurry to sell them because I think they remain. I mean, in spite of all of the bad news you heard about from the earnings reports, they continue to make money.
SPY looks like we're going to head a bit lower right now.
But look at the revenue and earnings numbers. They've come in surprisingly close to.
Can't seem to get above VWAP. The 200-day is down there. Might as well just go ahead and tap it. That's 15 points lower. That'll be another day like today.
When you heard about the Berkshire move in Apple, your reaction was what?
I think that Berkshire is just over-invested in Apple. Any company that ends up with 30% of its portfolio in one company is asking for trouble. That's always been a problem. I think that I'm glad they got out from under the pump before it was, in a sense, too late. So I think they were dealing with a portfolio concentration problem, and I don't think of it as a signal that they think Apple is overvalued. I just think it's a signal that having 30% of your portfolio in one company is never a good idea.
Well, I mean, they certainly enjoyed the fruits of the run on the way up.
But I think you don't want to risk an entire company on one stock. And I think that's always, even when times are good, it's never a good idea. So the fact that they made money on it doesn't take away from the fact that strategically and tactically, it was a bad idea to have that much money in one stock.
Did you think there was a direct relationship?
Dexcom pulling back to 72.72. No follow through today yet.
Between the carry trade and the move in these tech stocks?
You know, any time of a correction, we look for something to blame. The carry trade, central bankers. The truth is, nobody really knows what causes corrections. it's a collection of things coming together at a point in time and a mood shift on top. And I think that there is no one thing that I would want. I mean, the carry trade contributes, the Fed not acting sooner contributes. None of them was decisive in explaining what happened. But it really, I mean, if you look at the triggers, it's been incredibly quick. I mean, a week ago, none of this was foreseen. Today, everybody claims to have seen this coming. So I think that the reality is a collection of things coming together and a shifting of the mood that causes.
We need a few more days. We need a few more days to build a base. We could move lower, we could move higher. We're right in the middle of no man's land, 200 days below, 100 days above.
Yeah, shares of Tyson Foods, they're not chickening out today. They're up 3% after delivering strong earnings report. They beat EPS estimates by 20 cents and had a slight beat on revenue. Now let's go over to CrowdStrike, one of the rare tech names that were in positive territory today. This coming after over the weekend, a lawyer for the cybersecurity firm responded to Delta Airlines allegations it's liable for $500 million in damages related to that global IT outage that caused Delta to cancel flights for several days in a row. The lawyer for CrowdStrike said Delta declined an offer to have on-site tech support, and the CrowdStrike attorney also noted other airlines were able to recover days faster than Delta did. Scott?
Yeah, it's notable. In a sea of red, you do have some stocks in the green. AMD, of course, CrowdStrike among those. Hard to find, but that's why you got to look. Steve, thank you. I appreciate that. Steve Kovac, we're continuing to sell off in the last hour of trading here. We are off of session lows, not all that much. The Dow is still down 1,000 points. Both the Dow and the S&P having their worst days since 2022. Joining me now is Ed Yardeni of Yardeni Research. Ed, it's good to have you. You made the case, thank you, multiple times on our program. Fed doesn't need to cut. Everything's good. Look at the data and the economy. You still feel that way today?
Well, obviously not, Scott. Clearly, the issue here, in my opinion, is the carry trade. And as we saw the Bank of Japan starting to raise interest rates and to tighten something that they were resisting doing, that really unleashed this carry trade turmoil, in my opinion. And we've seen that clearly in the strength of the yen, and as the yen has strengthened, a lot of the carry traders had to scramble to cover their shorts in the yen, and when they did that, they had to cover a lot of the assets that they own. So I kind of view this as very similar to 1987, where we had a tremendous sell-off that was largely internally related to the market, and I think a lot of what's going on now is in fact related to these carry trades, and I think once they wash out, I think it'll happen pretty quickly here. I think the market will stabilize, and we'll be back looking at the fundamentals of the economy. And notwithstanding Friday's numbers,
Dexcom, we got some bids in Dexcom right at VWAP at the moment.
depressed employment in July, and I think we'll discover that in the next few weeks.
So just to be clear, you don't think that the Fed should do anything?
No. You're asking me, that was my opinion before what we saw happening here in the credit markets. I think the Fed is going to do something, and I think markets are expecting 50 basis points in September, and that may very well be what happens if this calamity in the carry trade continues. And so I'm not of the opinion that we're not going to have an interest rate cut.
No, I understand that. I mean, do they need to do something now? Did they need to either say something or do something before September in light of the turmoil that you just spoke about?
Yeah, I think they absolutely will say something. I don't know if they'll do something. I think what they may very well obviously try to verbally calm the situation down. Perhaps they'll mention that from their
Low tick alert minus 800.
well, but I think they will say what the Goolsbee said this morning, and that is, they're ready to help the economy if necessary, and that may very well be necessary coming up sooner rather than later.
We'll see. Ed, I appreciate you. Thank you. Talk to you soon. That's Ed Yardeni. Joining us now on the CNBC Newsline is BlackRock's Rick Reeder. He joins us exclusively. It's good to talk to you. Thank you so much for calling in. We obviously have highlighted, Rick, your post on social media within the last hour. You've heard a lot of the conversation, and I'm sure you've spoken with many people today about what the Fed should do, if anything. You make the argument that it's time. This is what you say. The need for the Fed to move the Fed funds rate closer to 4% to 4.5% sooner rather than later. Are you making the argument that the Fed needs to move intermediate?
So no, not necessarily. By the way, the markets are pricing in that they're moving well through that certainly over the next year and a half. Listen, I think the funds rate is priced wrong for if you have inflation. I mean, look at today, the inflation break-even market, 5-year inflation traded down to 175. 175. It's back to 192. If you got inflation, the markets expect inflation well below 2%. The 3-month, 6-month moving average of inflation is right at 2, just above 2, and you have an economy moderating. 5 and 3/8 off of 2% inflation is not the right number when you have clearly pressure on lower income. You see that in all the earnings numbers that I think you got to move. Do they have to panic and do intermeeting? No, but I think some communication to the effect of the markets are, when the markets are pricing in, they are anticipating moving somewhat. I think evolving that communication would be helpful.
But if you suggest that the Fed is already
Apple's starting to bounce.
Should they have moved last week? Are they already too late?
I think the Fed has the ability. I think the price is wrong in terms of where interest rates are. Should they have moved last week? Were they set up to move for last week? They really didn't set up communication-wise to move in July. But should they set up the communications such that in a pragmatic way, without panic, that interest rates need to come down or should come down, and they're respectful of the fact that the dual mandate is very much in play, i.e., unemployment or employment is you're starting to see real slack, and with slack building and inflation down to target, then you've got to move the funds rate down. So I think they can set up for it, and I think the communication, they can have pragmatic communication that they are respectful of a change in where we are in terms of the economy. Listen, I'll say one thing, and I heard bits and pieces of what was on before me. I think the economy is in fine shape. I think it's slowing, and I think it's slowing, and you're building slack, and you clearly have a durable nature to inflation coming down. So the Fed should move the rate to where it's appropriate.
But what are you seeing or hearing on your end from those you're either talking to today or of what you're looking at in terms of the unraveling here of this carry trade?
So the first thing, coming in this morning and watching Japan move like it did, that is not a normal condition to see equities in Japan. Now, some of that I think is emblematic of there's a lot of crowded positions. There's a lot of people have piled in the same trades, Japan being an example thereof. So you're witnessing, and certainly over the last week or so, a lot of these crowded positions, almost on cue, the crowded positions have come under some pressure. Some of it, I think, is just a natural, in the month of August, liquidity is not great. You've got crowding, and so you're getting some rebalance relative to that. There's some, by the way, part of what makes this an interesting market is there's some stuff to do. I mean, there's some things to trade because markets are overshooting in a bunch of places.
Such as where? Says the global CIO of BlackRock.
I had a feeling you may ask that. Listen, I think the front end of the U.S. rates curve has moved to an extraordinary amount with a Fed that certainly hasn't chronicled their movement anywhere close to that. That is signaling clearly in terms of where that market is signaling recession. I think the inflation market has come down dramatically, and if you look at the move today, you're talking about where do we go? You got 25, almost 30 basis point move in inflation today, and now we've rebounded. The front end of the yield curve, you look at the move, what was it, over 30 basis points today? And there are opportunities across these markets where you're seeing some extreme moves, and we're taking advantage of some. By the way, I'd say the same thing on the equity market. Some of the names that have reported good earnings.
Dexcom bouncing a bit more. I wouldn't do anything. We got plenty of time, especially if you're a longer term investor. Day trading is one thing, but I'm sitting on a bunch of cash. I'm looking to put it to work, but I will not do it until I see a base. Look at some of these stocks at the moment, or indices at the moment. Look at the S&P 500, just sitting here in no man's land. The 100 period's right there at 5,300. The 200's down here around 5,010. We could go either way. So let's say we don't do anything. We just sit here and base out for the next 4 or 5 days. How are you going to trade that? Well, intraday, you could trade it. But as far as a swing trader, you have no direction right now. The direction presumably is still lower. MACD and stochastics are set up. They could turn, but there's really nothing to go on. So just sit on your cash. Don't do anything. That's what I'm doing anyway. Hedge with things like TZA if you're concerned about IWM. I took IWM. I had the January put credits. This pretty much could have gone right back in the other direction. I took it off just to have less risk on. And, one hedge is TZA potentially if this continues higher tomorrow, or IWM small caps move lower. It's small. TLT, that's found buyers at the low of the day. You can see TLT on the weekly. This looks pretty good for an area to park some cash. Okay, over the last 10 years, TLT. The highs were in 2020. That was COVID. We're way away from that 161 level. So the 99 or the 100 strike calls, I'm looking at potential for trade there. You could trade that or just buy shares of TLT. Again, for a hedge, a measured hedge. If you're going to buy 1,000 shares, maybe you buy 100 shares today just to smooth things out a little bit. I'm looking at the defensive sectors like XLP. They're not really any use at the moment. XLU, that's not useful. XLV, that's not useful. XLF, that's really not useful. It's between the 50 and the 200 day. So how can you put money to work when the markets are in a neutral zone or purgatory? We're right in the middle of everything. So not really looking to do anything. All right. So XLI, big doji at previous support. Maybe something happens here on the XLI. Select stocks are working okay, like Dexcom. Select stocks are okay. Okay. Coming off the low. Volume by price support. Kirby overhead. Over the next several weeks, next several months, this is probably going to work its way back up towards 85.90. That'll be a trade. Meta. Okay, Meta bounce a little bit. I have call credit spreads on Meta. I'm going to hold on to these for a while because there's still about $3 left in these call credit spreads. The 540s are going for 350. So there's another $3 I can make on those call credit spreads that expire at the end of August. I have a 540, 550 call credit spread on Meta. I don't see Meta making it up to 540. Do you? If we started to head back towards the 50-day, maybe. Look at the Bollinger Bands. Bollinger Bands are coming together. That's telling you look for consolidation in this area. I don't see anything worth trading at the moment except for short-term bounces. Bonds, TLT again, IEF and TLT. Look at the weekly time frame. This is what I'm looking at. You could do LQD as well. LQD, investment grade corporate bonds. This looks pretty good. This is trending. Headed back towards 122 perhaps. Another 12 points. 10%. And a good place to put cash. Most money market sweeps in your accounts, I imagine they're giving you like 3.5%, 4%, maybe higher, right? Cash is a position.
backwards that we saw on Friday. We'll see if that lasts. We have a lot of data to get through. We have a CPI print next week, a PPI print next week. We do have Jackson Hole. So I think you're going to still see volatility. I still say you use that volatility where there's good fundamentals, good cash flows, good management teams that have navigated themselves out of problems before. Really high quality blue chips on sale. And it's not just technology.
I don't know. You heard Rick Reader. I'd love your reaction. It sounded like he didn't believe the hype to begin with the rotation trade, which was really predicated.
IBM gets, if IBM gets back to the 50-day, that'd be an interesting trade. IBM looking at a potential pullback. There's your pivot there. There's your high. 50% would be right near the 50-day. IBM. 50% retracement from the May low, the May reversal candle low. We're at 382 right now. 50% would be right around 178. I'd be very interested in IBM if we got down there.
High tick alert plus 800.
High tick alert. High tick alert. All right, short covering.
So as long as the job market is still strong, even though it's not as strong as it just was, I think you still have to have a positive outlook on the consumer. And again, I will meet with McDonald's, with Chipotle. I will you're 400 billion for Deadpool this weekend.
Shake Shack.
Results were great. Was up a lot. Also has some of its own issues, but at the end of the day, I think the consumer's still doing okay. The credit cards have largely echoed that point, and I think it's important to reiterate.
Steph, you mentioned energy, and I know you got to run. Diamondback.
Yeah.
Earnings are up to the bell.
Yeah. I mean, and it's done well this year. It's pulled back 10% from its highs, but it's still up 20% on the year. It's had a good year, and I think that you're going to continue to see them reducing costs. They cut rigs. They're cutting crew. We already know their realized losses from the derivatives and that sort of thing. We already know their realized pricing, so it's not going to be that surprising. But the big thing I want to talk about and listen to and ask questions about is Endeavor, because that has totally changed the company. They're now the number 3 player in Permian. That's where you want to be. This stock trades at 10 times forward estimates. It's down, I go higher.
Yes, thank you enough for coming in here, Steph. Share this host time with us. We'll let you run because I know you have to go.
IBM gets down to the 50-day. I'd be very interested.
Scott, we're not expecting a whole lot from Lucid. The expectation is for a sizable loss yet again. The real question, 3 things you really want to watch if you're a Lucid investor, and these are tough days to be a Lucid investor given where the stock is. What's going on with the cash burn and liquidity?
You know, it's tough, you know, going. I know a lot of people are thinking, oh, I need to be making money every day. Would you rather be on the sidelines or losing money every day? Okay. I'd rather be on the sidelines than losing every day. Can we bounce? Sure, but we need to see a base at a minimum, folks. And I don't see a base. All I see is 1 day, 2 days, 3 days down. I don't see a reason to do anything at the moment. So I'd be just sitting here and do nothing rather than watching paint dry and the markets move gradually lower, gradually lower. Once we get down here, if we do, we're going to start to see a base form. Okay.
exposed to weaker spending and lower interest rates. Robinhood is the biggest laggard of that group. It saw some outages overnight thanks to a trading partner. Schwab and Fidelity also saw some downtime today. They say all of those have now been resolved.
Okay, Rudy, thank you so much for that. Turn back to Bob Lazar. I mean, the great unknown here, I guess, is on a couple of fronts. Number one, what's the ultimate fallout from the unwind of the carry trade? Who may be hurt and where, and to what degree, if anybody, in fact, is, and whether the deleveraging is finished.
Right. We don't know the size of the in-carry trade. This is a problem. You know, people taking stabs at this. This is trillions of dollars. We don't know. One thing is for sure, that Nikkei down 12%, that is not a discussion about the GDP of the United States going from 2% to 1% and taking down global stock multiples. No, that might be worth 2%, 3%, 4% decline, not 12%. That is the yen carry trade unwinding, and that is a stark smack in the face about how big this is, and nobody's paid any attention to it. On the recession, if the assumption of the recession is wrong, earnings are not wildly overvalued. We're 15% growth in 2025. Maybe goes to 10%, but that's going to be fine overall. The S&P can handle 10% earnings growth. The important thing is the market could be a buy again potentially if we just settle this recession fear. And I don't think we're going to be able to do that anytime soon.
From last Wednesday, okay, the chair of the Fed set the table for rate cuts in September. He was dovish, undeniably so. The stock market liked it a lot. So here today on Monday, after a jobs report that was, I don't know, concerning to some, we decided we're not in a recession.
Yeah, that's exactly right. So that's where we are. We're on the other side. And we gave this out today. We were talking about multiples of 19 on the S&P on Friday.
All right, Dexcom fading a bit more.
They could say to 15, which is the lower end of a recessionary multiple. And, you know, go to 5% earnings growth, you could be at 3,800. You could gain out all sorts of numbers.
Let's see what SPHD looks like. SPHD. Okay, so that's pulling back. That'll give us a base as well. SPHD, dividend, high dividend, low volatility ETF. Looking for that to pull back. We got 4 minutes to go. 4 minutes to go.
Spoke about the difficulty in reading GDP to try and decide the current health of the economy.
I haven't cut my grass in like 10 days. I'm looking outside. The grass is so thick. And it's starting to rain, so I'm not going to have a chance to cut it again for the next couple of days. I'm going to get out there with a weed whacker. Okay, we got a couple of minutes to go. 3 minutes to go. 3 minutes to go.
There's an inherent volatility in equity pricing that gets exposed. I mean, it's all the time there, but it gets exposed in moments like this. So the part of the labor market, I think most economists will tell you that the unemployment rate, while lagging, is the single best all-encompassing number for the labor market and what's going on. I would put forth jobless claims, given its timely nature, but an unemployment rate that is moving up 0.2 in a given month and has been increasing for not all immigration reasons. There are people losing their jobs here. Should be more. This is the argument. Should be more and more reason to the Fed. And I think that's the message that a lot of people in the market hold. I don't think that's entirely accurate as of yet, but again, that's what the equity market does.
You wake up tomorrow morning and you are thinking about what more than anything else. You see the futures, who knows what they're going to look like, but the story you need to know most about first thing tomorrow morning.
This part of the earnings season is a lot of consumer-focused companies, and I want to hear what those guys have to say. If there's any weakness beyond the lower-income consumer, we know that already. Additional commentary on that front, not particularly helpful. But is there something going on here that the companies that are reported thus far haven't seen?
Do we need to hear Caterpillar number tomorrow? A nice cross-section of the industrial and consumer stocks. We'll get tomorrow.
The argument was made, you know, in certain places on this program today. The Fed, at minimum, needs to say something, that they're watching what's going on, that they'll provide any necessary liquidity should that be needed. Richard Fisher, the former Dallas Fed president, said on this program that Chair Powell should have the notes and something written in his back pocket, and may have to break it out.
I'll tell you what I'd like to hear. Are they surprised by the magnitude of the move in the Nikkei, for example? It's reflective of what's going on with the in-carry trade. I don't think I'll bet you they were surprised. I was shocked. I'll bet you they were shocked too. And that, to the extent that caught them off sides, maybe you're right.
Let me ask you a quick question. We've been doing this a long time. Do you think the Fed coming out today in 2024 and saying we'll provide liquidity carries the same weight that it did in 1987?
No.
Because well, why? I would argue because we already know that.
You already know.
Mm-hmm.
The Fed would step
Palantir. All right, folks. That's a wrap. Have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. It's Monday, the 5th of August, 4 o'clock, straight up. Anyway, the markets did fade a little bit. We managed to move back about 50% from the low back into the gap and then faded. We did make a higher low towards the close, so I have some TLT. I have some TLT and some TZA hedges, and that's about it. 89% cash, and just going to sit and wait. Going to sit and wait for the best opportunity. Have a great evening. Take care, and we'll see you in the morning. Ciao.